Hello. So students in the Zoom, audio and visual is clear? So very good morning everyone. So in the last session we started with the chapter mutual funds, wherein we completed the area called as NAV and expenses of mutual fund. So let us first complete off the concepts relating to mutual fund return, variety concepts in NAV, and dividend equalization concept in mutual funds. Once after that, let us also complete performance evaluation with the 3 different models, very important for exam: Sharpe ratio, Traynor ratio, and Jensen's alpha. So once we complete all those, then we will be going into the next area after the mutual funds, being the derivatives. So derivative segment, first we will start with options, and next we will be going into futures. So let us see the screen first. Point number 1, come to mutual funds chapter. Let us first see the concept on performance evaluation in mutual fund, frequently tested in exam. Area is performance evaluation. Yesterday's concepts NAV everyone understood clearly? Now in the today's session we are going to concentrate on performance evaluation. Means how can we literally take the performance of a mutual fund, how the mutual fund is working, whether good or bad, whether working well or not, whether the performance is on par with the industry or not. To compare like that, we are having 3 different kinds of models. Number 1 will be Sharpe ratio. Number 2, Traynor ratio. And number 3 will be Jensen's alpha. These are the 3 methods to know about the performance evaluation of a mutual fund, whether a mutual fund has performed well during the year or not. We can evaluate using 3 different kinds of ratios. One is a Sharpe ratio, second one is Traynor ratio, and third one is a Jensen's alpha. Okay, Sharpe ratio formula. And moreover, just before we write, in mutual fund evaluation, what we are going to do, let me first explain you. Mutual fund is a one security, a combination of security. In market, what will be there? One securities will be there, correct or not? In the market, all put together will be called as a Nifty or Sensex, correct or not? Simply we call it as a index fund. Which fund? Index fund. Index fund is a combination of all the good stocks in the index. Okay, they will be called as an index fund. We can also call it as a Nifty fund. People will call it different names. So mainly let me explain. Even whether it is Sharpe ratio, whether it is Traynor ratio, whether it is Jensen's alpha, comparison is very simple. We will compare volatility to the risk ratio, or simply to tell reward to volatility ratio, reward to or compensation to risk ratio. We will calculate for our mutual fund, we will calculate for the market Nifty. Who is doing better, we are going to compare. I repeat one more time. RM minus RF divided by sigma. This is called as reward to volatility ratio given by the market. Okay, RP minus RF divided by sigma. This is reward to volatility market given by my mutual fund portfolio. We will compare both of these versus who is giving better return will be selected, and we will evaluate whether the performance is on par with the market or not. We will see. Did you get my point or not? Say for example, market risk and sigma m. Market risk means sigma m. Sigma m is, say for example, 20. For the 20 risk take, listening everyone, for 20 risk taken, you are getting a reward. You are getting a reward. Reward means a premium. You are getting a reward of, say for example, 12. Okay, you are getting a reward of 12. So 12 divided by 20. Why you are seeing my face? Calculate. How much? 0.6. Okay, this is to 1. Means for every 1 unit of risk taken, market has given how much compensation? 0.6. Let us see our portfolio. Our portfolio risk is 17. Our portfolio risk is 17. Whose portfolio risk? Mutual fund portfolio. Risk is 17. Listening, it has given a RP minus RF of, say for example, 15.2. Tell me. 0.894 is to 1. So my mutual fund has given, for every 1 unit of risk taken, how much compensation was given? 0.894 compensation is given. Tell me, for 1 unit of risk taken, who is giving more compensation? Mutual fund or market? Our mutual fund has outperformed the market. Means it is a better performing than that of the market. This is the comment we are going to write. Understood or not, everyone? Next, second. Same concept, this is Sharpe ratio. Same, ditto, copy paste. Except that we will write beta in the denominator. What we will write in denominator? Beta. In the denominator we will write. Okay? Beta in the denominator you will write. This beta we will be calling as a beta coefficient, also called as a measure of systematic risk. Measure of systematic risk. That's called as a beta. Once you take beta instead of standard deviation, that become Traynor ratio. Which ratio? Traynor ratio. Sharpe ratio lo sigma, Traynor ratio lo beta. Remaining everything same to same. Listening? Last one, Jensen's alpha. Jensen's alpha. Jensen's alpha says that expected return, actual return difference. What return? Listen, how they will do. Expected return minus actual return of the market. Expected return minus actual return of the mutual fund. How much market is expecting from mutual fund? How much you have given? How much people are expecting from the market? How much market has given? Listening or not? So on that basis they will calculate Jensen's alpha. Jensen's alpha itself, we will do one study material question directly. Listening or not? One question is there in the study material also on Jensen's alpha. We will do that and we will close. So tell me, what is the target questions now? Performance evaluation. Okay? Who is good, who is bad is a question now. Shall we do? Let's start. See, in my textbook it is there. Question number 19. You can directly do there itself. No need of putting pen on paper. Take calculator. Study material, what is the page number? Study material 8. Yes. If they are in the study material, I will take from the study material directly. They did not give. Do one thing. Take question number 19 from this book. Okay. See the question. Directly, you need not even put pen on paper. Take calculator. F's return was 20%. Stock market return was 15%. Standard deviation of our portfolio 10%. While that of the market is 5%. Risk-free rate is 6%. What is the sharp measure of F's portfolio? This is a question that is being tested. First tell me, take calculator, tell me, our portfolio has given how much compensation for the risk taken. What is the risk of our portfolio? Standard deviation of our portfolio. At a denominator, how much should come? 10. What is the return that we have given? 20. What is the risk free? 20 minus 6, how much? 14 divided by how much? So how much is the answer? We gave 1.4 compensation for 1 unit of risk taken. Next, how the market has given, see now. Take calculator. How the market has given? 1 point? Yeah. Now tell me, our fund is outperforming the market, underperforming than the market? Underperforming. Market is giving how much compensation for 1 unit of risk taken? 1.8 times compensation was given for 1 time risk taken. But I am giving only 1.4 times. Take the question number 20. Answer the same question for the trainer ratio. Why you are looking and nothing is there? Tell me, in the denominator instead of the risk we will write what? Beta. Remaining everything is same. Tell me, our portfolio has earned a return of how much? 20. Okay, and risk free is how much? 6. 14 divided by beta is how much? 1.2. Tell me. 11.67. Okay. Next. Market ke beta will be 1. Market beta will be 1. Just you need to calculate 15 minus 6. How much? 9. Tell me, who has given a better compensation in terms of trainer ratio? Answer, mutual fund or market? Mutual fund has outperformed. Next. Take question number 21. So like this, if you do practice examination, there is no chance of doing mistakes. So I want you to answer Sharpe ratio and trainer ratio for both the questions. Start. Take calculator. Okay, tell me what is the answer for the Sharpe ratio? 0.6. Next. So in this, our mutual fund has underperformed or outperformed? Underperformed. Next, trainer ratio? 20.67. 167. Next. 22. So tell me, outperformed or underperformed? Outperformed. That's all. Over. Next. Take question number 22. This is also given in examination. 5 marks question. This is not comparison. This is ranking question. What question? Ranking. See there. You are required to compute the reward to volatility ratio. Just now I told you reward to volatility ratio. Compensation to risk ratio, reward to volatility ratio. I told or not? And rank those portfolios using Sharpe and trainer. Risk free 6. Just tell me one answer. Take calculator. Nothing more required. Sharpe ratio, trainer ratio. Tell the answers. One by one. Fatafat give the answer. Sharpe ratio. What is the formula for the Sharpe ratio? RP minus RF divided by sigma. 15 minus 6 by 7. 1.29. 18 minus 6 by 10. 5 minus 6 by 2. Sorry. 14 minus 6 by 5. 1 point? 12 minus 6 by 6. 16 minus 6 by 9. 1.11. Trainor. 15 minus 6 by 1.25. 7 point? Next. 18 minus 6 by 0.75. 14 minus 6 by 1.40. 5 point? 12 minus 6 by 0.98. Next. 16 minus 6 by 1.5. Now you tell me, I will write. Ranking as per Sharpe ratio. Okay. Ranking as per trainer ratio. You tell, I will write the rank. As per Sharpe ratio, who will be given the first rank? C. Simply, one second. Rank 1 will be given to C. Next. A rank 2. Next. B rank 3. E rank 4. Next. D rank 5. Okay. Next. Trainer ratio you give the ranking. B first rank. A second rank. E third rank. D is a fourth rank and fifth rank. Those who got first rank under Sharpe ratio has got last rank under the trainer ratio. Both are two different ratios. Which you believe most will give you the right result. Clear or not, everyone? This is question given in examination. This is not on comparison, this is on a ranking. So first thing, everyone got enough training on Sharpe and trainer ratio. So everyone, this is how the Sharpe and trainer ratio questions will come in exam. All our exam questions are 2 marks, 3 marks, 5 marks questions they are. Clear? Next. We completed those areas. Right? Next, let us come into the next very important area. Written in mutual fund. This let us do together. Return in mutual fund. How to calculate the return as a percentage in mutual fund? This is called as a holding period return. What return, sir? This is holding period return. This is not a per annum return. This is a holding period return formula. Okay? How to calculate? Mutual fund may give 3 types of inflows. Number 1 is a dividend. Number 2 is the capital gain. Number 3 is appreciation in NAV. Number 3 is appreciation in NAV. That's all. In shares, we write as D1 plus P1 minus P0 whole divided by P0 into 100. Instead of writing like this in mutual fund, we will write this way. I repeat and I ask you a question, first answer. We will give money to the mutual fund. What mutual fund will do? We will give money to the mutual fund. What mutual fund will do? Invest. Where it will invest? It will invest in various securities in the market. Correct or not? Those securities will give dividend to the mutual fund. Those securities will give dividend to the mutual fund. That dividend will be given back to the shareholders again. The unit holders. This is D1 we call. Next. Mutual fund will sometimes sell the securities. Mutual fund will sometimes sell the securities. Yesterday question, one big question we saw. It sold securities for 141. Again bought the securities for 130. Do you remember? Which was originally bought for 127. Capital gain of 2.36 lakhs. That capital gain will be distributed to the unit holders as a capital gain per unit. So tell me, mutual fund will give how many returns to its unit holders? Actually 2. Third one they will not give, it's only an appreciation. Okay, physically what they will give? Number 1, dividend. Number 2, capital gain. When I say dividend, wrong. Dividend per unit, capital gain per unit. NAV 1 per unit, NAV opening per unit divided by NAV opening per unit into 100. This will give you per month return, per annum return, or a holding period return. If you purchase today and sell after 12 days, this is 12 days return. If you purchase today and sell after 12 years, it is 12 years return. There is no per annum per month here. Whatever is your holding period, for that this formula will apply. They keep in mind here big questions like that is only the logic. Everyone understood to here. This is which formula? Holding period return formula in mutual funds. Shall we do the problems now? Take study material. Take question number 3. Directly you can do there itself. Okay. Mutual fund had a net assets value of 20 at the beginning of the month. Capital gain distribution 0.0375, 0.03 per share. Actually, this is not per share. This should be per unit, respectively during the month. And then ended the month end with NAV of 20.06. Calculate the monthly return. Because the holding period is for 1 year, 1 month. 1 month. Okay, na? Take calculator. D1. Take calculator. Yeah? D1. 0.0375 plus CG1. Add. Okay. Plus what is the NAV1? 20.06 minus 20. Whole divided by 20 into 100. 0.6375%. What is 0.6375%? What is 0.6375%? Okay, next question for you. Take question number 6. Question number 6. The following information is extracted from Steady Mutual Fund Scheme. Asset value at the beginning of the month. Asset value means NAV. Beginning of the month means opening or closing opening. Annualized return. Annualized return. And this is in which terms? Per annum terms. That is very, very important in this chapter. When you read the question, read it properly. Annualized means it is not holding period, it is per annum. Whatever the formula we use is a per annum formula, no holding period. So convert first into holding period return. Okay. Next, distributions made in the nature of income and capital gain per unit is 0.5 and 0.32. Calculate the month end NAV of the mutual fund scheme. Answer should be limited to 2 decimals. This is the question that is being asked. Shall we do it together? First, directly there itself you do. Tell me, first point number 1. What is NAV beginning? What is NAV beginning? Tell the formula once. Holding period return formula. Holding period return percentage equal to D1 plus CG1 plus NAV1 minus NAV0 whole divided by NAV0. Okay. Now answer my question. This is per annum return, HPR. But this is our holding period is 1 month divided by 12. 15 is for per annum means monthly how much? 1 point. Instead of writing 1.25, write it as 0.0125 because you are not multiplying with 100 here. Listening? On the other side, if you multiply with 100, okay, or else 100 will go to the other side. So directly write down 0.0125 equal to, what is the D1? CG1 plus NAV1 we don't know. NAV0 is how much? 65.78 whole divided by 65.78. Please calculate and tell N1 value. Again same answer, 65.78. Do you know what does it mean? Adi everyone will know. What might have happened here? NAV is same. Yes, correct. Whatever they have received, which hiked NAV, again they distributed. So what will happen? Whatever the hike is there, everything has been again given back to the unit holders, means what gain will be there? There is no hike in the market. Okay, sir, okay. Everyone understood the calculation clearly? Done. Very good. Next. After that, returns also completed. One very good question is there. Let us calculate return. So this one, do it as a homework. Please don't forget to do. I am really suggesting break time, sometime you do. Which question? Question number 12. It takes time in the class. Same question I will do now. Listening everyone. Okay. Please try that again. It can get repeated as it is. They can give for 8 marks again. Easy question only. Similar question I will do which will take lesser time. Shall we do it together? Take question number 11. Take question number 11. Mr. Sinha invested in 3 mutual fund schemes as per details below. Scheme X, Y, Z. Date of investment, amount of investment, NAV entry date, dividend received, NAV as at the end of 31/3/2009. You are required to calculate the effective yield on per annum basis in respect of each of the 3 schemes. First you tell me, whenever question come in mutual funds on return, first thing what you need to observe? Holding period. First thing what you need to observe? Holding period. Tell me, I will write here itself, what is a HP of scheme X? I purchased on 1/12/2008 and closing on 31/3/2009. How many months? Next, 1/1/2009 to 31/3/2009. 3 months. Next, 1/3/2009 to 31/3/2009. 1 month. So tell me, whenever you get one answer in mutual fund scheme X, you need to multiply it by 12/3. Next one will be 12/4. Next one should be multiplied by 12/3. Next one should be multiplied by 12 directly. Did you understand what I am saying? Please don't make me to repeat these small aspects. Shall we start? I want 2 answers from you. First answer that, directly we put the answer here. Tell me, what is D1? What is D1 here? First scheme number 1. Wrong. It should be on per unit basis. I told you already. 9,500 is the overall dividend. D1 means D per unit. This is a mistake you will do in exam. Repeat one more time. Tell me, what is my investment? At what price I invested? Calculate number of units. I will write here itself. Tell the unit number. I didn't understand. 619. Okay, I am writing here itself. Next, 1 lakh divided by 10. How many? 10,000. 50,000 divided by 10. Now understood? Now tell me. Everyone tell me now. Dividend is 9,500. Now you tell me what is the dividend per unit. 9,500 divided by 47,619. 0.1995. Next, 1,500 divided by 10,000. 0.15. Here it is 0. Now finally you tell the formula, take the calculator. What is the D1? 95 plus CG1 0 plus NAV1 10.4 minus 10.5 whole divided by 10.5 into 100 into 12/4. By this time you should have told me the answer. Tell me how much? 2.84%. 2.84 is per annum holding period. Holding period. Already you converted and said me. Correct or not? Next, take the second one. At least this commonly everyone answer. Start. What is the D1? Type in the calculator. 0.15 plus NAV1 10.1 minus NAV0 10 whole divided by 10 into 100 into 12/3. How much percent? Very good. Next, take the third question. Take the third question. Calculate and tell. 0 plus 9.8 minus 10 whole divided by 10 into 100 into 12 minus 20. First tell me, everyone understood the answer clearly? Everyone had done the answer? This much fast you can practice mutual fund chapter. You need not spend so much time writing the answers. Everyone understood? If it is worth writing, we will only write. Next. So this question please don't miss. I am telling again. Which question? Don't leave. Okay, practice that question. Same question with a small change. Next. These two are similar. Take question number 15. So, before that, taking question number 15, I will ask you one question. Whether you can solve or not, you tell me. 16th question. Read fastly. Somewhere you might have read this question. But my question is much bigger than this, much complicated than. That's why I told you, if you do that, any question on NAV nonsense you can do. This is easy, right? Very easy this is. So therefore we have done already. Remaining all are similar questions are there. 19th question you see, can you do or not? Fast. $10 lakh units at 10 rupees each they raised, 1 crore came, 98 lakh invested. What does it mean? 2 lakh cash balance is there. Okay. Next, dividend is received, add, after that interests are paid. On this, they paid interest, outflow. Are you understanding or not? Operating expenses are paid, deduct, that's all, NAV will be calculated. Can you do that or not? This is much more easy. Just we need to calculate the NAV by taking the market values into consideration. So, everything is easy. The only thing we need to do is, sir, yesterday we have done this question if you remember. Correct? Now our target is 4 questions are there, yeah. Golden questions in this chapter. 1, mutual fund schemes. You know na, dividend reinvestment plan, bonus plan, growth plan. Next one is a constant ratio plan. Okay. Next one is, those are 2 questions. Next one, there is one question called as, there is one question called as a dividend equalization. What concept? Equalization. That concept we need to do. Once the dividend equalization is done, only on dividend reinvestment model some questions came in exam. We should also target on that. That's what we are going to see. First tell me, there are 4 mutual fund plans. This is a topic. 1 hour we have to complete all the dividend plans and complete this particular chapter, mutual funds. Shall we continue? Tell me. Point number 1. How many plans are there? 4. Dividend reinvestment plan, bonus plan, growth plan, constant ratio plan. A constant ratio plan, we call it portfolio rebalancing. What rebalancing? Portfolio rebalancing technique. A constant ratio plan ki another name. Okay. Next, dividend reinvestment plan, the name lone very clear. Whenever dividend comes, it will be reinvested back. Therefore, number of units will increase instead of dividend. Instead of dividend, what will happen? Number of units will increase. Do you know how it look like? It is the same like bonus shares. Same like bonus shares. Bonus shares can be issued instead of declaring the dividend or not? Answers are everyone. Whenever company wanted to declare the dividend, it need not always declare the dividend. It has two options. Either go for dividend or you can also go for what? Bonus issue. Like that, mutual funds also same. You need not always declare the dividend. Sometimes you can also give the bonus units to them. Instead of calling it as bonus units, we call it as a dividend reinvestment. Shall we start doing it? One last question. Dividend reinvestment model, dividend will be given or will not be given? Compensating to not giving the dividend, what they will give? Units will be given to the unit holders. That's why the name of the concept is dividend reinvestment model. Shall we begin together? Let's start. Come to question number 15. If you do this one question, similar questions you can solve easily. come to 15. Okay, let's see. A mutual fund having 300 units has shown its NAV as rupees 8.75 and 9.45 at the beginning and at the end of the year. Year means what? Our holding period return is for per annum. Next, mutual fund has given two options. Option 1, pay 0.75 per unit as dividend, pay 0.6 per unit as a capital gain. That's the first option. For this, you calculate and tell me the answer. Fast, 30 seconds the answer should come. $23.43. Okay, na? 23.43 is the return under dividend reinvestment model or normal? Normal payment, this is the answer. Okay, let us go on dividend reinvestment. Listen carefully, I will tell you one important point. Please see the dividend reinvestment. Average NAV of 8.65 they reinvested. Sorry, okay. Tell me, in case of dividend reinvestment model, okay, dividend and capital gain will be given or will not be given? Loudly. But number of units will increase. Number of units will increase. Do you know what does it mean? See that. NAV 1 is how much? It started with 300 units. NAV 1, 9.45 should not be multiplied with 300. It should be multiplied with the number of units after the investment. Okay, na? Take calculator. 0.75 plus 0.6. 1.35 into how many units? Those are reinvested at what rate back? Divided by 8.65. Do you understand what I said? 0.75 plus 0.6, 1.35 into 300. How much? How much is that? 405. So totally that will be 405 divided by 300. Sorry, into 300. I'm very sorry. Into 300. 405 you got. Divided by, at what rate they are reinvesting back? 8.6. You will get the number of units or not? Tell that units. 46 point? Now tell me. Opening, how many units are you opened? Closing, how many units are you are closing? Not 46. 346.82. That means 9.45 should be multiplied by 346.82. 8.75 should be multiplied by 300. Will you do that or not? Start. 300 into 8.75. 9.45 into 346.82. Minus both of them divided by 300 into 8.75. First tell me 9.45 into 346.82 value. 27. 1 second. 3277 point minus 300 into 8.75. 26 divided by 2625 into 100. 86. Now tell me, how much return normal scheme has given? 23%, something like that. Okay, but the dividend reinvestment has given almost nearing 25% return was given. Which is advantageous? General scheme or a dividend reinvestment scheme? Very good. Take question number 14. Mark it very important. 8 varies. 8 times it was asked. Okay, read. This we will spend a little time for understanding. Important question. Start. Mr. X on 1/7/2012 during the initial public offer of a mutual fund invested 1 lakh at a face value of 10. On 31/3/2013, mutual fund declared a dividend of 10% when Mr. X calculated that his holding period return was how much? 115%. On 31/3/2014, mutual fund again declared a dividend of 20%. On 31/3/2015, Mr. X has redeemed all his investment. which had accumulated to 11,296.11 units when his holding period return was 202.17%. Calculate the NAVs on 31/3/2013, 14, 15. 8 marks. Read the question first. This we will do on the paper, because we can't just calculate on and tell the numbers, very difficult. Read the question properly. Shall we continue? Okay. First, sir, listen. I don't know what methodology you are following till now. If you are having any methodology which you are following, very good. I don't involve in that. But if you are confused with this concept, I will give you one schedule. Put the numbers in that, answers automatically will come. Okay? Easy only. You might follow the same schedule, but the way in which I explain might be easy for you. So please listen carefully. First point number 1. Which model we are doing? Dividend reinvestment model. Dividend reinvestment model. Okay. Always dividend reinvestment model will have the following schedule. Write down there. Date. Opening units. Dividend. First date. Opening units. Dividend. NAV. Okay, NAV. NAV is reinvestment NAV. If separately given, we need to take that, because the dividends will be reinvested at that rate. Listening? Nothing is said, na closing NAV will become reinvestment NAV. In the last question, if you see, closing NAV is different, reinvestment NAV is different. Nothing is said, closing NAV will become reinvestment NAV. In this question, closing a reinvestment. Listening? So, date, opening units, dividend. Next one is what? NAV reinvestment. Number of units reinvested. Number of units reinvested. Closing units. Closing units. This schedule. One by one, let us do it. 10 minutes we have to complete this particular answer, such that I will start with constant ratio plan. Which plan? Constant ratio plan. Very big answer is there. I will tell the logic of that concept and then we will do. Before going into that, first everyone see the question, don't waste time. When we started our investment first? Start writing. 1/7/2012. Write down. With how many units we began? 10,000. Dividend anything given on 1/7? No. What NAV is prevailing on that day? 10. How many number of units? Sorry, NAV reinvestment not there. Closing number of units is 10,000. Write down. Over. Up to here, understood the concept clearly? Start. Second one. 1/7 over. Again, come to the date. What is the next important date? 31/3/2013. Mutual fund declared what? 10% dividend. Write down. 31/3/2013. Opening, how many units have we have opened? 10,000. Sir, calculate this very, very clearly. 10,000 units into 10 per unit, because dividend will be paid on market value or par value. So 10 rupee into how much percent? 10%. Tell me, how much dividend is reinvested? Rupees? How much here? Rupees? 10,000. Okay. Now we need to calculate the NAV on that date. You have to calculate NAV on that date. See there, he has given one hint. Mr. X calculated holding period return and it was how much? 115. I ask you one question, tell me. When I invested? 1/7/2012. Okay. Next, when I calculated my holding period return? 31/3. On that date, my holding period return was how much? Okay. Tell me, what is the gap between these three? How many months? 9 months. He has given for per annum, he has given already for 9 months. Already that was given for 9 months. Why? See here, clearly he mentioned that it is the holding period return. Okay? See here, one second. I will show you a similar question. What they are changing, I will show you. See here. Annualized yield they have given. We have to calculate the holding period. In this question, the change is already they have given holding period. Do you understand difference between these two questions? In this question, what was given? Answer? Tell me. When I invested? When I am calculating? Gap is how many months? If you give 153.33 like in the previous question, what you have to do? 153.33 into 9/12 you have to calculate. That comes to how much? 115. They have given directly here. That's the only change in this question. Are you listening? Tell me. Let us calculate. So tell me, holding period return formula? Holding period return formula? Holding period return equal to D1 plus CG. Anyway, CG1 not there. NAV1 minus NAV0. Answer. Do we know holding period return? Do we know the holding period return? 1 minute, this is not working. Do we know the holding period return? How much? 1.15. We know the D1? Yes, 10 rupees. They reply, do we know the NAV1? No. Do we know NAV0? Yes. How much it is? 10. Can we calculate the missing figure NAV1 or not? That's what we are going to calculate now. Shall we? Let's start. Write down. Below some gap you give, 6-7 lines gap, and write down calculation of NAV as on 31/3/2013. 1.15. 1.15 can be written as 115%. Directly they have given 115%. We can write it as 1.15 equal to, tell me, what is a D1? 10. CG1 0. NAV1 we don't know. NAV0 10 divided by 10. 10 into 1.15 how much? 11.5 equal to 10 plus N1 minus 10. Dividend how much? 1 rupee. Sorry. 1. 1. So N1 equal to 21.5 minus 1. How much it will be? 20.5. Dividend is given at 10% rate. Okay. Par value is not 100, 10 rupees. So they calculated up to here. Okay. Put there. What is the NAV? 20.5. Tell the units now. 10,000 divided by 20.5. 487.8. 8. Already 10,000 units are there. Now 487.8 units are added. Totally my units will become 10,487.80 units. Okay. Next. Very clearly you listen this. On 31/3/2014, mutual fund again declared a dividend of how much percent? Write down. What is the date? 31/3/2014. How many units are there with us? 10,487.80. How much percent dividend is declared? Calculate. How to tell? 10,487.80 into 10 into 20% value. 20,975. 60. They have given the return, not given return, not given the return. Very, very important. Please fill the information first. On 31/3/2005, Mr. X redeemed all his investments which are accumulated to 11,960, 296.11. Write down there. Okay. What date? 31/3/2015. At the last, how many units he is having at the end? 11,296.11 units are there. Very important. Please see here. Please see here. Up to here, everyone understood the schedule clearly? Everyone? Tell me. How many units are there with me on 31/3/2014? 10,487.8 units are there. On which date? 31/3/2014. I ask you one question. What is the last dividend date? What is the last dividend date? 31/3/2014. Because 31/3/2015 they did not pay any kind of dividend. What is the last dividend date? 31/3/2014 is the last date for paying the dividend. Correct or not? What is the meaning behind this? This is the last dividend. Here the dividend will be 0. Dividend will be? Tell me. Then number of units reinvested will be 0. Therefore, this closing units and this closing units will be same. Understood the point or not? I repeat. 11,296 is the units at the end of. Units at the end of. Now tell me. In this plan, dividend reinvestment plan, units will increase if and only if. When dividend is not declared this year, units at the closing and opening will be same or not? Opening same means that is a closing for this year or not? Balancing figure will be the number of units invested. Shall we do it together? Start. 11,296 is the closing units. Opening also will be same. 11,296.11 because dividend is declared and not declared and not declared. Okay, next. Since closing is given, the same will become the opening. Tell me how much? 11,000. Yes. 11,296.11. Tell me, 10,487.8 units became 11,296 means how many units might have been reinvested? 8 not? 3 Okay. So tell me, 20,975.6 divided by 808.31, you will get the NAV value. Loudly you tell here 20. 92. 952 95. 25.95. What is the question he is asking? NAV has a 31/3/2013. Had we calculated that or not? Yes. Next one he is asking NAV has a 31/3/2014. Had we calculated that or not? Yes. Next one he is asking NAV has a 31/3/2015. Had we calculated? No. See here. Up to here everyone understood the concept clearly? Everyone in the class? Yes, last. Step number 3 we are doing. This number you have to fill. Tell me. Start. When we invested, sir, I can't wait for you till you answer. I have to start another chapter. 1/7/2012. Till when we held it? Tell me the holding period. Not like years, months you should tell. Months. 7 means in this 6, 12, 24 plus 3 months. 33 months. How many months? 33 months. What is 33 months? Holding period. Holding period is how much? Okay. See here now. 1 second. See the screen. On the last date, ante 1/7/2012 to 31/3/2015, When he calculated on the date of redemption of all the units, he found that his holding period return was how much? 202.17. This is holding period return. This is per annum return. Holding period return means how many months ki? 33 months. This is the return. Listening? Can we use a format directly or we need to convert now? Directly we can use, because holding period return he has given. Do you know the difference in the question? See here. He has given annualized return. What return? Annualized return. Take calculator. 73.52 into 33 by 12. That was they have given all directly there. Understood? Let's do. So 202.12% can also be written as 2.012. Correct? Okay. Now answer. At the end, if you see, I repeat, at the end, if you see, I opened with how many units? I opened with how many units? At what price each? I closed with how many units? At what rate? We don't know. Whole divided by 1 lakh. Dividend will not be there. So 2.01, 2.0212. 17, sorry. 2.0217 into 1 lakh. 2.0217 into 1 lakh. Tell me how much? 2 lakh equal to 11,296.11 N1 minus 1 lakh. 3,02,170 equal to 11,296.11 N1. N1 equal to value 26.75. N1 equal to, write down here, 26.75. When you see in a overall period, I did not receive any dividend. Listening? Overall, for 3 years, if you see, I did not receive any dividend. I received, but I reinvested back into the units. So tell me, what is the answer? 26.75. So this is the answer. So let me check the answer once from the study material also. Tell me the 3 answers. Tell me the 3 answers. 20.5. Next. See how they presented the answer. Who will get interest to do? Do you understand? And if you do like that, who will get interest to do first? First irritation will come after seeing that. Directly if you answer, who will understand what you are trying to tell? Like that only it should be. Then only faculty survive. So, point number 1, everyone understood up to here clearly, yeah? So, the main point is, see here, we have to, whenever dividend reinvestment model comes in exam, first thing that should strike in your mind, dividend will not be there at the end of your period if you see. Are you understanding or not? There will be only opening units, closing units multiplied by the respective NAVs. Understood? That's it. We are done with this also. Let us directly go into the next area called as dividend equalization. Study material also question is there. 21 question. Mark it important. It can get repeated in the coming November exam. I am expecting this question to come. Dividend equalization, I am expecting the question to come. Do you know this question how to do? Not remembering the answers. Because multiple times if you do, you will remember the formats also sometimes. I am not talking about that. How many of you know what is this dividend equalization concept, logic? If you know, you will do directly, no need of any guidance. Fatafat you will only do. Over 5 minutes la khel khatam duknam band. Okay. Read the question first. On 1st April, an open-ended scheme of mutual fund had 300 lakh units outstanding with a NAV of 18.75. At the end of April, it issued 6 lakh units at a opening NAV plus 2% load, adjusted for dividend equalization. At the end of May, 3 lakh units were repurchased at a opening NAV minus 2% exit load, adjusted for dividend equalization. At the end of June, 70% of its available income was distributed. In respect of April-June quarter, following additional information is available. Portfolio value appreciation income of April, May, June. You are required to calculate income available for distribution, issue price at the end of April, reissue price at the end of May, NAV as at the 30th June. Fantastic question. Question came 2017 or 18, if I am not wrong. 17-18 year, 8 marks question. After that, they didn't ask again. Study mental it is there means there is every chance it can get repeated again. Read it. Please read the question first. 2 minutes spend on that. Read the question. Okay, first point. First let me explain what is the logic of dividend equalization concept. See here, what is the problem? It's only just a psychological dispute of unit holders. To avoid that, this concept was brought. How psychological dispute, why concept will come? You see, why it will come, you will only tell. See here. Mutual fund, if you listen, I will tell. Mutual fund started today. 100 people joined hands. Given 10 lakh rupees. Fund started. Super success. After a period of around 2 months, good appreciation came in the portfolio. And a nice team has formed, analyzed the market. Good blue stocks they invested. And blue chip stocks, bank nifty stocks, rightly identified stocks they invested their money. Super success, 10 lakh became 12 lakh. 12 lakh, 2 lakhs is a dividend also they received on the stocks. Let us understand that way. More cinematic I know. 10 lakh, 2 lakh, no fool will pay dividend. But example, 2 lakh extra also they received as a cash. Listening? Okay, what happened? Let me explain. How many months? 2 months. 1 day before 2 months. 1 day before 2 months, Mr. A issued with 50 units. He also became a unit holder. With how many units? Loudly, sir, everyone. 50 units he also invested. Okay, 1 day before the dividend. Okay. So 50 units he issued, he also purchased. So 100 units has become how many units? 150 units. He said that give dividend for my 50 units also. If you are in that 100, what you will say? Danana Bhujji, I will give you dividend. That take, what you will tell? If you are in that, what you will do? You will give a? Why? Why you will not give? Why that much sadism? You can give na? Why you will not give? Do you know what is the logic behind? You also know this logic. What is the logic? Ade Muttal, you are not there for the last 2 months. We struggled everything. We did it. Risk was taken by our 50 people. That income should belong to our 50. Just 1 day before, how can you come and take our dividend? This is our problem. Correcta? Ade problem. From that problem, dividend equalization concept came into mutual funds. Do you know what this particular SEBI, this concept was brought by SEBI. This was not FM concept actually. Brought by SEBI as a regulation into LODR guidelines, ICDR guidelines. After that they made it as a problem. Institute always have creativity together. Anything is there in Lana, they will coin one question on that. How it will be if it is given like this. And they will think only once, that way same question will be repeated. After that they don't repeat again and again. Sir, idea is very clear. Tell me, now I will show you the question. See here now. 1st April, sir, first thing you know the meaning of open-ended and close-ended? If you know, I will continue. Or else I tell that you don't know, I will tell the concept of open-ended. No, na? No, na? NO, no, na? KNO, KNOW, no, na? NO, no. Okay, very good. Sir, listen. What is this meaning of open-ended, close-ended? I will give you an example. For example, you purchase shares of a company. You wanted to leave. What you should do? Sell. Sell to whom company? To in the market unit. That is close-ended scheme. Open-ended, mutual fund company will take back your shares. It's like a buyback. Listening? Number of units will change every day in a open-ended scheme. In a open-ended scheme, what will change? Number of units will change every day. Every day number of units will change. Because every day unit holders will change. Listening or not? So, open-ended scheme, there is no concept of fixed amount of units. Today 6 lakh. Next day 6 lakh 38,052. Yesterday we have done one problem or not. One day 38,000 units have changed. So, number of units changes constantly in a open-ended. Then why they call open-ended, sir? Do you know why they call open-ended? Mutual fund house doors are opened on both the sides. Come in and go out from the same. Close-ended are not like that. Like a company, you come in, but you can't go out through the company. You can go out only through the exchange. That's why close-ended schemes are turned into exchange-traded funds. Are you understanding or not? A close-ended in 1997, 1998, close-ended schemes are very popular throughout the world. At the time, what government has done? Which government? Not our government. United States, the Federal Securities Commission has passed a rule saying that close-ended schemes should be promoted more. Listening or not? Therefore, they started a concept in 1998 with the concept called as exchange-traded funds, which came to India eventually in the year 2008. So, 2008, India also has adopted exchange-traded fund. Now, today, everything is very, very popular in India. Exchange-traded funds are in raise. They're going very much high. Simply, the logic is very simple. Close-ended funds, you have to sell the units not to the fund house, you have to sell to the answer. Stock exchange, you have to trade with them. Okay, next. Open-ended means fund house only will buy the units from you. Listening or not? High liquidity, fast liquidity will be there in close-ended funds. Some level of lesser liquidity, because if you go to mutual fund today and tell open-ended, take my units and give my money back, means they will take a time. Just like that, they don't give you money back. Understood the point or not? It's not a bank, savings bank, like ATM, like money withdrawal. It's not that kind. Huge money will be involved in mutual funds. Listening on, and moreover, do you know one thing? Mutual funds has to maintain SEBI guidelines, liquidity ratio, everything should be maintained by them. Why? Mutual funds are coming into the category of financial intermediaries. Coming into the category of financial intermediaries. RBI governance is also there on mutual funds. Sorry, forget about all this. Logic very simple. Close-ended, you can't go out with the company. Open-ended, you can go out through the company. Listening, come through company, go out of company. It is which one? Open-ended. Next, come into the company, but sell outside. Our problems are dependent on open-ended. Syllabus law, all questions are open-ended questions. CFL, close-ended questions will be there. But the institute is not showing any interest on asking questions on close-ended, because anyway market-related questions are there in other chapters. Okay? See here. Point number 1. This particular open-ended scheme opened with how many lakh units? Everyone? 300 lakh units. Okay. NAV? Take calculators. I will ask some workings to be done just to do that. You need to multiply as of now. Listen. At the end of April, it issued how many lakh units? Huh? Now I will ask a question. Okay. First tell me. Opening with how much? 300 lakh. NAV? Now I will ask a question. How much income generated in the month of April? Loudly. 22.95. This is the income at the end of which month? Now I will ask one question, common sense, just to sheer common sense. End of April ki how many units are issued? Hey, see here, how many units are issued? Will you give that 22.95 lakhs plus share to that 6 lakh units or not? Why? Because they are not throughout the month. Correct or not, everyone? So now tell me, 22.95 divided by 300 lakh. 22.95 lakh divided by 300 lakh. How much? 0.0765. Very good. Answer my question now. 0.0765 is what? Be here, sir. 0.0765 is what? Dividend per unit. Income means dividend. Dividend per unit. Who is the owner of the 0.0765? 300 or 306? Everyone? 306. That's why when these people are coming inside, you bring that 0.0765 along with the NAV. Along with the? Start again. I am 6 lakh person. You all are 300 lakh person. How much wealth is generated for the month? Divided by 300 units became 0.65. Calculation is actually as per the existing units. 0.0765, 0.0675 or 765. 765. 0.0765 per unit is there. Correct? Now this should be given only to 300. Common sense. 6 lakh units should get or should not get or should not get. But when they will get, see, I am a 6 lakh units person. All 6 lakhs are given to me. Let's understand. Here also they didn't tell to whom they have given. They just said 6 lakh units are issued. 6 lakh naake. Okay? Listen. How many units you have given to me? 6 lakh. When I take 6 lakh, I should pay some NAV or not? Take the calculator. 18.75 plus load is there. Somewhere they have given load. Where it has given? See here. 2% load plus 2%. 19 point. I will bring that plus 0.0765 along with me. Add 0.0765. 19 point. That's called as issue price. Are you understanding or not? Now tell me, how much money is there in my pocket now? 19.2015 I give to the issue house. Okay, na? In this they will separate now. 18.75 for NAV, some amount for exit load, and 0.0765 for dividend. Are you understanding or not? Including the dividend accumulations I will take. Now tell me, how much I have given for a dividend? That again they will give me back. Therefore, nothing is paid to me extra. That's how the dividend calculation concept came. So, understood or not, everyone? Through calculator, you have done the answer. That doesn't require anything to do on paper. Very easy concept. Yeah. Unnecessarily, we are making the chapters heroes. The scene illa. First point. Point number 1. Understood the issue concept clearly? Now, I will ask you one thing. Through calculators, you can do. No need to even put pen on paper. Easy question. Bacha question. Tell me now. April month, 300 units we opened. Closing it became 306. Correct? Closing it has become 306. You calculated some amount and you said. Okay? Now you tell me, how much is the income? How much is the income? 22.95. We shared. Correct or not? See here. Don't write anything. I will show you the answer directly. Through numbers now you can understand much easily. Yes, this is the one. See the full screen? Tell me now. income available for you can see that question, same question, my book question number I change. Tell me first, how much income came in the month of April? 22 point shared among how many units? How much is the income per unit? This will be belonging to 300 or 306 306, but you have to bring that 0.076 and take that 0.075 along with you again. Understood the point or not? So now tell me, how many new units are issued? They have given there 6 lakh units they have issued, correct or not? Okay, now tell me, this 6 lakh people should come with empty hand or they should bring the dividend? So therefore this much they have brought. How much is my income? 22.95. Plus you brought some amount, that amount I will again give you back. And technically is there any fall for the existing unit holders? No. That's the concept. We will equalize the dividend for everyone now. Listening or not everyone? Tell me, how much is the total income? See the question, see the question, see the question. May month, what is the income? Again that will be added. Now this 23 already accumulated income is there, which is not yet paid as a dividend, plus another income is added to that. Accumulated earnings started. Now tell me, who is the owner of this 57.834? 300 or 306? 306. 57.834 divided by 306 equal to how much? 0.189. 0.189. See the question. I redeemed some units also. You see there. How much? 3 lakh units I redeemed. Now you answer my question. 3 lakh units I will redeem at 0.1890. Correct or not? I need to pay this particular amount. Okay. I will ask you one question. Tell me. In this 57.834, dividend is already there or not? Everyone in the class. Therefore, including dividend, we will take our share 0.567 amount we have to redeem and we need to go. This is the total at the month of May. Income for the month of June is how much? 45.45 they have given in the question. No redemption, no issue. So total income available will be 102.717. Shared among how many units? 303. Total unit will be 0.3390. This is the first question they asked. What is the bit number 1? Okay, see this question, see this answer now. If you understand, I will go to the next one, shall we? So first tell me dividend declaration concept per se, everyone understood clearly, yeah? Everyone? Tell me, whenever we are coming in, we should come with NAV or NAV with dividend. When you are going out also, don't just take NAV. NAV with dividend inclusive, you take and go. Listening or not everyone? Okay, this is the point. How much income is available? 1 or 2. Now tell me, I will ask you one question, will you answer? Tell me, what is the exit price? Redemption is there, na? Redemption, yeah. Redemption time, at what rate I am redeeming? 0.89. Okay, see here. First, issue price, you already calculated 19.2015, correct? Redemption, see, 18.75. I will reduce the exit load and further I will give you the dividend now. Okay, how much you will get? 18.564. Lastly, NAV calculation is easy. Everyone understood the dividend declaration concept. Concept per se, everyone understood clearly, yeah? If you have any doubt, you can ask. 1 minute time I will give. If you have anything to repeat, if you want me to repeat one more time, any particular area I will repeat. If you are comfortable, I will go into the next one. Understood the concept now? Everyone understood the concept? Yes, sir. Understood? Done. Shall we go to the next one? Last one, constant ratio plan. Please come there. Popular question. Students also remember her name. Okay. See there. So the question, Miss Sunidhi is working with an MNC at Mumbai. She is well versed with the portfolio management techniques and wants to test one of the portfolio techniques on an equity fund. She has constructed and compared the gains and losses from the technique with that of those from the passive buy and hold strategy. The fund consisted of equities only, and the ending NAVs of the fund, fund he constructed. Oh, Sunidhi ante he Miss means he, she. Here he said he, contradicting. She constructed for the last 10 months are given below. Bad of ICAI. Month ending, December, January, February, March, April, up to September they have given. Assume Sunidhi had invested a notional amount of 2 lakhs equally in equity fund and conservative portfolio bonds in the beginning of December 2008, and the portfolio was being rebalanced each time the NAV of the fund increased or decreased by 15%. You are required to determine the value of portfolio for each level of NAV following the constant ratio plan. Read the question first. So that attendance sheet signature, you can do it later, please. If they give it to you, give it to them directly. I am present, you tell orally. You will only get disturbed and suddenly during the class. So read the question first. Okay, see here. Anyone knows about the constant ratio plan? Okay, next. So first let us understand how this constant ratio plan numerically will work. After that we will see the problem directly. Very easy, nothing great. Seriously I am telling, I am not joking. This will take hardly 5-10 minutes only once you understand what it wanted to tell. Okay. So listen, how this constant ratio plan actually works in real life scenario. Constant ratio plan says that whenever you are investing in a particular securities portfolio, for example, you are investing in the equity shares of a company. Okay, always people will have the greed for money. Greed for money means when the prices are rising, we always wanted to buy more number of shares such that it will further rise and we can sell. Okay, when the prices are falling, fear will start automatically. Market becomes more bearish in content. Automatically people will start falling and putting their money and selling the shares there. So both of them are only for the greed for money. Simply to tell, when the prices are hiking, we always have an intention to buy more number of shares at a rising market because we can get more profit in the future. Listening, but that is not guaranteed. It is unguaranteed. Understood? So what they say is, when a windfall gain comes to you, I repeat, when a windfall gain is coming to you, don't think that further will be another big windfall gain. First get that windfall gain into realized amount. When you are getting some very good gain, first take that. Once you take it, you put it in a secure place. And then you do all kinds of, any stunts with regard to the money. Simply to tell, this model says that whenever you are getting a windfall gain, all of a sudden some gain is coming, you get the money first. Don't think that in future there will be much more gain, I can enjoy that. When you are getting a gain, take it. Money will come. Put that in the debentures such that two things will happen. First you realize your gain. Second one, you put it in a secure place. Are you understanding the point or not? These two things are the model and the modus operandi of this particular concept called as constant ratio plan. I repeat, constant ratio plan will always make the person non-greedy. That greed for money will not be there in constant ratio plan. You may not make a bumper profit, but you will make a decent profits. Are you understanding or not? How we will do? I will show you an example. With that example, you can understand much more clearly. Put some effort in understanding this example only. Nothing great, easy concept only. Just feel comfortable in understanding the concept. See here. What is the concept? Constant ratio plan or portfolio rebalancing model. Okay. So this is all theory, no need. First see here. I will ask you question one by one, please answer. First, how much amount I have? See the screen and just tell me the answers. What give the answer? Tell me. How much money I have? 1 lakh. I invested in 50,000 in the bonds and 50,000 in the equity. Everyone, 50,000 in the bonds and 50,000 in the equity. What is my ratio? That ratio I wanted to continue forever. Means I never wanted to deviate. But that is not in my hand. Tell me, in what and what I invested? Bonds and? Now you tell me, equity share prices will be constant or changing? Then how can I maintain my constant ratio? You must maintain by rebalancing them. That's why what is the name? Portfolio rebalancing technique. Okay? Repetition one last time. How much is my investment amount? I invested in what proportion of debt and equity? 50:50. Means tell me, 50% of my 1 lakh will be coming to bonds. 50% of my 1 lakh will go into bonds. Will have a constant pricing. 1 or 2 rupees only change will be there. But who will change every day? According to the change. Whenever changes happen in the equity, rebalance your portfolio and make it 50:50 again. Make it? See here. I will do one question. After that, constant ratio plan. Why you will not do, I will see. In class, you will only do today. First tell me. Question number 1. How much is my amount available? Fastly you tell. I will do it and I will complete. 1 lakh. I am investing in what and what? Sir, first I will write equity and bonds. How much I given in equity? How much in bond? What is my ratio? Up to here, everyone understood clearly? This is day 1. This is day 1. Price will be same or will change? Will change or will not change? Will change. Now listen. Day 1 after, equity became 60,000. Debt is constant. Debt is constant. So tell me, how much is my revised portfolio value? 1,10,000. Now you tell me, I will listen. For 1,10,000, 60,000 and 50,000 is 50:50, yeah? No. So ratio has been unbalanced. Now we have to rebalance. Okay? We wanted to bring it to what ratio now? 50:50. Tell me, 1,10,000 50%. 55,000. 1,10,000 50%. Okay. Now you use your common sense only. Nothing more. 60,000 will become 55,000 if I sell the shares or buy the shares. That's all. Sell the shares worth how much? 5,000. Listening? From where you got that money? Listening? Sell the shares worth 5,000. You will get money. What you will do with that? Buy bonds worth 5,000. First you made a gain and you invested in the bond. Answer is completed. Again it became 50:50. And they over. Illa. Purinjida? Everyone? Perfect? Second day. Day 2 you will tell. Tell me what is my day 2 situation beginning? 55,000. 55,000. Totally how much? How much is the ratio we maintain? 50:50. One day after, this has fall to 42,000. Tell me now. This fall to 42,000. Then how much it will become totally? 42,000 plus 55,000. 90? Now you tell me. 97,000 is 97,000 half is 42,000 and 55,000. Answer, sir. So it is not maintained. Now we need to make it how much? 50:50. Values, please. 48? 48,500. 42 will become 48,500 when? Buy or sell? Buy. Tell me how much? 500 buy. Here 6,500 sell. Now you answer my question. 6,500 buy, 6,500 sell. First to sell the bonds, buy the equity. Logic is very simple. See here. Logic is very simple. You are selling when the markets are rising. You are buying when the markets are falling. Are you understanding or not, everyone? 55,000 became how much? And markets are rising up, falling up. Falling markets lo you will buy. Rising market lo you will sell. Pakka gain you will make. Are you understanding? I may not guarantee bumper gain, but I will guarantee a decent gain. That's possible only in case of a constant ratio plan. Are you understanding the point or not? I don't know whether Sunidhi has really done or not. Really, I only tested. It works very well. Are you understanding or not? Putting in bonds and shares equivalent, but every single day I won't do. On every 6 months basis, I used to change and I used to put the amount. Never ever I incurred any kind of loss, and it is a proven and tested model. That's why it became one of the most popular models in mutual funds. Clear or not, everyone? So now tell me, understood the concept clearly, everyone? Yes, sir. This much only, sir? Yes. But there are two important points you need to keep in mind. I will ask you one question. What is my revised portfolio balance by day 3? 48,500? 48,500. Please see the screen. Markets increased, it went to 48,510. 48,510 and 48,500. Listening, everyone? How much it will be? 97? 97,000? 10 rupees, huh? Tell me, can we rebalance or not? Yes. But 5 rupee, what you will rebalance? 5 rupee shares you can't sell, 5 rupee bonds also you can't buy. Then how? That's why, question they said, there is a trigger point. Means what? You should react to rebalance only if portfolio amount either increases or fall below 15%. Trigger point is 15. For every 1 rupee change, if you start reacting, number one, psychologically you will die after some days. Second, very important thing, brokerage charges will blast your profit. Are you understanding or not? So these are the two reasons why they don't do that. There is a trigger point that was kept for that. The trigger point is how much? 15. If you cross the trigger, then only I will rebalance my portfolio, or else I will ignore the rebalancing for that month. Understood or not? Next very important thing, second thing, in problems what you need to understand. Tell me, how much is the equity value? Became how much? Rebalance it to how much? So I have to sell how much? You have to sell units of equity 400 fund now, not just equity shares. What you need to sell? Do you know how to write it? You have to sell those many number of units at that much of NAV, which will be equal to 5,000 rupees. They understood or not? Means I need to sell 100 units of 50 rupees each. 100 units of 50. Like that you need to write in exam. So that's why NAVs will be given in that question. All these concepts first did your brain absorbed or not? Yes, tell me what model we did now? What plan we did now? Constant ratio plan. Tell me, in constant ratio plan what we have to do? Always prices will be changing. What we have to do? Rebalance every single month. Whenever the trigger point of how much is crossed. 15%. Shall we do it or not? Before doing it, take the question first. Answer I will put on the screen. Question you take from your notes. Take the notes out. Shall we? See the screen. Always, this is step 1. Institute has made literally biryani with this answer. I will show you. Biryani, there is no other word for that. All ingredients went inside. See. Psychologically, I was disturbed that day. When I saw this, what you are trying to convey? So directly if you put like this, what student will understand? 1 lakh, 1 lakh, 2 lakh, 2,500, 1 lakh, 62,000. Do you know the point? They didn't explain any theory on this. Direct say the question or answer, that's all over. You are Sunidhi. You already know kada? You are well versed. Mumbai you are working. Therefore you are Miss Sunidhi. Therefore you know everything. That's why they did not explain. Sir, okay. So directly like that you can't do. It's impossible. Okay. How to do? Easy way I will tell you. First, see the question first. Don't see the answers directly. How many months information they have given? Answer, sir. Opening or closing? Opening. Who will give opening? Yeah? Anyone will give you the closing only. What is the closing? Closing anyway is given for all the 10 months or not? But we don't require we require all the 10 months, but rebalancing is not required in all the 10 months. We will rebalance only if increase or decrease is by 15%. Understood? Next, I have one very important question for you. What is the opening NAV? They did not give in the question, therefore opening a closing. December 40 rupees. Because they did not give any opening. Actually they have to give opening, they did not give. Assumption is opening of December is the closing of December. From then the changes will start. Okay. First you take calculator and tell me 40 became how much? Tell the change. Minus change or plus change also you tell me. Minus change and fall or rise. At that time buying should happen. That's the hint. If you get answer as sell, somewhere tabala dolak started. You have to go back and rechange the answer. You have to rebalance your answer. Okay, start again. Tell me, how much it became? 37.5. Okay, now you see the screen. See that. Wherever the percentage change, rise or fall is more than 15, then only rebalancing is required. First, if you write this table, first one clarity will come. When to rebalance, when not to rebalance, we will understand first. Or else all these decisions we have to take in the table, which becomes very difficult. So understood everyone? Tell me, month is what? First month? December 2008. Like that the months are changing. Whenever the change is beyond 15%, therever we are required to make the rebalancing. Up to here everyone understood clearly? Yeah. Next stage. Now you see here. I will explain. Please see the screen. I will make it full screen. Wait. See here. First, month beginning, month ending. Which month? December. First I will explain for first 2-3 months. You try to understand that clearly. Okay. I try to present the answer as simple as possible. So see here. Do you know what happened in the institute study material? Along with that schedule, they fixed in that 4 columns. Rebalancing the 5. Along with that, they fixed. And a lot of information they skipped completely with an assumption that we are Sunidhi. But they don't know that we are not Sunidhis. See there. Month December. Please everyone fastly give the answers. How much is a bond value? How much is a equity value? Total portfolio value? Distributed amount? 2,500. But 2,500 is only for the equity. Bonds are invested separately. Okay. Tell me, how many units I have been given? At what price? Total units, 2,500. Fatafat give the answer now. January before rebalancing. January before rebalancing. How many units are there? Loudly? Now you answer. The very next month, in the month of January, NAV from 40 became how much? 25. My 2,500 units into 25 becomes how much? 62,500. Total portfolio value will be bonds 1 lakh, equity 62,500. It became how much? 162 500. 162 500 units are not there. Now we have to rebalance. 162 500 la half. 162 500 la half. Now tell me, 81 250 should be debt, 81 250 should be equity. Debt to become 1 lakh to 81 250, what we should do? Sell the debt, buy the debt. And sell the bonds, buy the bonds. And what we have to do? Buy. Understood or not, everyone? And make it 162 500. Tell me, 81 250, 81 250, we have to get 62 500 minus 81 250, or 81 250 minus 62 500, how much? That much amount of equity shares I need to buy, correct? Equity shares I should buy, or units of equity fund I should buy? At a unit price of how much? So tell me, 18,000, how much? 18,000 divided by 25. These many units you need to buy. They understood or not, everyone? How many total units it will become? 3250. Understood first? Yes, don't see the answer. Do for February. Don't see. Who see will fail. Curse operate for another 10 minutes. You do wrong also, no problem. But don't see. Only for February month you do. January month you have the answer, right? January month only you can see. Curse is not there for January. February month curse operates. Don't see February. See January answer. 1,81,250. Oh, those screens everything is visible. Not worth standing here then. Don't see the answer, try for February. February month la rise or fall first tell me. Rise from 25 to rise more than 15%. Rebalancing required, not required? Required. Tell me, how many units, how much of bonds are available with you? 81 250. Equity, how many units you have? 3,250. 3,250 into value. 1,17,000 plus 81 250. 1 lakh. For that is not the right proportion. We have to make it into half and half again. Now tell me how much? 99. Now you tell me, 99 125 means a debt we need to buy. Means what we need to sell? Equity we need to sell. Equity from what you need to sell? 1,17,000 to it should become 99 250. Means we have to sell or not? Tell the value. 17 divided by 30 something amount. How many units? Now you can see. We have to sell the units or buy the units or sell the units. Like that you need to do. So shall we stop here, everyone? Understood the model clearly, yeah? But very careful. Months skipping will be there. That means some months it will not be required, correct? You should take from used month to another used month. Once you do, you can understand that. Try at home properly. Understood the logic of this question clearly, yeah? Everyone, are you comfortable with constant ratio plan now? Ante. Nothing greater than this. Because of the complexity in the answers, we are feeling it difficult, but actually it is not. Clear to the point? Shall we go to the next one? Okay. With this, we have completed our chapter called as mutual funds. It is also over. So super. Take a break and come. We will start with the next area called as derivative options and derivative futures. Okay. So derivative options, again, I'm not going to cover our chilla concept. Directly we'll go into the derivative valuation models. Black-Scholes, all those. Listening? Or I will do one thing. First I will start with futures. Because more important, frequently asked is futures. First I will do futures, next I will come to the options. So let us start with the next area in the revision, derivative futures. So see here once, in the derivative segment, there are two chapters in our syllabus. Number one is the derivative options. So we will do all these with regard to the derivative options. Mainly in the derivative options, we need to focus on one very important area. One is an arbitrage concept. And second very important thing is this one. This time I am expecting this to come in exam. Which one? I hope that this will come in the examination, because in the last 6-7 attempts I didn't test the put call parity theory. So chance is there. This time with arbitrage they can ask. Chance is there. So we will, when we come into the concept of put call parity theory, I will explain the whole concept, how it works. And this time this is also having a chance. Please read. What is this? Yes. If a paper comes difficult, these are the areas which they can ask you. Easy papers they ask normally only. Difficult paper comes and these will come in place. Arbitrages with dividends. So we will understand this concept clearly in detail, such that we can understand how to present the answer as well. So impact on call option and put option. Mainly after that we need to come into the area, popular area, which you also know, the most popular area in this chapter, this one. What is this? Option valuation models. Okay, binomial model, risk neutralization, binomial tree, Black-Scholes model. So steps in the binomial model. So next one is binomial model. Notes also I have clearly written why those came like that, why the numbers are coming like that. So full thesis anyway I have to write for my CFA course. So therefore I presented everything line by line, formula by formula, how the formula came, derivation, logic, everything, so that you can understand. After that we come to the binomial tree. This is another important model for the exam. After binomial tree, the main king of the ring of the chapter. What is that? Black-Scholes model. This time 99% question will be there. Mark my words. This time 99% question will be there from the Black-Scholes model. The last two attempts I thought they will give, but they are not giving in the last two attempts. So every chance is there. Question can come from Black-Scholes model. So we will understand how the Black-Scholes model is working, using a normal distribution table, how to check the numbers, everything. So that is the next target. So this is the futures. Let us start with the derivative futures. Why I have shown you options means you should know that we are having two areas in derivatives, main important areas. One is derivative options and the one is derivative futures. Generally both the chapters will come for around 10 marks in exam. Okay, 10 marks, 10 to 15 marks they can come. Derivatives only. Okay, generally in examination minimum 10 marks will come, maximum can go up to 15 to 18. Minimum you take, minimum 10 marks will come from both the chapters put together. Listening everyone? So it is very important chapter. That's the conclusion. Okay, let us start. Listen first. Before we start with the derivatives, I will give a close call to the concept first. See here. What we are starting with? Futures. Before we start, futures law, what are all the concepts that comes in exam from the revision point of view? Number one, first thing everyone in the class must understand the basics of how the futures works. The revision on, even if you ask me to tell about futures in 10 minutes, 5 minutes I will tell basics. If you ask me tell about futures in revision of 2 hours, first 15 minutes basics. Do you know why? Futures, if you understand the basics properly, half work done. Understood? Half work done. Seriously, when I learned that way only, because I didn't have any coaching. I used to read the books and I used to study. Half work done. After that, markets, once you enter in the trade on futures, you can understand remaining half. Half work on futures will be done if you properly understand the basics, how the futures market run, mechanism of futures. If you understand, half work done. In that basics, I will tell about futures execution, futures maturity, futures settlement, futures mark to market, futures mark to margin accounts. All these things in the basics will complete. Listening? Remaining half is the valuation, arbitrage and hedging. Remaining half, valuation of futures, arbitration futures, hedging with futures. That's all. This is the chapter. Listening everyone, I will do 5 problems on valuation, 2 problems on arbitrage, because arbitrage is very big. If we start doing it will take hours and hours. Most important 2 problems I will do in arbitrage. 5 to 6 problems we will do on hedging. In my book around 40 different questions I kept. 40 we can't do, 15 good questions we will do. Are you with me everyone? Target ade. Till that completes, we are not going to leave today. We have to complete futures means you have to complete. Shall we? See that. What is the concept we are going to start with? Futures. First thing, point number 1. I will take one question and I will show you how the futures market actually run. Okay, see here. This is a question taken from ICAI study material, old 2012 material. When I qualified, this is there in the material. Okay, just I made changes. After the same question I use. Reason, there is no concept of revisions in AFM. Concept of futures is same in the last 15 years. Correct or not? Problem might be the old problem, but the concept has to be understood like that only. That problem was removed from the study material also now. It's not there, but that's a beautiful example to show. Do you know what is the only difference? Instead of 14, we will write 24. That's it. Concept is same. So numbers may change, that's all. Remaining everything is exactly same. When I have taken, TCS is trading at 2,278. Now today it is in 4,400 rupees. Double it became in 10 years time. This is another point. Invest in TCS shares. If you put your 100 rupee, 10 years it become 200. Double the amount you will get. Okay? Sorry, forget about the investment. See the futures chapter. Point number 1. Okay. Okay, see here. Mr. X buys the futures contract. Please read. Mr. X, he is the person, trader, whatever you call. Buy is a position. Buy position he has taken. 2 is the number of contracts. March is the expiry month. Futures, what he is buying. Product is futures. Tell me, first line, let's see how many things are there. For the first one, Mr. X. Who is Mr. X there? Person, trader. Buy, position taken. 2, number of contracts. March, expiry month. Futures, what product he bought? He brought options, futures, chocolate, biscuit. What he bought here? Options contracts he bought. Understood the point or not? Next. For which company? Underlying asset. What is this? Underlying asset. What is this? 2278. 2278 called as 2278 is called as execution price. What price? Execution, not exercise price. This options illa. This futures. Futures la you don't find any concept called as exercise price. Execution price. Which price? Execution price. What is execution price? 2278. On which date? This is called as a contract date. Which date? Contract date. One line la half the main terms will be covered here. Read from one by one. First one, X is a person. Buying is a position. 2 is a number of contract. March is a expiry month. Futures is a product. Contracts is already covered. TCS is a underlying asset. 2278 is a execution price. 1324 is the contract date. That's the first thing. These are all the meanings of various terms. On 27/3/2014 or 24 anything, being the contract expiry date, tell me, what is this? But I'm not asking you to read that. In March and left, right, March. How it look like that only your answer is. I know March. Expiry month. When it expires in March? 27, that's the meaning. Why 27? Might be Thursday. Derivatives closes on Thursday. Are you understanding or not? Thursday ki settlement will be made for all the derivatives in India at least. Okay, now they are also trying to revise that. Thursday there will be revision for the derivatives. Settlement will be made on every Thursday. Friday ki normal markets will close. Interest markets will be interest market. Debt market ki what is the date? Weekly. Every day will be important for someone. Are you understanding or not? Tell me, what month, what day is important for debts? Government debts or any debts? Wednesday. Always you check every Wednesday RBI website like auction will be made. Which auction? T-bills auction will be made. Enna option? T-bills auction. T-bills, treasury bills. Which bills? Treasury bills auction will be made. Or else how will you understand the derivative swaps here? As a swaps ki main concept hai, forward rate agreements ki most important one is the Wednesday. That's why if you see one question, he will give Monday, Tuesday, Wednesday, Thursday, Friday, Sunday is a holiday. One question will be there in swaps. Wednesday settlement he will take. Banks always settle their debts only on Wednesday. Thursday derivatives. Friday ke stock market. Saturday, Sunday holiday. Except for CAs. Okay. See here. Mr. X buys a 2 months March futures contract on TCS at 2278 on 1/3/2014. On 27/3/2014 being the contract expiry date, futures closed at 2285, 2272. Spot price is 2275.75. From the information given, answer the following. What are the various types of market entries? What are the various types of positions? Can futures be traded individually in singles? How are contracts settled on maturity? What is the position on the date of maturity in the given problem? Can we exit before maturity? What is the difference between company futures and Nifty futures? This is the question. Okay, this question was given by ISM once upon a time. Good question. If a student would have read this, half the chapter over. Later they removed that from the syllabus. I mean, from the textbook. I don't know why. Risk management also same. One very big question used to be there. 2017 the new syllabus came. 2018 ki book prints came. 2018 Nifty information they have taken and prepared one very big problem. Used to explain the concept of risk management. Now the problem removed from the new material. If you would have done that one, you need not even do other problems in risk management. Same also with this. Understood the point, everyone? See the point. First one, answer my question. Who is the trader? Taking which position? Buy position on which share? What is the underlying asset? What is the execution price? But that execution price will be static or will change? Will change, and it became how much on expiry date? 85 option 1, 2272 option 2. Okay. Price per share today is how much? 22. See here. Listen. Always there are two markets. Spot market, forward market. Spot market. There are various kinds of forward markets in India, throughout the world available. Number one, forwards. Number one, forward contracts. Name a forward contract. Number two, options. Number two, futures. Number one, forwards. Number two, options. Number two, futures. Number three, swaps. These are the four futures held concepts in the world. Worldwide, extremely popular concepts. Understood? The other day I told you, currency swaps I kept in the YouTube. How many of you saw that? Anyone? Swaps when you will do then? I cannot cover in this session. Will you do the swaps or not? They listen carefully, as swaps will come in this attempt. They didn't give in the last 2-3 attempts. They will ask this time. I'm not joking. Or else I would have told, read Forex, read IRRM. This time chance is more on currency swaps, because last 3 attempts they did not give. So this time definitely currency swaps will come. But I recorded, full-fledged recording is already there. Understood? Just to see that, understand, do the problems. 9 problems I have done. How many? 9. Study material, 2 problems are there. I took from RTP and I have done all the questions. At least do them. Direct questions will come in exam. Clear or not? Those chapters, they don't twist here. They will give direct questions will come again. They will repeat with change in numbers. Do those 9 problems properly. 9 or 10 I have done. Okay? Sorry, okay, come back. Tell me, there are 4 kinds of forwards in India. Number 1, Forward, అదే forex లో forward. Options, futures, swaps. These are the four kinds of forward transactions. In that we are into which one? Fun part is all four are there in your syllabus. Okay, all four are there in your syllabus. Options is there, futures is there, forwards is there, and swaps also there. Okay, now answer. Tell me, what is my execution price? 2278. But actually when I went there, price is same or changing? Changing. How much it became? 2285, or second option 2272. Spot price is how much? 2275.75. Okay. See here. Please see there. What are the various types of market entries? You can buy a share in two ways. Number one, you can buy a share in the cash market. You can buy a share in the futures market. Do you know what is a cash market? Cash market is a place where you will put the cash and buy it. Stock market. I'll ask you a question, tell me. Shall we? You wanted to buy a share of TCS today. What you have to do? You wanted to buy a share of TCS today. What you have to do? Open your account. Open your account, zero the account, whatever you have, Kite app you open, give a transaction, cut, that's all, transaction over. Money is deducted or not? That's called as a cash market. You will get the asset only if you pay the cash. That's called as what market? What is another name for cash market? Spot market. Spot lo you have to buy and pay and take. Understood the point or not? Okay, that's cash market. Okay, next one. Futures market. There is another market called as a futures market. Here transactions are entered today for a transaction to happen at a future date. Transactions are? Everyone, transactions are for a transaction to happen at a? That means contract entered today, execution will be done at a future day. That's why we call it execution price. Which price? Execution price. Okay, now tell me, first point number one, what are the two types of market entries? Cash market, futures market. What do you mean cash market? Spot market. What will be there in that? In cash market, what prices will be there? Price quoted today for a transaction to happen today. Loudly again. Quoted today for a transaction to happen today. It will be there in? Next, futures. Price quoted today for a transaction to happen at a future date. Will be there in futures market. Over. One question. Second, what are the types of positions a person can take in the futures market? What are the types of positions a person can take in the futures market? Tell me. In a stock market, what are the two things you can do with the share? Buy a share, sell a share. In futures also, buy futures, sell futures. Second bit also over. Buy or sell. What is the first one? What is the first one? Various types of market entries. Tell me. Cash market, futures market. See the question and tell me. What is the cash market price? 2278 or 2285 or 2272 or 75.75 Why? That is the price quoted today for a transaction to happen today. 2278 is a price quoted today for a transaction to happen at a future day, which is 27th of March in the question. Okay, done. Next, A, B over. B, C. Read it. Can futures be traded individually in singles? Asal options are not possible. Options and futures are traded in lot sizes. What sizes? Lot sizes. And a minimum lot size will be there. Okay, in that lot sizes only they have to do. Next, how the contracts are settled on maturity? How the contracts are settled on maturity? First, do one thing. I will show you the notes. See the answers properly. Try to understand them clearly. Once done, we will go into the fourth and fifth. From there, no concept of stopping. We have to complete basics in 15-20 minutes. That's why. Okay, read this once. Just for the sake of understanding, please read that properly once. Understood the meaning of spot market and futures market? Everyone read the answer? Next. Third one also you read? Okay? Understood up to here? Okay, next. Question will arise. Sir, why sir standard lot sizes are there? Any guess? Doubt will come or not? It has to come. Then it should be answered. Why standards lot sizes? If you trade, you will understand. Futures, once you trade, but the futures I don't recommend any one of you to trade because futures involve a lot of money and danger. Not like a share market. You need a lot of expertise to trade on futures. But the point I will tell you very clearly just in another 5 minutes. See there. I have another question. First tell me various types of market entries. Everyone understood clearly? Types of position understood? Can futures be traded individually in singles? No. Always futures are traded on a standardized lot sizes. First thing, everyone sitting in the class should understand. We are in two different markets. One is a cash market, another one is a futures market. Cash market, spot market, shares are traded. Futures market, contract on shares are traded. So if you don't understand this minute detail, always a lifelong confusion. Start again. Spot market, what will be traded? Shares are traded. Futures, contract on shares will be traded. Futures is a contract. That's why maturity date will be there. Share is not a contract. That way perpetual succession will be there. Understood the point or not? Everyone, tell me. Answer my question. Shall we? Company entered into futures contract. Company entered into one company, X Limited, entered into a futures contract. They bought some futures, like you and me, company also can buy or not. How you will give the accounting treatment? There will be no entry at all. Do you know why? First thing, the main basic rule I am not asking. Rule accounting standard will be written based on the logic what I said now. Point is, tell me, futures will always have what? Maturity date or not? Answer, sir. Maturity date will be there or will not be there? Will be there. For what? Futures. Okay. Now answer my question. What are the three fundamental accounting assumptions? That is not there for futures. That's why on balance sheet date, if any unexpired future contracts are there, they are only recognized in the books. The answer over. Going concern will not be there for futures. You know that there is a maturity date. Any unexpired future contracts are there on the balance sheet date, those are only recognized in the books of accounts. 107 and 109. Clear or not, everyone? So, we do Ind AS implementation for so many companies. So, all Ind AS will be in touch always, practically. So, whenever there are any kind of futures contracts unexecuted and unexpired as on the date, margin amounts of money was kept by the company, still unexpired balances, those they will recognize in the books of accounts as per that Ind AS 107 and 109. Valuation and recognition. Listening or not? So, why going concern assumption is not there for futures? Futures don't have going concern. Why? Why? The day on which you are giving itself, you know that they will expire within a year time. Correct or not, everyone? Futures contracts will always expire in months time, not in years time. In months time. If year time la expiry is there, you can recognize in the books. That's why debentures are recognized. Debentures also have expiry date, do you know? But expiry date is within a month or beyond a month. That's why they will show. Did you get the point or not now? So it's all about your understanding how you perceive the things. Sir, okay, point number 1, tell me. Futures will be traded in singles or not in singles? Cash market, futures market. Understood clearly this is a differentiation. Tell me, in cash market what is available? Shares are, cash is available. In cash market what is available? Shares are available. In futures market what is available? Contracts on shares available. Which contract? Futures contracts are available. Whenever in the question they give information, your first thing to do, spot is different, futures is different. Spot is traded in different market, futures are traded in different market. Are you understanding the point or not, everyone? Okay? So many things will be there in the market. So many things will be there in the futures. This is different market, this is a different market. Understood the point? So therefore, that's the first thing. The fourth one. What is the fourth one? How are contracts settled on maturity? What I will do is, fourth, fifth, until D and E I combine and I will explain. Listen carefully. First, listen to the statement. In any futures contract, sir, everyone in the last also listening. In any futures contract, all the buy futures will take a sell position. All the sell futures will take a buy position and they will net off their positions on maturity date. This is conclusion. Why, how, what, when, everything we will see in the next point. I repeat one more time. Simply in your language, I will remove all technical words and tell, see here. In a futures market, all buyers become sellers on maturity date. All sellers will become buyers on maturity date. Until really seller become buyer means he will buy. Positions will be changed. What will be changed? Like this if I tell, no one will understand. That's why I have a fantastic mechanism to make you understand. See the screen once. Read this. This you will not understand. Just read. On the date of maturity, buyers will become sellers. Sellers will become buyers. That means buy contracts will be closed with a counter sell. Sell contracts will be closed with a counter buy. What is the meaning? See here. See here. Very, very important. See here. Notes, everything you need not read now. I have given full explanation. Step 1, step 2, step 3, step 4. Practically how it happens. That's all not required as of now. Just to see the numbers. Try to understand. Visualize. Tell me. Which market we entered? Which market we entered? Options of futures. Futures what will be traded? Futures will be traded. Shares will not be traded. Vegetable market vegetables traded. Stationery market stationery traded. Like that futures market futures traded, not the shares. Even if you go to Zerodha, you have to get registered separately for futures and options again. Are you understanding or not? Directly, for example, you open a kite, you know kite app, Zerodha. If you have Zerodha app, you can understand. Since last 3-4 years I am using that, I am comfortable. I am not promoting it. Just saying. Okay, no advertisements will come during the video. Subscribe here, click here to open Zerodha account. No promotion. I am happy with it, that's all. So the point is, you open Zerodha account or some account, abstracts you open. Who stopped you? So abstracts you open. After opening abstracts, they will give you only that. What account they will give you? What account only they will give you? They will give you 2 accounts. One is a trading account, another one is a demat account. One is trading account. That is buy, sell, MIS, CNC, intraday, stop loss, GTC orders, all these things will be there in a page. All those are called as a trading account. That will be given by the app. Okay. Demat account will be linked to depositories, NSDL, CDSL in India. Okay. 2 accounts they will open. One is a trading account, another one is a demat account. Okay. Done. Over. Now what will happen in case of futures also? Same thing will be there or will not be there? Answer, yeah. Demat account, trading account will be there or will not be there? Will not be there. Futures don't have demat account because futures are not deliverable. Futures are not Deliverable is under deliverables. So therefore what will happen? Futures don't have a demat account. Therefore you can't use the same account. Na? Therefore separately again person has to take a photo. Again they have to send credentials. Again they will open the F&O market for you. Then you have to go for trading on F&O. Now come to the main story part. What will happen on maturity date means, tell me, what execution price you have given? What execution price you have given? Loudly, sir. 2278. When you have given that? On 1/3/2014 you have given that. Buying price or selling price? Today's buying or future buying? Now tell me, when you clicked, when you give a mouse click to buy 1/3 to buy today na in future, at what price? 2278. Options, how it works, irrespective of price on the day, I will give you a 2278 is the concept of options. Derivative options, yeah. It may become 3,000, it may become 5,000, it may become 1,00,000, sir. I don't care. I will give you only at 2278. It is a concept of, this option illa, this obligation. Futures is a obligation, it's not an option. You can't tell that 2278 only I will buy irrespective of price, like that the concept will not be. First one, tell me, everyone understood the logic clearly? Yeah? Everyone? Yes, tell me, what is your execution price? 2278. Actual price is 2278. Changed. It became how much? 22. Now you answer. Imagine a story this way. Okay? Let us say we are in share market, not in futures. We are in share market. We entered into agreement at 2278. We entered into agreement at. Now you tell me, I will answer. I will ask you. Tell me, I have a right to buy a share at what price? Everyone listen. I have a right to buy a share at what price? Irrespective of the price on that day. Correct or not? Tell me. 1 month over. Maturity date la you and me are standing. We saw the market. Price is trading at 2285. Now you please answer me. I have a right to buy at how much? 22. Listening everyone, I will buy at 2278, which is traded in the market at. Tell from my point of view, tell from your point of view also. Now tell me, you should buy at what price? Again start. Who am I? Buyer. Who are you? Without a buyer and seller, contract will not be freezed first. Two parties are required. I can't buy from me. Tell me, who am I? Who are you? I clicked buy at. You click the sell at 2278. No. Arey, if you give 2285, if I give 2278, how both of us are managed? Originally, both of us clicked 2278. Therefore, we are matched by the stock exchange. Tell again. At what price I clicked buy? At what price you clicked sell? Both of us are matched now. Okay? Both of us are traveling for how many months? 1 month. 1 month over. Maturity date, we are both are standing now. Who will win, who will lose, we need to see. We saw the market. What is the price trading? 285. Now tell me, normal contract style you tell. Forget about futures. Tell me, I have a right to buy at what price? 278. A share trading at what price? 285. Now you tell me, you have to buy a share at what price? 285. And sell to me at what price? 22? Now tell me, it's a loss to you or gain to you? Loss. Tell me, you should buy it. Sell to me at. So you will buy at 2285, sell to me at 2278. Now tell from my point of view, I will buy a share at 2278 which is worth 2285. Listening? I will buy. Okay. Now tell the transaction from my side. First tell me, I will come to you on maturity date. What we will do? We both will see the closing price. I contracted it, but it is at. Now I will buy at 2278, immediately sell in the market at 2285. I will make a 7 rupee instant gain or not? You will make an instant loss or not? All this will not happen. Instead of doing all these things, stock exchange will stand in the middle of both of us. It will tell, if all this happens, seller, how much you will lose? 7 rupee. If all this happen, buyer, how much you will get? 7 rupee. Take 7, give it to him. Now tell me, share purchased, share sold, asset settled, cash settlement. That's called as a net settlement contract. Which contract? Net settlement contract. I will give you one small, simple, basic example for you to understand. Okay? You play online cricket. Online cricket, some rummy circle, some games will be there. Na? If you would have played any time, without putting money also you can play. Normal coins they will give. Have you ever played online game? Online game. Illa? Cricket, pool, rummy circle, nonsense, all these things will be there. Na? People will play online games. Now listen, sorry, if you don't play, no problem, nothing will happen to the world. First listen. Do you know what will happen? Normal games also, non-paid, generally free apps also will be there. Just it's like a normal online game. They will select two different parties. One person from India, one person from Azerbaijan may be selected. Yes or no? I will be there as a one party. Some person in Azerbaijan, Kazakhstan, Pakistan will get matched to us. Correct or not? Now you tell me, who matched them? Application. Normal, after all, a normal game can match two people means world's third biggest stock exchange can't match two people. Game is matching people from two different countries means prestigiously world's third biggest stock market NSE BSE can't match two people. So matching is possible. Understanding or not? It's a random matching but on the basis of pricing. So second very important thing is if you go into the game, first they will give you 500 coins. 550 or 1000 or 100 or some number they will give. First they will give range. First play 50 coins game. 50 if you click, what will happen? Your 50 will be taken by the application. Their 50 also will be taken by application. If you lost, all 100 will be given to the other party. Same futures. Really you did not play cricket. Really you did not deliver a ball. Really you did not hit even a single ball. Really that person you don't know. I don't know who is he don't know who am I. I don't know where he is, he don't know from where I am. Everything we know only one person in the middle, that the application. Just to put the stock exchange in the middle, that becomes the futures contracts. Futures contracts is a classic gambling bet. That's why government is trying to put regulations on that. Do you understand the point or not? It's all about a gambling game, which people loves the most. So that gambling always give an adrenaline rush. People always try to be more on the futures and options. Money will go, but money will come like a windfall gain. See that. So position on maturity date. You see and tell. Now tell ya, how much is the price on maturity date? I contracted at what price? Now you should tell the answer. I contracted at 2278 which became 2285. If at all really a settlement is there, how it would happen? I will go on maturity date, buy a share at 2278 which is worth 2285, sell immediately at 2285, get a gain of 7 rupee. Why to do all this overaction? Instead of doing all these things, that person will give you 7 rupee. Listening? Yes, listening? Yes, shall I ask you one question now? You entered into a cricket game. Your coins are 200. You are clicking on 500 rupee game. Understood? You have 240 coins. You are clicking on 500 coins game. Allowed or not allowed? Because your margin balance is low. First top up recharge. Then come and play. Same in futures also. The moment your recharge balance is going down, don't call recharge balance in exam, that's called as a variation margin. Once it goes beyond a particular level, that's all. You are inefficient to trade. A demat account does not work. Sorry, I mean trading account. Futures trading account will be there, na? If you try to buy something, insufficient funds, it will show. Again top up recharge, again enter into the market. Simply, it's like virtual gambling. It's like a gambling bet. You may. So it's like a gambling bet. You may win, you may lose. Anything can happen in the market. Understood the point clearly? Tell me now. In a futures, if one person win, another person will lose. Now don't see. Tell the reverse answer now. If price became 2272, what will happen? Tell from the seller point of view first. You will buy it. Loudly, you will buy it. Sell to me at 2278. Thereby you are making a gain or loss? Gain. Next, tell me from my side. Tell me from my side. I will have to buy at 2278 a share which is available only at 2270. If I sell in the market immediately, what will I get? Loss. Instead of doing this overaction, that overaction, knock both of them. Directly tell how much gain you have, 6 sir. How much gain, loss you have, 6 sir. You 6 rupees I will give to him. Oh, over. Last point. Cricket game, let's come. Cricket game, they will, listening, they will collect coins from you and then allowed to play. First play and after pay, give the coins. First I started playing 5 hours match. First over la Kohli out. Second over la Rohit Sharma out. Third over la other star players out. Immediately I clicked exit. I said, Mama, bye. Understood the point or not? Now you tell me, other person will feel hurt first. Second thing, app person will feel bad. I matched persons, for that I have some cost. Suddenly you said your overs la 5 overs la first over la all star cricketers over. Immediately you will click exit the game. Then who am I? Pagal dikhta hu main? Picholla kanipistuna? Do you think I am a mad fellow? Therefore, point is that other app person also will think like that. Same is a thought of the stock market. Stock market also will think like that. I am standing in the middle. You are there, he is there. You watch the market from the afternoon, slowly going up. Immediately you felt that it's danger for you as a seller. Immediately you said that, Mama, bye, 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 bye. You said and you packed and you went out. Why I will allow you? Therefore, margin accounts are locked always. Margin accounts are locked. You can't do anything with the margin account. Margin accounts will be under the surveillance of the stock exchange. Stock exchange will lock that margin account. You have a right to deposit money. You have a right to withdraw money after a particular level. You don't have a right to manage them. Understood or not, everyone in the class? That's why you put all the money in the wallet. Put all the money in the wallet. Futures, if you trade, you can know futures ki wallet will be given. In that wallet, you should top up recharge. Money came na, very good. Money does not come, what will happen? Ganga Arpanam. Over. Full cash will become zero. After a certain level, they will only tell that insufficient balance, not eligible for futures trading, contract has been cancelled. Over, done. Again you will cry for 4 or 5 days. Again you will come like a shameless fellow to the futures again. 4 or 5 days he will cry, full wealth has been gone. Again he will apply for some bank loan. Again put the money. Again shameless fellow will come back. Again loss. Again same story. One day suddenly windfall gain will come. That's all. Over. His chest will become Kaveri river. Full gain come. Next time I am the hero. I know everything about futures. Next day again loss. It's not like what you think. Yeah, danger futures. You ask me, I will tell lot of money I kept. Kemu gone. That's why later I thought that we should not do. Futures is profitable. Do you know when? If you take classes. That's classes on options and futures are profitable than futures. Thousands of classes I can sell. So problem is futures contracts are dangerous. Futures chapters are very profitable. So at the end of the day, understood how the futures works? See the 4-step procedure. Read properly. In reality, there is no real buy and real sell of these shares in futures market. Really we will not sell. Continue. There is only net or cash settlement. This can be explained as under. Read. Investor clicked buy at 2278 in futures and locked the price. Continue. Price on that day is actually 2285. Since he already locked at 2278, whatever may be the price, he can buy at that price even when the going price is 2285. Seller has to buy at 2285 and sell to the buyer at 2278. And on the other hand, buyer can buy a share worth 2285 at just 2278. Buyer can immediately sell at 2285. Loss to the seller will be 7 and 7 will be the profit to the buyer. Instead of undergoing all these steps, directly profit and loss will be booked from the seller. Rupees 7 will be collected and given to the buyer. Here collection and delivery will be made through the bank accounts called as margin accounts. That's how the margin account concept came. Everyone understood clearly? Story, concept, you forget. At the end you understood futures in a right sense or not? Everyone in the class? Final touch. This is very important because one 8 marks question was recently there in the RTP, which came from the concept which I am going to teach now. Okay, I will show the proof also. In institute material also that question is there. I will show you that question. Then you will understand. This question came from this concept. Till today I am mugging up that if this comes like this, we should do like this. Okay, what is a concept? Exit before maturity date. Everyone tell me. Loudly, loudly, loudly. Sorry, I will ask a question, first answer. For example, I entered into futures market. Let us take like this. I entered into share market, cash market. I bought a share of TCS. Who am I? Member, shareholder, or technically I am a member. I should stay in the TCS till winding up. I should become contributor. Yeah? No. Can I come after 5 days? Sir, I am asking you only, sir. Can I buy the shares of TCS and come out after some time? Yes, you can come. That is entirely your will and wish. If you want to continue, continue. If you don't want to continue, don't continue. As simple as that. Correct or not? Now tell me. I want to become a member. How to become a member? I want to become a member of TCS. How to become a member? I want to become a non-member. How to become a non-member? Now you tell me, what making you a member? What making you a non-member? Same happens in futures, but futures is a contract. It's a sharp on both the sides. Company is not like that. You can buy the share, you can sell the share. That's all. Correct or not? Tell me. Answer my question. I wanted to become a member. What to do? I wanted to become a non-member. What to do? Same. Futures also have both edges. You can buy futures, sell futures. How in a company to come out you are selling? Buying makes you a member, selling makes you a non-member. Futures also same, but both the sides you should think like that. Buy futures contract is one contract, sell futures contract is one contract. Buy futures person, if he wanted to come, he should give a sell order and come out. If you don't understand this seriously, you are losing so much of futures chapter. Again repeat. Buy futures person is there. He wanted to exit. What to do? Give a sell click. You will come out automatically. Sell futures contract person is there. He wanted to come out. Then buy click. Why? Futures is not a share. Futures is a contract. Contract la both parties will be there. Buyer will be there. Seller will be there. Buyer will be there. Buyer goes out by selling. Seller goes out by buying. Ante. From this what you have to understand? Always counter transaction makes a exit. Buyer counter will be sell. Seller counter will be buy. You didn't understand this. I will give one example directly. See this. See this. These all examples are taken from CFA books, completely copied and pasted, but explanation only from my side. So how to understand this concept? First, how those books are explaining the things, how beautifully they are analyzing the things going on. Let's see. See, this is the situation here. I'm making it full screen. Observation required. In my material, third question is on this. Study material, 1 8 marks question also on this. First, listen carefully what has happened. Tell me. See the screen. This is cash market, this is future market. Two different markets we are seeing now. First, second, both are same market or two different markets are. Different markets we are visualizing now. Okay? Try to understand that. See here. Exactly 5 minutes you spend time. Problems we will do in no time. First, cash market la prices will be same or changing. Normally you open TCS here now. Today one price, tomorrow one price, day after tomorrow one price, 10 days after another price will be there. Price will not be same for all the days, correct? Like that prices are changing. Tell me, day 1 what is the price? 2275. Day 2, 2290. Day 3, 2282. Prices are same or changing? Same or changing? Changing. Prices are changing constantly. Correct or not? Next, come to the futures now. What is the day 1? 2270. Day 2, 2295. Day 3, 2287. Like that again prices are changing on the other hand on the other side also or not? So prices are changing on the left side, prices are changing also on the right side. From this what you have to understand? How cash market la prices changes every day. Futures market also prices will change every day. They are not constant. Not days, sir. Daily lakhs of times they will change the prices. Okay? End prices I have given. Closing prices. Up to here listening everyone. First tell me. Cash market what is the price on day 1? Futures. Next day. Next one. Next day. Next one. I will ask you a final question. Values are same or different? Answer. This and this are independent markets or not? Wrong. This is dependent on this. That's why it became a derivative which derives its value from this. Understood? This is independent market. This is dependent market. This is derivative deriving its value. It is not having its own value. I will ask a question. This is 0. How much will be this? That's all. That means this don't have any value because f equal to s into something. S is 0 means f is 0. Listening or not? That's how we call futures as a derivative. If I suddenly ask a person, prove that futures is a derivative means what you will tell? Underlying asset. All these not needed. F equal to s into e power trf. Correct? S 0 means what is the answer? F 0. Answer over. That's why it's a derivative. It derives the value from spot. Listening or not? Tell me. What is this? First market. Cash. Spot market. This is what market? In this what prices are traded? Futures prices are traded. Here what prices are traded? Share prices are traded. Again you are telling wrong. Here what prices are traded? Futures prices are traded. Cashless? Share prices are traded. You are buying share of futures. You are buying, in this chapter you are buying shares of futures. Therefore forget about that, stand here. Understanding everyone? Application important, please listen. I am A, you are B. Everyone please visualize this. Don't see my face, see there. See the numbers and names. I am A, you are B. Let's say she is B, I am A. Now see, both of us are watching the market. I saw that the share price is, share means sorry, very sorry, futures. Futures 27th March expiry ki, they're trading at 2278. Immediately I clicked buy. Immediately I click with an opinion that it will raise such that I can take a counter sell at a higher price. That is my perception. She might have a different perception or not. She thought that price will definitely fall. She gave a sell click. At the same time, stock exchange matched both of us. We entered into contract. 1 day over. How many days? 1 day. 1 day over. Tell me, at what price? 1 day over. Price came to how much? 2295. Immediately on 2295, I thought 2295 will not go beyond. If I stay with her for 1 month, on that day it can fall. First day, tell me what is the value? 7, 8, both of us entered. Correct or not? Actually, we are matched for how many days? 1 month time. Till 27th of March. 1 month or 25 days or something. Trading days. Correct or not? I started. 1 day after, immediately price went to 2295. I thought this is the highest price. I don't want greediness. What I will do now? Some other person may think that prices will further move up. Ade see. Are you understanding the point or not? I will give my buy contract to him. Take 2295 from him, jump out. C will replace A. Now contract is between whom and whom? C and A. The C and B, something. Names okay. By mistake it might. No. Correct. A takes a sell position. A takes what position? Sell position. Involvement. A takes what position? Sell position. Tell me now. First day, A is a buyer. B is a 1 day completed. Price went to 2295. Now I thought that this is the best price for this. It will not go beyond this. I can't stay. And I am getting a bumper gain here. 2278 to 2295. Super gain. I thought that this is the right time to sell. I wanted to leave. Immediately there is another person. See. He is such a person who thinks that 2295 is a lower price. Which Bakra is selling at 2295? Like that he felt about me. I thought that, come inside, you will understand how futures will be. 2295 don't grow. Experience I am telling 2295 will not grow up. So I thought that let me first come out. I don't want what will happen to other person. Sir, first what I did, I gave a sell click. Exactly at the same time, one person is ready to buy my contract. Immediately, I passed my contract to whom? C. Now who I am? Seller. Who he is? Means he is buying my buying contract. I am selling my buying contract. Okay, he took that. I jump out of market. I made my gain my margin account to happy life. Now who and who starts the journey? C and A. C. B and C. Sir, okay. B, you understood the parties' names. B and C. C is a. Still B is a seller. Price G came down. Next day, price came down. Now, who will think? B thought that price has went down. Further, it will not go down. I understood. This is a time. I will loss or gain. First, I should come out, she thought. Listening, immediately what she will do? She wanted to go out. She is a seller or buyer? Answer. She will tell that. She will pass on her sell contract to someone who will take that and she will come out. Correct or not? Let's say she is another person. Name D. D. Now D takes which position? D takes which position? Sell position, and contract will run between whom and whom? C and D. Final date ki C might not be there, D might not be there. X ki Z ki majla contract can be there. That means you tell me, every day same persons will make a transaction, different persons. Answer? That's how these contracts will work. Everyone understood the points, and our parties changes very frequently. Today who is there, tomorrow he will not be there. Are you understanding or not? Now today what Koushik Mukhesh you are seeing is a different person. 2 years back you should have seen. All classes I used to keep aside. Every day I used to trade on futures. Today I used to buy in the evening. Afternoon I used to sell position, get the money, again reinvest, lost the money, again cry. So after that, hit on it. After that I thought that okay, this is a time to stop this futures contract. So the point is how futures market actually works. This is how actually it will work. People will always change the places. No one will stay constantly in futures. It's a temporary relationship. I'm talking about markets here. Don't take it such much personally. So these are all what relation? Temporary relations. Just for 1 day, 2 day, over, done, contract close, come out, again start the business. So this is how the futures contracts are actually working. Everyone understood the point clearly up to here? From now, the problems will start. If the mechanism of futures is understood, concepts become very easy. First, futures like examination point of view, the most important point is valuation of futures, arbitrage in futures, and last one is a hedging in futures. Listening everyone? But before going into those, one margin account question is there. If at all exam the question comes, it will be this way. See here. Take calculator only, nothing required. Just to see this. Study material questions are old study material questions. These are now they are not there, but good questions. See the question. On 15th January, please read. On 15th January, Mr. X has bought January Nifty contract. I am buying TCS share, Infosys share, M&M share, Nifty contracts. Nifty contract. Okay, what is a Nifty contract? How can I buy? Don't ask that questions. It's an assumption that you already know that I am taking this. Nifty is also a contract. It's a group of stocks. Okay, Nifty contract he wanted to buy. Costing is how much? What is the cost? Very good. Next, he has to pay initial margin. Means a top-up recharge minimum how much? How this 21,520 is calculated? That's very good. Very good, sir. That 21,250 is calculated using VAR. What is VAR? Value at risk. That's too not directly. Monte Carlo where they will use. Not where which is there in our syllabus. As that no one is using. Parametric, non-parametric, international usage ki CFLO they are not using. CFLO they will use a Monte Carlo. Which one? Monte Carlo. Monte Carlo is a simulated where. Which where? Do you know how they will do? So just for understanding sake I am telling you. Price can move either right side or left side in different ways. Correct or not? All different ways they will simulate and they will give this particular 21,250. Actually this is called as a Monte Carlo simulated where. They will use it and they will calculate the 21,520. Sir, I forget about all the concept. First point number one. What is the cost of the Nifty contract? How many contracts he bought? No. One contract 200 Nifties are there. He bought a January future contract. A means how many? One contract how many are there? 200 Nifties are there. Delivery. Okay. The delivery directly, transaction. On 25th January, what is 25th January? Contract expiry date. Okay, closed at what price? 1360. Now you tell me, please take calculator. First answer, 2,69,000 you should never take directly. At what price you entered? At what price you, how many nifties are there? 200. 200 nifties, that is the price. That means what is the price of nifty on that day? 269,000 divided by 200. 13? First tell me, what is 1345? Execution price. 1345 is execution price. You wanted to buy a seller. They see their bought, he is saying, buy a seller. Buy shares or buy futures. Futures, we are in futures chapter. Okay, buy futures. How many? 200. That makes how many contracts? One contract. Divided by 2 of 200 means 1345. I waited for 25 days. 25 or 10 days. 10 days after Nifty closed at. Tell me, what is the profit for me? Profit or loss? First, no, tell like this. Tell like this. You took buyer seller. You took buyer seller. See, like this you have to present your answer. Original position is what? Original position is what? Reversal position is what? Reversal position is sell. 1390 closed, sell. Tell me, what is the profit per Nifty? 45. How many Nifties per contract? How many Nifties? 1 second. Oh, this is one question. Okay. Oh, I am showing you third question answer. Okay, see there. Sorry. Tell me, what is the original position? Buy. How much? 1345. Reversal position? Sell. How much? 1360. Profit or loss? Profit. How much profit? 15. How many contracts? 200. What is the total profit? 3000. How much margin you deposited? 21 to 520 plus 3000. Total realization will be 24,520. This is not like option premium. Option premium expires. Option premium will expire, but this will not expire. It will be given back to you along with the profit. Tell me now. Game I entered. 100 coins I entered. How many? 100 coins. Your 100 coins also I received. I wanted to close the app and go out. How many coins I will have? 200. Means what I deposited will be there. What you given also will be there, and I will take and I will go out. Same logic. Futures will also work like that. Everyone understood the point? Tell me. Third question. You do on calculator and tell me. Read the question first. Loss or gain you should tell. After that amount also you should tell. Total amount realization also you should tell. Tell me. How much loss? 9,000. How much you deposited as a margin? How they will give back how much? 21,520 minus 9,000. 12,000. That is the money you will realize. Okay. See here. See the answer. Loss is 9,000 and 12,250 you will realize at the end. Everyone got this answer? Next. Directly come to question number 5. This is a popular question given in recent exams also. See here. I think it's not there in study material, but see there. All other question banks will generally have this question. So okay, see there. On November 15, when the spot price of Telco is 473 per share, Mr. X buys 15 contracts of July Telco futures at 491. Tell me what is 473, what is 491? What is the difference between 491 and 473? 491 is the? Thank you very much. Perfect. Correct. Shall I tell you one thing? I think you are the first batch in entire career where answer was said correctly in one go, maybe because you already know. Whenever first time regular batch, something they will tell. I have to take 15 times introduction. Then they will understand, okay, this is how futures will work. Sorry. Thanks to all the faculties who taught you already. At least some level of basics we are having to start and continue. So the point number 1. What is 473? Very good. What is 491? Futures price, execution price. That will be same or changing every day na? Changing every day. Okay. Now listen. Shall we? I will ask one question. Please answer to this. I had a cricket game app. I entered into the app. Listen carefully, sir. Example directly relates to the futures. Okay. I had an app, cricket app is there. I bought 5,000 coins. I kept in the wallet. 5,000 coins. I purchased 5,000 coins. Came into my wallet. I said I will play 10 games. Finally, you adjust the amounts and give me. I said that. Will they allow? Will not allow? Every game after they will transfer you. Why? Because you can run away at any point of time. Are you understanding the point or not? I repeat. 5,000 rupees I have. I can play 10 500 worth games. But they don't tell that you first play all the 10 games. Finally, we will settle the balance. They don't tell. Every match beginning, they will collect money from you and then only you are allowed to play. Why, sir? Why? 5,000 I gave, na? You allow me, I will play 10 games. After that, I will transfer. In the middle, if you close that particular app, or if you uninstall totally, who is responsible? The chance is there or not there? Then how can I believe you? Same happens also in futures. That's why there every game ending they will collect. Futures like every day end they will collect. Every day end they will collect. So futures are seen and then there's the apps may be discovered. Either super concept is there. So riskless concept. Put the money and then play. Do you know in that there is no concept of debtors? Are you understand the concept or not? There is no concept that all creditors say. First give money then play. If you have money you will become, or else you will become pauper, go out. So the point is very simple. Game same concept. Yeah. Game you put, I have 1 lakh coins. Even then they don't allow you to play the game without putting the coins there. Correct or not? Game ending they will settle. Here game is a day. Every day end, markets will treat as if the day is a date of expiry. I repeat one more time. Listen everyone. Markets, futures market la expiry date la what will happen? Futures la expiry date what will happen? All buyers will become sellers. All sellers will be treated as. Same happens every day, not on expiry date. Our concept is mark to market. Mark to market means what? Every day exchange will treat that. That day is a date of expiry. That day is the date of expiry. From that point of view, you should understand. Shall we continue? See there. November 15. What is the spot price? 473. Telco futures? 491. We are entering into spot of futures. 473 relevant or irrelevant? Irrelevant, not at all needed. How much margin was collected? 800 per share or per contract? Now you tell me. How many contracts I am buying? Per contract 800 means 15 contracts will be 12,000. That's called as which margin? Initial margin. Okay. Next. What is the maintenance margin? 600. Tell me 600 into 15. Answer, sir. Fast. Problems like don't wait. Tell me how much. Tell me how much total collected. 12,000 plus 9,000. Totally how much? 21,000. Like this you should never think. Do you know why? Maintenance margin is a reorder level. At 12,000 ki maintenance is a reorder level. Below that if you go, top up recharge has to be made. I will not wait till it becomes 0. Are you understanding the point or not? So tell me, total is 12,000. It reaches up to down. You are first day loss, second day loss, third day loss, fourth day loss. It came to 8,400. Immediately you are ineligible to trade from that date. Eligible or ineligible? What you have to do? Within 48 hours you have to top up recharge. A message will come to the phone. Top up recharge. If you don't top up recharge, contract is cancelled. If you top up recharge again, you have to top up till initial margin. Top up recharge till? Now you tell me what to do. If the amount falls below, don't tell 9,000. Yeah, examiner number will change. If the number falls below Maintenance margin, the person has to deposit the money. The person has to deposit the money. That's called as a variation margin. Which margin? Variation margin, such that it reaches what level again? Initial margin level of 12,000. Listening? For example, it came to 7,000. How much I should deposit? 5,000 I should deposit to reach 12,000. To reach? I got bumper profits, day by day profits. Then any amount beyond initial margin, you can withdraw. Any amount beyond initial margin, you can withdraw. Some regulations will be there. They will tell 75% you can withdraw, 50% you can withdraw. If regulations are there, follow that. If regulations are not there, 100% above the initial margin, you can withdraw. Listening or not, everyone? Okay, now tell me. Each contract, how many shares are there? Everyone in the class, how many shares are there? 50 shares. How many contracts I have? 15 into 50. 750 shares I bought. Okay. Let us see what is my fortune over a 5-day period. Okay. You tell me, I will listen. When I entered into the market. When I entered into the market. 15. At what price I gave buy? 490. Now you tell me. Price became how much? See the screen. See the screen. Okay. Please, observation required. See the buy contract way. Tell me. First day, day 1, what is the price? It became how much? Tell me. If that day is the date of maturity, what would have happened? I sold at 596, a share worth 591. Therefore, I am getting a gain or loss. Really you will buy, really you will sell a net settlement. Immediately your game over for that day, 5 rupee will be deposited from your account. 2, it will be deposited in your account. Profit will be booked. How much profit? 1 share, 2 shares, 750 shares. 5 into 750. 3,750. What is your initial margin deposited? Deposit made? No. Withdrawal made? No. Directly balance will increase to 15,750. Babu Chitti, understood or not? Done. Over. Second day. Day number 2. Price became how much now? 503. 496. Last day's closing. Yeah. You opened with which price? That's called as a mark to market. You are marked to 496. Next day you are carry forward with 496 now. Day. Second day, tell me again, my day is running. Tell me how much is the profit? How much is the selling price? Really I will sell a counter sell. Counter sell. Stock market will take the money, collect money from winner, give to, loser collect to, give to winner. All this happens monthly once or daily. Daily they will settle. In India they are doing it on Thursday. That's what I wanted to tell. Actually it is done daily in USA. India that much mechanism is not yet developed. Therefore what they are doing every Thursday. I told you Thursday settlement will be done. Understood or not? Done. Start. 496 sell at what price? 503. Sir, financial management never you should understand from Indian perspective. It's a global subject. It's a global subject. That's why in the CA intro also there will be irredeemable debentures. You should not question. As per section 71, prohibition is there on irredeemable debentures. This is India. US perpetual debt is still allowed. Now read. Tell me, second day at what price we opened? Markets closed at what price? Profit or loss? Super profit. How much rupees per share? 7. How much is the total profit? 5250. How much is already there in my margin account? 15,750. I will deposit a withdraw. What I did is in the question they have given. See here. See the question. Assume that Mr. X withdraws from his margin account only once on November 16 when he withdraw half of the amount allowed. Compute the balance at the end of each of these 5 days. Okay. Now tell me. He withdraw 100% half. First tell me how much profit I got on the second day. Take calculator, don't just see the notes. How much is the balance on that day? 15,750 plus how much? 5250. Total became how much? Everyone 21,000. How much is the initial margin? Minus 12,000. How much only I can withdraw? 9. In that entirely I withdraw half. Means how much? That's how the 4,500 came. Listening or not? I withdrawn. 15,750. Listening everyone? Became 21,000 and 21,000 has become again 6,000, 16,500. Understood or not? Yes, next. Rahu Kalam started. See there. Every day is not ours in futures. Na? Tell me. I opened at what price again? 503. Sudden fall. It went to how much? 488. Today also, same process they will use. Now tell me. I will become seller. Seller at what price? 488. Buyer at 503. Loss again? Loss. Super loss. Okay. Everything whatever I earned is wiped off. 11,250 loss. Now tell me. My 16th, take calculator. How much is the balance in the margin account? 16,500. From that, how much is taken? 11,215 given to some other. My balance of fall to? Answer. 5,000. But what is the initial margin to be maintained? Difference. That's why we deposited. Understood or not, everyone? Deposited. Deposited how much? 6,750. Again became 12,000. Rahu Kalam didn't stop. Still it is continuing with me. Tell me, next day, I opened with 488. Market closed at what price? 485. Again I incurred a loss. Again margin balance fall. Again deposit is required or not? No. I said deposit is required only if the amount falls below the maintenance margin. 12,000 minus 2250. 97? It is below maintenance margin or not below na? Therefore I need not deposit now. But loss is there. Deposit not required. Listening or not? Last day. Tell me. Last day. How much I started with? 485. Closed with 491. Profit or loss? Profit. 4,500. Totally I closed with 14,250. Everyone understood or not? Do you know what has happened? I ended up with a zero profit or loss. At what price I started? Closed at what price? But profit is collected from me once or 5 days. Ade futures contract. Futures lo no one will believe any other person. Okay? If you tell I am a very nice person, therefore wait for 5 days. Directly after 5 days I will do means no one will believe you. Settle the contracts every day. Daily basis we have to settle the contract. Everyone understood the point clearly? Yeah? With this we have completed margin accounts calculation as well. Hopefully everyone had a full clarity on the margin account transactions now. Everyone understood clearly? Yes, next. Now from here working has to start. Sir, everyone know how to calculate E value? E power 0.5. E power 0.05. You know how to calculate? See here. E power, example I am telling. E power 1 if it is there. Listen please. There is a formula to calculate. Fastly on calculator, if you do 2 times, 3rd time onwards, you will only understand. E power x has a formula. 1 plus x by 1 factorial, x square by 2 factorial, x cube by 3 factorial plus so on. 3 times you have to do. Why sir? I will do 4 times. You do 44 times. No one will stop you. But the point is, last decimals will change. Anyway, in examination, you have to take only 2 decimals or 3 decimals. Correct or not? Institute is doing rounding off at 3 times. Answers in the institute study material are projecting the 3 times only. I checked here. That's why I'm telling you. You can believe me. Or else you test. Who is correct, you will know. So, institute answers will be there. Na? Those are all matching with 3 times permutated numbers. So, tell me. Point number 1. What is the answer? How to do? 1 plus x by 1 factorial. And the same number you have to take. Next, x square by 2 factorial plus x cube by 3 factorial. Now tell me, what is the x in the given case? Tell me how to do. Take calculator. First, 1 m plus. 1 m plus. Keep in memory, 1 m plus. 0.1 m plus. Anyway, divided by 1 means same answer will come. Plus. Next, 0.1 square divided by 2, again m plus. Okay? 0.1 cube divided by 6. Why 6? 3 into 2 into 1. M plus, MRC. 1.1053. I remember numbers, lot many batches I taught. What is answer? 1. Have you got an answer? 1.105253 like that you should get the answer. Correct everyone? Have you got? Sir, I will ask another. 2 for 0.03. You should get 1.0305. 0.03. 1 m plus 0.03 m plus 0.03 square by 2 m plus 0.03 cube by 6 m plus MRC. 1.0305. Have you got the answer? Next, do for 6, 1.0618. 0.06. 1.0618. Okay? Have you got a 1.0618? Next, do for e power 0.05, 1.0513. 0.05, 1.0513. Got the answer? 1.0513, that's what I told. 1.0513. Like that we need to do. Do for 0.01, 1.01, 1.01001. 0.01 you do, answer should be 1.01001. Actually it will be 1.010005. Came or not? That's it. Sir, why I ask you to do is practice. If you do for 4 or 5 times, examination half second, half minute, you can first get the E value even though he didn't give you. Okay? Done. Why? Futures generally they do only exponential discounting and exponential compounding. Futures what they do? Exponential discounting, exponential compounding. Okay? See here. Listen please. Futures valuation. Okay? Keep the heading first. Futures valuation. We are having 2 types. Stocks, commodities. Stocks, commodities. Stocks. 3 concepts are there. First one, no dividend, dividend in currency terms, dividend in percentage terms. Technically we call it yield terms. Commodities CTC model. Commodities CTC model. Okay? No dividend. F equal to S into e power TRF. This is a notation institute is using. So therefore I don't follow any other notation other than this. I will go by the institute because examination key that will be there. So I don't take risk of different usages. I will use what institute is using. Are you listening? If you are using some other, because might be a faculty might teach also in a different way. With due respect to all these people, what I am saying is you follow what you are following, but I will follow this. If you are also following this, well and good, no problem. The institute notation is S into e power TRF. What is S? Spot. E, exponent. T, time period in years. Low, time period in 3 months they gave. How to write? Directly don't multiply in 3. 3 by 12. Like that you should write. RF, risk-free rate. RF, risk-free rate. Okay. F equal to S into e power TRF. Next, dividend. F equal to S minus PVD into e power TRF. S minus PVD into e power TRF. What is PVD? Present value of dividend. Logics, everything we will see when we come to the problems directly. So next, last one. Dividend with a yield terms. F equal to S into e power T into RF minus D. power T into RF minus D. Okay. Next, commodities F equal to S plus CTC. S plus CTC. Sir, how to calculate CTC? CTC. Full form I didn't ask. How to calculate? What is the formula for that? Generally, do you know what students are doing? Let me tell. They will calculate futures value. From that, they will remove the spot value. Balance will be CTC. Are you understanding or not? Futures already CTC will be included. They will first calculate F value. After that, they will remove spot value. Thereafter, balancing figure will be CTC. If they ask a question on calculate CTC and CY, then on that day, then background music will start in exam hall. If normally they ask only CTC, perfect. Whatever you do will be right. But if they ask two things, CTC and CY, how to calculate CY? Asal tell sir first what is CY. After that you ask how to calculate. Convenience yield. How to calculate? Therefore problem will come. CTC, write the formula. CTC. S into e power TRF minus 1. S into e power TRF minus 1. Why? How? Everything? We will see. I have 8 problems on that. Different types of questions which were tested already in exams. RTP, MTP, all I kept here. So we will do that. Then you will get a clarity. Okay. First tell me what we are valuing. Shares, biscuits, futures. Ade. So future is an independent instrument derived from shares. So that's why S is there in all the places. Without S, F will not be there. Understood the point clearly or not? Everyone? Okay, start. First point number 1. Questions let us do together. I need some speed in doing the answers. Consider a 3-month maturity future contract in a non-dividend paying stock. Stock is available at 200. Risk-free rate is 10% per annum. What will be the futures price? Can we do it together or not? First tell me what is S. Very good. What is T? 3 or 3 by 12? RF. 0.1. Write in that terms. 0.1. Better to write like that. 3 by 12 into 0.1. Like that you write. You will get the perfect number on the numerator. Listening? Shall we do it together? Start. Question number 6. Tell me F equal to S into e power TRF. Sir, you should tell what is a S? Into e power 3 by 12 into 0.10. 200 into e power 0.025. 200 into 1.0253. You can believe me. How much is the value? 205.06. Okay. Forget about logic. First to do the answers. Exam lo question comes, no one will ask how it came. Okay na? So those all will take a lot of time. I will tell you how it came also. I will tell you. I will not leave. But first to do the problems and complete. Psychologically you will get a satisfaction that we have done. After that you learn. Next, question number 7. This question number 7, let us see. ABC is quoted in the market at how much? Fast. ABC is quoted in the market at? When I said just quoted in the market, what does it mean? Cash. Spot. Okay. How many months contract? 6 months. Okay. What is the RF? Dividend is there or not there? There. Dividend is declared at the rate of how much? But the main point is declared today na after 3 months. Now you tell me. Full how much? Full contract how much? 6 months. I am declaring after the period of futures contract or within the period. Any dividend declared post the futures contract period, mela over, there is no impact on the prices. Any dividend declared during the life of the futures will affect the futures prices. Will affect the same in the options chapter also it will come. How call options are affected by dividend, how put options are affected by dividends. Ade I am telling you this time expected question, because reason I will tell you. Last 5 6 RTPs, MTPs, study material, nowhere a question is there on that. Nowhere. Dividend with options, nowhere question is there. So they will test the student because theory is there. On that basis, in my book I kept 3 questions on that. How they can CFA from their own I have taken, but similar questions only can be tested in the exam. In that one question I kept to 2 times dividend payment also, not 1 time. Okay. Here in this question you tell me first point number 1. What is a yes? What is a yes? What is a F? We have to calculate. What is a RF? D. D is 2.5 future value of dividend, present value of future. We have to calculate 3 months discounted price for that. Listening everyone? Shall we do it together? Write down, sir. Step 1. Calculation of PVD. Calculation of PVD. PVD equal to D into E power minus TRF. Do you know minus TRF means 1 by discounting? Okay. D by E power TRF. Dividend how much, sir? Divided by T, 3 by 12. RF 1 2. 2.5 divided by E power 0.03. 2.5 divided by E 1.0305. Value 4 to 6. What is 2.4 to 6? Can you please tell me? Tell me now. What is the formula? Step 2. F. F equal to S minus PVD into E power TRF. Tell me. S how much? 40 minus PVD into E power 6 by 12 into 0.12. 40 minus 2.4 to 6. 57. Okay, round it off to 57 into 1.0618. You can believe me in these numbers. You can calculate at home. 90 into 100 shares ki he entered. Contract la 100 are there. So totally 3990. Don't just copy. Everyone understood or not? I'm doing very fast because if you understand, we can do fastly and we can go to next concept. Completed? Next issue. Next question. I will give you one question for working in the class. Do that. The RTP question, not tested till now. Old RTP, I mean 5-6 years. 2016-17 time RTP. Read question number 9. I want every one of you do that. Time given is 3 minutes. Question number 9. Suppose that there is a futures contract on a share presently trading at 1000. Life of futures contract 90 days. During this time, company will pay 7.5 in 30 days, 8.5 in 60 days, 9 in 90 days. Super question. RF 12%. Find the fair futures price. Start. Uh, 360 days you should take. Per annum take 360 days. How many times you have to calculate dividend? PVD. PVD 1, PVD 2 and PVD 3. 3 times you have to calculate. And different T's will come every time. One time 30 by 360 will come, another time 60 by 360, third time 90 by 360. days. I don't think so. I didn't hear that answer, that's why. I also don't know exact answer, but that's not the answer. Anyone calculated? 919 will not come. Futures will be more than spot. That is correct. Perfect. Completed, everyone? Completed? What is the answer you got, everyone? Sir, first tell me what are the PVD 1, 2, 3 values? PVD 1 first value? 7.43. Next? Where you are going wrong here? See here, this is the answer. How many of you got these answers? 3 answers. Super. Completed? So 3 answers have you got, everyone? Tell me, what is the formula? S minus. What is the S? 1000. 1000 minus these 3 into e power TRF. The final answer looks like this. See there. For that also you are taking 30 days. That is 90 days contract. Okay. Have you got the answer? 1005.26, everyone. What is 1005.26 and what is 1000? 1000 is a spot price, 1005 is a futures price for the same share. Understood? Shall I go to the next one? So this is a good question found in the RTP, which is on multiple PVD calculation. Next. And another question let us do. We don't have time, sir, please, I can't wait. Let's see the 8th one. Take 8th question. See there. A Limited provides a dividend yield of how much? 4%. Current value of the stock is 500. Compounded rate is 8%. What will be the value of 3 months futures contract? Tell me, this is a rupee term dividend, a yield. Tell the formula. F equal to S into E power T into RF minus D. Okay, what is RF? What is RF rate here? 8% minus 4%. Totally how much? 4%. What is the life of the contract? 3 months. Shall we do it together? Start. Question number 8. Tell me, F equal to S into E power T into RF minus D. What is the S? E power 3 by 12 into, what is the RF? 8%, 0.08 minus D 0. 500 into E power 1. E power 0.01. 500 into 1.005. 505.0. That's it. That's the answer. First thing, everyone tell me, have you all understood this calculation clearly? Yeah? Yes, done. Next. Come to the next slot. Next expected question for this attempt is convenience yield with contango and backwardation. Convenience yield with contango and backwardation. You know contango market, right? Illa. So, sir, okay, I will first explain contango backwardation fastly. Sir, please, slowly, don't decrease the standard of listening here. Listen. Let's complete. Next one is a contango and backwardation. Once I explain these 4 problems, I will make you to do. Directly say that we will go to the last area called as a hedging. The most important ones in the chapter. Once completed, I will also be happy that we completed a substantial portion. Okay. Please tell me, answer. Fatafat give the answer first. Futures market, there are some areas called as contango, backwardation and convenience yield. See here. 10 minutes is my discussion like previously, how I did. 10-15 minutes I will tell. After that problem will take 1 minute each. You will only solve study material questions, so you will solve. Okay. First, concepts we are going to learn. Number 1, CTC. Number 2, CY. Number 3, contango. Number 4, backwardation. Number 5, basis. Number 6, convergence. These are all the various terms. Tell all the words once. CTC, CY, contango, backwardation, basis, convergence. These are all the various areas which we are going to cover now. Okay. So what is CTC, what is a CY, what is contango, backwardation, basis and convergence? See here. Please see here. Now we need to understand what is the essence of this formula. Please tell me, what is F? Equal to S into TRF. E power TRF. I will ask a question first. I told you already. 10 minutes my discussion. After that you will do the problems. Please listen. Point number 1. F equal to S into E power TRF. Okay. Means what? F will be dependent on 2 things. Number 1, yes. Number 1, yes. Number 2, compounding element. Number 2, because we are dividing and multiplying. And compounding or discounting. Compounding will bring to past or take to future. That's why futures uses compounding. Number 1. Okay. S into E power TRF. So what is the meaning of this E power TRF? What is the logic behind this? Try to understand. Once again, always E power TRF represents interest cost. That's why RF is a interest rate. T into RF means that particular periodical interest rate. Now you tell me, if a particular share is available today at 100, futures market also it is available at same 100. You wanted to sell at a price in future. I repeat one last time, listen carefully. I wanted to sell a share in future. I have two options. Buy in the future and sell immediately. Buy today, hold it for 6 months and sell in the future. What I said, repeat. What I said, repeat, I said everything. I wanted to sell a share. Today na in future. How I will sell a share? I have two options now. Option number one, buy a share, hold it for 6 months, sell after the 6 months. Okay. Next, second one, buy a share not today, buy a share after 6 months, immediately sell. Immediately sell. Selling price is already locked. 120 rupees I will sell. How much price? 120. How much price? 120. Tell me, today spot is traded at 100. Futures for 6 months is also traded at 100. Now use common sense and tell me, spot law what is the price? 100. Futures? Tell me, spot law what you have to do? Buy today na in future? Spot law you have to buy today na in future? Buy today at what price? 100. Answer? 100. Hold it for? Ante for 6 months period you are losing an interest or not? Answer, sir. Then tell me, you will go for futures or you will go for options? Sorry, you will go for spot. Futures or spot? Tell me, what is the advantage of going for futures? I can escape all the interest cost. Directly I will buy at what price? 100, sell at 120, 20 gain. Understood? Tell me, if I buy today, what is the disadvantage? Start. If I buy today, what is the disadvantage? Start. If I buy today, I should buy and put my money. How much I should put? 100. Hold it for? 6 months period, what I am losing? Interest. What I am losing? Interest I am losing. For how many months? 6 months. Understood the point or not? That all 6 months interest, whatever I am losing, I can escape if I go to? Answer, sir. Start again from the last time. Tell me, if I buy a share, sir, target selling price is fixed already. At what price I am ready to sell? I entered into contract with him. He said, I will buy at 120. Agreement entered, everything is locked, done. Selling is done. What is remaining now? First to sell, I should buy. Where to buy is a question now. Listening? Selling is already decided. Now buying has to be decided. Tell me, what price I should buy? I should buy at some price. Correct or not? I went into two markets. I saw spot la 100, futures la 100. Which one will you choose? Why? If I buy in the spot, I should put money first. On that, what is lost? Interest is lost for 6 months period. All this I can escape if I can buy or not. Now tell me, if really this is a situation going on, entire India will sell in future only by buying in, not in? Economical imbalance will come or not. Therefore, they priced futures in such a way that it should be the spot compounded with the interest cost. Understood the point clearly? Yeah. That's why what is a F? It's not 100, it will be 105. It will be 105. Say 10% is the interest, 6 months ki 5 rupees. Exponential you leave off. Understand it normally. Understood the point clearly? Yeah. Tell me, if interest cost is 10% for 1 year, 6 months ki 5%. Forget about exponential discounting and compounding. Listening everyone. Tell me, if I buy in spot, tell me, what I have to incur? Interest. How much interest? 5 rupee. Means in by the time I am selling, what is my net cost? Answer. Therefore, today, futures for 6 months will be traded at that 105. Such that indifference will come. What will come? Indifference will come. Whether to buy at spot and do or whether to buy in futures, both will be same. Therefore, no one instrument intentionally should not get any advantage. Listening or not everyone? This is the concept behind. Everyone understood or not? Tell me. Futures are priced in such a way. Everyone repeat. Futures are priced in such a way that it will be equal to spot compounded to future. Spot compounded to future with what rates? Interest rates. With what rates? E power TRF is nothing but the financing cost. Which cost? Financing cost will be incurred when you enter into which market? Spot market. You can escape that in the futures market. Tell me, interest cost is a advantage to futures or disadvantage to futures? And escaping the interest payment will be there in futures or will be there in spot? Again, listen. You are not putting here. Some words are going, some words are otherwise going. Listen again. Interest cost, financing cost is a cost incurred while you buy in spot or while you buy in futures? Spot only it will be there, correct or not? It will not be there in? Now tell me, that means it's an advantage of having a future, interest cost point of view, disadvantage. That's why it is added always. That's why yes plus that future cost we are doing. That's why 1000 becomes 1005. Listening or not, everyone? But there is a disadvantage also. If the share you are holding gives a dividend, who will receive? Futures contract person will receive, or really who bought the share will receive? Who bought the share will only receive the dividend. That means it's an advantage of having a future, dividend point of view, disadvantage. That's why dividend is reduced. Minus PVD you will do. Are you understand? Understood the concept clearly? Yeah. 1000 times better I can explain if time is there. But the point is we have a constraint of time. Therefore I am first wiping all the concepts very, very fast pace. Understood the concept clearly? Yeah. Now answer my question properly. Point number 1. How much is the spot price? 100. Futures also 100. People will go to futures. Therefore futures should not be priced like that. It should be priced in such a way that it should be the spot compounded to future. Is the concept. But what will come in the meanwhile? Dividend. But the dividend will come only to whom? Person having a share, not a contract to buy a share. Therefore, that's a disadvantage of having a future. Therefore, they will reduce that. Advantage of future is interest, no interest. Add that. Yes, plus, that's why it will come. Listening or not, everyone? Is the concept. Now the final touch. The main concept for today. What is the concept? CTC. What is CTC? Cost to carry. How it look like, how it works, let's try to understand. See here. CTC, whenever stocks are involved, the only cost of a share is interest cost. Only income from a share is dividend. Only cost is? Only income is? But when it comes to commodity, there are not one cost, there are so many costs involved. For example, if I have a wheat bag, 1000 wheat bags I have commodity. Wheat is one of the most traded commodity on the markets. Yes or no? India, from normal person to a diabetic patient, every single day, people are having pulka, chapati, roti, naan, butter naan, tandoori naan, garlic naan. Yes or no? So they will call naan, but it is everywhere. So the point is that wheat is such a commodity which India-wide it is having a highest market. Correct or not? Highest market share after paddy. Therefore, what is happening throughout India, it is very popular. Saleable commodity on commodity segment in MCX. There is one separate exchange in India, MCX, multi-commodities exchange for the stock exchange. Yes or no? You can sell red chilies. You can sell green chilies. Why chilies I am taking? From my place. Okay, in Andhra Pradesh there is one popular place called Guntur. Extremely popular, Guntur Karam movie type. So, Guntur chili is extremely popular. Red chili is extremely popular. Tobacco, ITC main headquarters is there in Guntur. So, that's popular. That place is popular for tobacco. Tobacco is traded on MCX. That place is popular for chilies, mirchi. Guntur mirchi is extremely popular. That is also available. Why? People are doing MCX trade in Guntur. Extremely popular. Listening or not? Do you know Reliance has a link with MCX now. Reliance started Reliance Godowns now. Which Godown? Reliance Godown. Do you know what is the name of the Godown? Smart Godown. Yellow color it will be written. Smart Godown. Reliance Smart Godown. Do you know what is it? MCX traded goods all will be kept in that cold storage. That's an entirely different story. Commodity practical discussion we can do that, not the time. But there is a market separately in India which can trade on commodities. Are you understanding or not? They are doing thousands and crores of rupees in Guntur. in the form of mirchi, because 70% of the total mirchi comes from Guntur for India. So, like that, tobacco also produced heavily in Guntur. Like that, there are so many places. There is one place in Andhra Pradesh called as a Bhimvaram, from where I belong to. That place is very, very popular for shrimp. 70% of the India shrimp comes from that place. You can search in Google also, no problem. Okay, 70% of the shrimp. Shrimp means prawns. Now people understood. Shrimp means what? So all these will come from that particular place. Very, very popular. Those are all doing the MCX export now. So commodities, there is a huge market in India. There is a separate stock exchange for that called as a MCX, Multi Commodities Exchange. When I use the word multi, itself means there is not one commodity. So many commodities, that the metals are there, iron is there, bauxite is there, manganese is there. Everything is getting, crude oil is there, gold is there, silver is there, copper, bronze, all Olympic medals are there. In one place, you can manufacture and wear. So the main point we have to understand is commodities is a segment now. See here, whenever I say commodity, commodity will first have finance cost. Aditya, you will read always in CA Inter materials chapter, ordering cost, inventory carrying cost, interest cost, holding cost. Okay, done. I understood what you wanted to tell silently. You tell your subject and go. Don't discuss about Inter here. So first one is what cost? Financing cost. Next one will be, tell me, insurance cost. Next one will be carrying cost. Next one will be storage cost. Next one will be maintenance cost. Like that, so many nonsense costs will be there when you have a commodity. Correct or not, everyone? Now you please answer me. Everyone please answer me. These all costs will be there if you hold the stock physically today, hold the stock in futures and sell directly. Physically, if you have the stock, I mean, for example, I have a contract. That contract paper should be kept in a godown, cold storage. No, not needed. That means in which contract, where only these costs will be incurred? Babu, chitti, answer faster. When you will incur all those? When you purchase the wheat bags in futures or spot? Spot only you will incur all these things. Am I correct or not? So therefore the point is, tell me, F equal to yes. Futures, you are escaping all these costs, you are paying all these costs, futures. And you are having an advantage or disadvantage? Advantage is always a plus or minus. That's why plus CTC. That's how the formula came. Understood the point clearly or not? So S plus CTC. Now answer my question. Answer my question once. Tell me, stock will give dividend. Wheat bag will give dividend. Dividend will be there, wheat bag. Answer, everyone. Wheat bag will give dividend. So that means wheat bag will have interest income, dividend income. Incomes will be there. Yes, will be there. That is the convenience yield. They convenience yield. Sir, what is this convenience yield, sir? I will give you one example. Again. See here. Not working, nice. If I take extra one day class, will you come? Yes, sir. Really? Yes, sir. I'll ask them then, definitely. 1000% I'll ask. Today only I'll ask. I think you have an audit class after this. You are going in the audit. Huh? Sunday? No class, huh? Means tomorrow no class. Day after tomorrow no class. Then we will have. Sir, okay. If you wanted to come, I'm not doing any pressure. I will ask them if this room or anything is available, definitely I will have. Even I wanted to take much more points only. Sir, okay. See there. Diagrammatic presentation of convenience yield. How many of you attending for the audit? Let me know the strength. Almost everyone then. How many of you are not going? Is it correct? Very good. Sorry. See there. Diagrammatic presentation of convenience yield. Let us see how the convenience yield concept actually works. Okay. Please see there. The diagram will give you a correct opinion on how this convenience yield actually work. See the screen. 5 minutes will complete, we'll do the problems on this. See that. Wheat bags will give dividend. If that the question is there, yes, it will give. But don't call it dividend, call it convenience yield. Call it convenience yield. This diagram will give you an idea about how to understand the commodities in futures. See that. Months also I have given there. Start left to right because time can't go back. Like this only you should see. Tell me, what is this? Month 0 and today. This is month. This is month. Expiry date 6 months after. Stocks are commodity. Commodity. Very clear, be specific. Commodities are important for exam. Okay. Next, what happened? I am a farmer. Farming wheat. Harvest is a wheat for me. Wheat bags, I have a 25 acres of land. I will get around 10,000 to 15,000 bags of wheat every year as a produce. Okay. See the screen once, please. Participate, answer properly. I entered into contract today with Ashirwad Atta Company. That I will, why you are laughing here? Seriously, like that only they will enter. Or else they can't get it at a cheaper cost. They will enter into contract with the farmlands 1 year in advance. They will write all the agreements. This entire land, whatever wheat harvest comes, you should give to me. And Ashirwad Atta person will have farming and harvesting. He don't have anything. Like me, like you, one farmer will do, they will buy from him. Listening, Ashirwad Atta, some Atta, some company. This fellow entered into a contract. I am the farmer, let's say. I am the farmer farming wheat in my agricultural land. I will produce thousands of wheat bags. Ashirwad Atta came to me and said, Koushik Mukhesh, can you please sell me 1,000 wheat bags 6 months after? Now I have the stock. 6 months after I will come below our reorder level I want from you. Give one good price, they said. Price is going on in the market at 1250, 1300. I said I will give it 1,000 rupees. Listening, tell me. Today I contracted, I gave wheat bags. Contracted through physical form MCX. MCX entered into contract. Ashirwad entered, I also entered. Both of us entered into contract, lock. 1,000 rupees ke locked. Contract details, contract sheet, agreements, all these things are executed by MCX in 11 days. How many days? 11 days. It's 11 days. Generally, stocks ki settlement will be T+2. Futures, commodities ki T+11. Because physical delivery is there. And physical delivery is not through demat account. Wheat will be sent to demat account. From phone wheat will fall. Are you understanding or not? So therefore, obviously commodities has to be delivered physically. You have to go and give. Which place, who will come, delivery will be taken in which form, money will be all these are entered into the agreement. 11 days, T+11 days, execution will be done. MCX will send a message to you. Let's understand now. From here the story will start. Month 0, what happened? Read properly. Date of entering into the futures sell contract, not contract, futures sell contract. At what price? 1,000 per bag. This was entered when? Today. For a transaction to happen at a 6 months date. Done. Everything is settled as of now. I felt very happy. For producing this, it will cost me 400, 450 rupees. I am selling at 1,000. I am getting a 500 profit per bag. And he is also getting a lower price. Both of us are happy. Win-win concept. Up to there, everything is okay. Suddenly, 1 month after, Government of India said that there are monsoons are very bad in this year. Monsoon which has to come in the month of June, it is going to come in the month of October. Or it is going to come in the month of September. Bad monsoons are there. Weatherman forecast will be there. He said that there are no monsoons in India today. I mean in the next 2-3 months. The moment that message goes into the market, futures market, do you know what will happen? Supply shock. That's how tomato prices will suddenly rise in India. Onion prices suddenly shoot up in India. Price will be 25-30 rupees per kg will go to 300 rupees. Have you saw that or not? Onion prices, tomato prices, oil prices, how they will increase? All of a sudden, supply shock is there, na? Prices will shoot up because population is more, supply is less. Okay, so the point is, wheat is a essential consumable at every house or not? Immediately what will happen? The moment supply shock information comes to the market. When supply shock started? When this message came? Today na after 1 month? Loudly. After 1 month, supply shock came. Each wheat bag price came from 1000 to 2500. It increased. Listening everyone? And the message is that this supply shock will continue for another 2 months. Means everything is happening after my contract period or within my contract. Tell me now, what is my total contract period? Shock started after 1 month, continued for another how many months? 2 months. After that again it will be settled. This is the great day for me. Immediately what I will do? I will enter into contract. 1 month after supply shock came, prices shooted up to 2500. Immediately all my 1000 wheat bags to some person will sell at 2500. Sir, you have a contract. Contract is not for today. After 6 months, at that time I will again rebuy and I will sell to him. Are you understanding or not? Whatever 1000 wheat bags I have, immediately I sold everything. Everything at what price? Loudly. This advantage you will get if you have a futures buyer already with stock. I don't have wheat bags. Can I get that advantage? Who will get this advantage? Who really have the commodities with them will have the advantage. You are seeing disadvantage of having wheat bag, but I am telling the advantage of having a wheat bag. Clear everyone? Now immediately supply shock came. Price raised to how much? Loudly. I sold all the wheat bags at 2500. Bumper profit, abnormal profits I made. But this will continue forever, for some time. Again market becomes normal and became to 950. Even then I am very happy. I can buy at 950 now. Listening or not? Price again settled to 950. I bought all 1000 wheat bags from some other person at 950 at the prevailing market price. Sell at 1000 and the futures contract. I got a bumper gain. This gain you are getting because of having a stock, not just having a contract, is called as a convenience yield. Which yield? Convenience yield. Loudly? Convenience yield. Because of this convenience yield, I will get when I have a futures contract or when I have spot. Bags in spot or bags in future will give me this convenience yield. That's why it's an advantage of having a future, a disadvantage. That's why minus CY they will do. Are you understanding the entire concept clearly? That's how the formula came. Tell me, what is F? F equal to S plus CTC minus CY. Tell me, have you understood up to here clearly or not? Everyone? Hello? S plus CTC CY, everyone understood? Final touch. Sir, what is this contango backwardation? All are related to this concept. Okay? See here once. 2 minutes discussion. Sir, if you understand and do, I will tell you one point. 1 second. Share market, shares, mutual funds, all these 6 chapters, whatever we completed. Even if you don't understand the logic, problems at least can be done. But futures, options, derivatives, swaps, interest rates and forex, all these, if you understand logic only, then only problems can be solved. Do you understand? That's why if without concept, if you do forex chapter, you will get mental. You will write one thing, answer will be exactly reverse. Then student will remember, I will do one thing that will be exactly wrong, reverse will be right. Like this great Tejasvi log hai apne paas. So, they, like that also people are thinking. They will think one rate. We will get ask of some dollar by rupee. Yeah, definitely my answer will be wrong. Exactly reverse is there. Therefore they will think, okay, I got asked means the guarantee answer will be bid. They will read bid of a rupee by dollar, something like that. Why? This is all because of lacking of that basics. Like that here also. What is CY? What is CTC? If you don't understand, if a twist question comes, what will happen? CA becomes come again. Shall we continue? See here now. This is timeline. Listen. Time. Price. Please answer my question. Not working. Okay. See here now. Price. Time. Look at the scenario. Price, time and price. Futures price. Okay. Futures or spot price. Anything. Any price. Please listen carefully. First observation. F equal to final formula. CTC minus CY. Sometimes convenience yield will be so big that it crosses CTC also. Sometimes convenience yield will be so big that it crosses CTC also. Do you know what will happen? F will be lesser than S. That situation a backwardation. Markets are running on the backside. Generally future should be more valuable than spot. Spot becomes more valuable than future. Listening or not? Do you know when it will happen? If convenience yield is more in the spot. Supply shock time lo people love to be in spot market or futures market. Answer sir. Spot lone they will like to do. Correct or not? Therefore spot will have more value than futures at that time. Okay. So now see here. First market is what market? Contango. Please see the screen. Meaning I will tell you. Dot also has a meaning. Shall we? See here now. This line, below line is called as a spot. It is future. Spot, future. How to understand this? See here. On a particular day, spot price is 100, futures price is 105. Spot price is 95. Example, futures, spot price is 120, futures price is 135. Again not working. Okay. See here now. Please see the screen. On a particular day, spot is here 100, futures 105. Okay, futures 105. Spot is here, futures is here. Now you tell me, who is greater than whom? Futures is greater than spot. This market is called as what market? Contango market. Sometimes futures is at 195, spot is in 100. What this market is? In this market what will be there? In this market what will be there? Loudly. In this market, first market, a convenience yield will be there or will not be there? Will be there, but it is not dominating the CTC. May be there, may not be there, but it is not dominating the CTC. Second case law, what is happening? CTC is so big that it is dominating the cost of carrying as well. Are you understanding the concept or not? If CY dominates the CTC, if CY dominates the CTC, markets will turn into backwardation market. But you should tell, in our example, wheat bag example, supply shock resulted in the profit. What resulted? Supply shock. Supply shock will be there throughout the life, only for 3 months. That's why markets, even though they are backwardation process, they will again become contango once the convenience yield is exhausted. That means permanently what only will be there? Contango will be there. But sometimes what will happen? Market becomes backwardation, again it will settle to contango. Onion prices will suddenly increase in India. Last 6 years, 3 times onion prices raised like anything and fall. 1 kg is 35-40 rupees, suddenly become 200-250. But there it will not stay for so long. 1 month or 2 months or 1.5 months it will stay. Again government will release lot of onion production, again it will come to 35-40. A peak time who is taking advantage is a person enjoying the backwardation market. Understood the point clearly or not, everyone in the class? This is the concept here. First tell me, what is contango market? Futures more than spot. Next, what is backwardation? Spot more than futures. Spot more than futures. Basis is a concept of S minus F. S minus F. Basis negative is a contango market. Basis positive is a backwardation market. Basis positive is a backwardation market. Whatever concepts I wanted to tell, I told you now. Tell me, what do you mean by convenience yield? Again silence. What do you mean by convenience yield? It is the cash flow advantage. It is the cash flow advantage because of holding the commodity or holding the futures contract on commodity. Holding the commodity, not the contract on commodity. Understood or not? Okay. What is CTC? Not full form. What is CTC? It is the cash outflow. It is the cash outflow because of having a futures contract, because of having a commodity. Now you tell me, I will listen. What is CTC? It is a cash flow disadvantage. It is a cash flow disadvantage of having a commodity. Next, convenience yield. It is a cash flow advantage because of having a commodity. Now tell me, CTC is a spot advantage or spot disadvantage? Futures advantage. Therefore add. Convenience yield is a cash advantage but futures disadvantage. Therefore deduct. That's why formula came as S plus CTC minus CY. Everyone understood the concept clearly? Yeah. That's how the futures contract F equal to S plus CTC minus CY, all these concepts started. Basic, this like this I can tell in the time available, or else we can do lot of research and analysis on that. That's not the time to do. At least understood the concept of contango backwardation. Basis. What is the basis? S minus F. S minus F, negative contango, positive backwardation market. Backwardation permanently a particular stock will stay or it will again come back. Understood the point clearly? Last stock, convergence, very very important for hedging in futures. You must know this. And I will tell you one point. Do you know one chapter called as currency options and currency futures? One nightmare is there in our syllabus. Which one? Currency options and currency futures. I will explain 3 problems on currency options and futures when we come to that. Life again you will not find difficult with that chapters. Anta easy chapters they are. We made them like that. We always try to scare and we will get scared. That's it. Really very very easy chapter. One small concept will be there. If you understand that, easy. When we come to the Forex, I will first deal with currency options and futures only. Okay, revision I can go in any pattern. Okay, so now tell me, their convergence is used. That's why I brought this concept. What will be there? Convergence. If you have a doubt, do currency options and futures. There will be a convergence of foreign exchange rate there. How, why, when, what, all these things we will see when we come to the currency options and futures. First answer to my point. Point number 1. We are doing convergence. What is this convergence? This point a convergence. A place where futures and spot meet is called as, loudly, a place where futures and spot meet is called as. That's why people draw the chart originally in this way. I just to show you for understanding sake, they will write the chart this way. Such that this point is called as what? Convergence. If you want, you write this chart. This is more meaningful. For example sake, I have written that. This is more meaningful. Okay, you tell, I will write. Let's revise and write down. This market is called as what market? F is more than S. Next, this market is called as a backwardation market. Next, here basis is S minus F being negative. Next, here basis is S minus F positive. Here you should tell this, CTC more than CY, CY more than CTC. CY here, CY more than CTC. Understood? Next, after that, Futures will be more than spot. Next, spot will be more than futures. Both concepts, one thing will be there commonly. What is it? Convergence. Convergence means a place where spot and futures will meet. Why they will meet is a question. Why? Price of futures and spot will be same. Do you know why? Common sense. See here. One second. F equal to formula, tell me, S into e power TRF. RTF or TRF, anything is okay. S into e power TRF. Listening, sir, everyone? It is a, see here, timeline I am drawing. 3 months before, 2 months before, 1 month before, expiry date. You tell me, I will write. Okay? S equal to 100. E value is 1.0305. Okay? Tell me F. Sir, some are not in this world. Take seriously, sir. It's the last opportunity for you to learn. Tell me, what will be the F? S into e power TRF. E power TRF also I have given you directly. Tell the value. 103.05. Up to here, understood? Spot price will be same every day. Will change? Will change. 2 months after, S became 107. E is 1.0202. 2 months only. Tell me, what is a F value? 16? Okay, next. 1 month after, S became 103. E is 1.01005. What is F? Loudly. 104.03. Okay. Expiry date, you tell me, S is standing at 104. E is, you tell me, e power TRF kada? E power TRF. E power time. Is there any future time? Expiry date today means a future there or not there? So 0 into some RF percent 12. E power 0 means how much? 1. So E is how much? 1. So F equal to S into 1 how much? 1. Therefore futures and spot will be same on maturity date. Understood the point clearly or not? That's why always on convergence, expiry date, F and S will match together because there is no future on that day. Future is dying that day. Listening? These are all the various concepts in this particular futures. On this they are asking problems in exam. That's why we are not finding anywhere in the question banks like that. Why? Reason is they are not frequently asked but they are asked. Okay. Take question number 11 in that book. Or we will do good question directly. Oh, sorry. Okay, that's good question only. 11. You see this 11th question. These are all commodity futures questions taken from RTP, MTP and study material. Shall we do it together? I will help you. You will do. Not just nodding the head. See there. First point number 1. Read the contract question. You have entered into sale of 1 gold futures contract to sell 1 kg gold at 9,60,000. Old question. Kg 9,60,000. First I will stop the class and go and buy. Kg really if it is available at 9,60,000. That much old question I have taken. The 97, 98 question. Concept is same. Okay, na? You add another 0 for psychological satisfaction. Tell me. You have entered into sale of 1 gold futures contract to sell how many kgs? 1 kg of gold at how much price? 9,60,000. Contract has how much time to expire? 6 months. Gold is now trading at 9350 for 10 grams. Now don't ask how many grams makes a kg. Tell me now. How many makes a ton? How many makes a ton? How many makes a metric ton? How many makes a metric ton? Shall I tell you what is your idea? Ton, 1000. Metric ton. That means at least I should add another 1 0. Metric means a measurement. Ton, metric ton both are same. Now metric ton. Metric ton. This much sounding is there means minimum 1 0 should be added. Metric means measurement. Metrics means what? Measuring. Measuring tons. Metric kgs means 10,000 kgs illa. Metric kg means measuring kgs. Do nice analysis. Because if you go into MCX website, you will see all these metric tons they will write, metric kgs, metric liters they will write. Metric means measurements. That's why at least go to website and see BSc and SC. Read the question, sir. Please. Read the question. Now you tell me, 6 months storage and risk-free cost is how much? Cost. Next, how much? 5%. Storage cost is 0.2. Next, risk-free rate is 5%. Okay, 6 months storage cost and risk-free rate. Now tell me, I have how many costs now? 1 cost or 2 costs? Babu, listen. I have 1 cost or 2 costs? 2 costs. One interest cost, risk-free rate. Second one is the storage cost. Storage cost given in rupee terms or percentage? My total cost is 5 or 5.2? 5.2. Adi for how many months? 6 months. Therefore, it will be 0.026. 0. This is a stock, commodity. Commodity, always you should use which model? CTC. What is the formula? F equal to S plus CTC. Start doing. F equal to S plus CTC. First, write down below. CTC calculation. CTC calculation. Underline. Below write down. S into, bracket open. S into, bracket open. I told you the formula. E power TRF minus 1. Tell me now. Calculate and tell the answer. Yes, how much? Yes, how much? 9? 9350. Or take 9,35,000. Directly take 9,35,000 into E power. Take properly 6 by 12 into 0. Gold? 9,60,000 is a futures price. F equal to S into. Now what we have to tell, whether traded futures price and actual whatever we calculated both are matching or not, we are going to comment. Did you understand the question? They have given traded actual futures price. Now we will calculate fair futures price. Whether fair and actual are same or not, we have to comment. Listening? That's why they have given that price. 9,35,000 into E power 6 by 12 into 0.052 minus 1. First calculate for E power 0.026. E power 0.026, 0.052, 5 plus 0.2, 5.2. That's why 0.6 months means 0.052 divided by 6, divided by 2. It becomes 0.026. 6 months ki 0.052, half year ki half. Did you understand what to do, everyone? Perfect, correct. See here, see the answer. Which question we are doing? 11th. See here. See here, calculation of CTC. Did you now understand how to calculate CTC? Like this CTC calculation has to be made. So now you are calculating cost separately, spot ki then you will add. 245 is for 10 grams. 1 kg it will become 24,591. Okay, ma? Hello, sir, we don't have that much time. I expected you will do in 2-3 minutes. Have you done or not? Understood? Tell me. Here, what is the total price? 9,59,591. And almost with the 300-400 rupee difference. Futures are exactly matched to the what we calculated or not? That means futures are fairly priced. Futures are fairly priced. What it should be and what it is, both are same. There is no chance of arbitrage. Understood? Next. What is the next one? Next question let us do. Now some dangerous questions will come. Be extremely careful. We are going to do convenience yield questions. Take question number 12. On April 11th, the cash market price of gold was 5,000 for 10 grams. Futures contract expiring on December 25 was trading at 4,500. Annualized financing cost is 12%. Storage cost is 0.5 per month. Calculate carrying cost and implicit convenience yield. In this case, if you don't know formula for CTC, what you will do? You will leave the question ante. If nothing is asked, futures ki spot ki difference you will take as a CTC. Separately, he is asking us to calculate here. RTB question. First tell me one by one, point by point. First one. What is the spot price of the gold? Futures price? Pakka contango market, backwardation market. Backwardation market. Futures are lesser than spot. And the answer la hint is given now. Convenience yield is there, pakka. And that convenience yield will be more than CTC. That is also pakka. Okay, na? How many months contract? How many months contract? Days lo you should count. April 11th it started. Futures is always working on daily count. Understood? That's why we call it, even interest rate swaps also there is one concept called as a day count convention. Do. Do this. April 11th. Doubt will come now. Everyone will get doubt. April 11th to be included, not to be included. Other doubt? You should never get a doubt. Which chapter you are doing? April 11th is not a future for April 11. Okay? What you are calculating? What you are calculating? You have to calculate CTC first. What you have to calculate? CTC. Balancing figure will be CY. Okay? First answer to my question. How many days are there? Future days. 260? You should not take April 11th. Reason? We are doing which chapter? Futures. Futures means present is not a future. Correct? So for April 11th, from when future will start? 12th onward. Therefore that only you should take. Common sense and nothing great required to do this. So we are doing futures time only you should take. How many days you got? 264 by 365. Correct or not? Now I ask a question, tell me. How much is the annualized financing cost? 12. Annualized storage cost? 0.5 is per month. You should calculate for per annum first. 0.5 into 12. 6%. 6 plus 12, how much? 18. 0.18 into 264 by 365. See the answer. See the answer. CTC equal to S into E power TRF minus 1. 5000 into 264 by 365 into 18% minus 1. It will come to 5000 into 0.1302 minus 1. 697 is the CTC. I think you understood the valuation of CTC. You are telling yes and not doing other problem. Now CY. F equal to 4500 equal to S 5000 plus 697 minus CY. CY equal to 1197. So tell me, what is CTC? 697. But what is CY? 1197. Means CTC, CY is dominating the CTC. Backwardation or contango? Backwardation. Base is negative, positive. Positive basis will be there. F is less than S. I will give you one question. Will you do? Yes, study material open. Then only you will get confidence. Open the study mat once. Study material. Which one? Ninth. Ninth is on hedging. I think they missed that question now. They didn't give. Sir, okay, take this question. Study material, it used to be there. That question also they removed. That means they are going to ask all those questions. Other sadism. 14, 15 is your work now. Do that and leave. 14 and 15. If you do that, we are only having a 1 hour discussion. Next session we will first put that, like today's session, hedging is there. Okay? So do this area. 14, 15, do and leave. Spot price 10,000 per ton, futures price 10,800 per ton for 1 year. RF 12%, present value of storage cost 500. What is the present value of copper scrap? What is the adjustment you will give for present value of storage cost? What you have to do with the storage cost? Did you understand the point? Storage cost, present value of storage cost, present value of storage cost. Correct? Now tell me what you will do. Add to the spot price directly. Add to the spot price directly. You will incur the financing cost not just on the spot price with the storage cost you will incur. Listening? What is the spot price? Now it become 10,500. Did you understand what I said? Again I repeat, tell me, what is the spot price? Answer. What is the present value of storage cost? Tell me, present value of dividend, what you will do? Hey, present value of dividend, what you will do? And therefore present value of cost you will add. Understood? Start doing. Revised spot price you calculate first. Revised spot price 10,000 plus 500. 10,500. Okay? Or else I will also do along with you. Tell the answer. Help me with the numbers, that's it, nothing needed. Tell me. F equal to, what is the formula? S plus CTC minus CY. What is the revised spot price? 10,500. Okay. Shall we do it, everyone? Contract life is how many years, sir? 1 year. Start. First CTC calculation. S into e power TRF minus 1. Tell me, what is a S? 10,500. E power 1 into, what is RF? 0.12 minus 1. 10,500 into 1.17 minus 1. 10,500 into 0.1275. 11,000 1,338 0.75 sorry 339. 1,339. What is 1,339? Answer? CTC. Next, F equal to S plus CTC minus CY. What is a S? 10,500 plus 1,339 minus CY. What is the F value given already? 10,000? Tell me what is the CY? 10,800? 1,039. Tell me, this convenience yield I will get today na in future? In future. Present value he is asking. Present value of convenience yield is 1039 divided by 1.1275. 920 point. That's all. If you want answers, see here. Exact answer. How much? 1339. Okay. Next, I want you to answer the next bit here. Please do the 15th one. Do it and go. Next batch. వచ్చేసారా? అందరూ వచ్చేసారా? ఉండమని అయితే. Fast, fast. Do it fast. Do it everyone fast. What is the E factor that you are getting? E. 8.5% and 1.085. See here, this is the answer. Check for your answers. Nothing will happen. These are more dangerous than that. Future. See how symbolism is there. Nature also reacts to you. Future. Future chapter, future is seen. Yes. No, rate they have given. Continuously compounding should be done with the 8.5 they are saying. Exponential you should do. Not O actually. They give rate, exponential value you should calculate. Everyone done with the answer? Sir, understood? 70% over. Balance 30% is that also I will complete. Futures, there is one important area called as a hedging in futures. What in futures? Hedging. 5 problems we will do. 2 problems will be on basic hedging. Two problems will be on beta hedging, one problem on target beta hedging. That's it. Futures will be completed. Okay. So thank you very much. Meet you in the next class. So students, over the Zoom live, audio and visual is clear. So very good morning everyone. So in the today's session we are going to first start with the balance part of the futures that was left out. Once we complete the futures, then we will be going into the next area called as a forex. Okay, and then we will be going into the area called as options. So mainly first let us focus on the chapter futures and complete. Thereafter the most important one after this will be the chapter called as a forex. We will also complete that. Okay, so yesterday in the last part of the session we completed the concept of valuation under the futures. Along with the commodity futures also we have done the problems. So now hedging in futures is the next area we are going to start with. Hedging in futures, hedging with futures. So come to the concept, hedging with futures. So let me first explain how this concept actually works. See the screen once. From 21 problem till 30, all are on hedging. Means very frequently tested case in the examination will be hedging area. So in this 21 to 30 means 10 problems are there. In these 10 problems, at least 6 problems let us do in the class. Isn't it? So 6 problems if you do, you will get a clarity as to what do you mean by this hedging. So first, before we go into the concept, let me first explain. Hedging law, 3 kinds of questions will come. First one is a plain hedging. Next one is beta hedging. Second one is target beta. Third one is target beta hedging. These are the 3 types of questions they will ask in exam. Number 1 is a plain hedging question. 99% they don't ask in exam. It is there in the study material also. Same. See, this RAM buys. Same question will be there in study material. Okay, the plain hedging. Never they asked in the examination in the recent times. Very easy. Beta hedging. Frequently tested question. Very, very frequently. Target beta hedging. More frequent than the second one. So, last 8 question papers on futures law, 7 papers law we got hedging. Including last attempt. So you can imagine how much important it is. Last 8 papers containing futures, 7 papers has hedging in it. Different types of questions will come. Same question they don't ask. Different questions but hedging will come. So that much important this is. 8 plus 7 means you can imagine 90% of the paper on futures will be definitely from the hedging area. Understood? So let us understand how this hedging actually apply. What is the concept of hedging? Everything. See here. First one, what is hedging? Hedging is a concept of stop loss. Hedging represents a stop loss strategy. Simply to tell, hedging means risk coverage strategy. I mean risk coverage strategy. Hedging is not a profit making strategy. Hedging is a risk covering strategy. Simply to tell, it's a stop loss strategy. Which one? Which one? Which one? Hedging. Speculation. There are three players in any market. Number one, speculators, arbitrators, hedgers. Very popular three people. Speculator will take a position in one market only. Okay, second market like he don't even enter, takes position in one market and eventually may make either a gain or a loss. This is the first one. Arbitrator, how these people will enter into two markets. What happened? AI generated, huh? Sorry, I forgot what I am telling. Arbitrators. Arbitrators will enter into two markets simultaneously. One market and the second market. Two markets they will enter simultaneously and will surely make a gain out of market imperfection. Out of market imperfection. When markets are imperfect, immediately these people will jump into the market and makes a gain. Who? Arbitrators. Next one. Who is the next one? Hedgers. Hedgers will take position in two markets but not simultaneously. First enter into one market. This position becomes risky. To cover this risk, they will enter into second market for hedging. So even if you write or not write, first try to understand clearly. See the screen once. See. Hedging with futures. Read the content first. Who is the first fellow? Predominantly there are three players in any market, including futures market. They are as follows. Who is the first fellow? Speculator. Who is a speculator? A speculator will take position in one market only and ends up with a gain or ends up with a loss. Means he will take a position only in one market. I will give few super example. Yesterday in the class we did the futures questions or not? Futures question. First two questions you have done. 1345, 1390, profit or loss, margin added. Next question, loss, margin deducted. Correct or not? Pakka. He is a speculator. He entered into futures market, either ends up with a gain or ends up with a loss. Over, game over. Listening or not? Those kind of persons are called as speculators. Arbitrators I didn't teach you in the class because very rarely tested in exam. I don't want to waste the time now. So directly I came to the hedging. Listening. Hedger is a person who will take two positions not simultaneously. First he will take position in one market. That one market will becoming dangerous for him. To cover that danger he will enter into another market for hedging. Full super example I will give you. You tell me. Foreign exchange chapter, do you know about the forward rates? Foreign exchange chapter, not interest rate risk management of forward rates. Bankers forward rate, yeah? Everyone know or not? Bankers forward rate will be given. Who will give the forward rate? Bank will give a forward rate. Correct? I will ask a question. Tell me, why forward rate? Why forward rate is needed? I imported. Why I will take a forward rate? Because after 3 months or 4 months when I am about to make my payment to the importer, exporter outside India, dollar rate can go up to 85, 90, 95. At that time my outflows will be very high. Correct or not? To cover the risk of raising dollar prices, we will enter into a forward rate agreement with the banker. Correct or not, everyone? Now answer my question clearly. Forward rate will be entered by the importer or exporter with a bank. I will ask a question. We will enter into a forward contract with a banker after making import and exporter, before making import exporter. Ante first we will enter into forward, next import export, or first import export, next bankers deal. First important, that's what I'm saying. Already you first entered into one transaction. The transaction now becoming dangerous. Then you will enter into hedging. Are you understanding or not? First we don't enter into hedging with banker and then you will not make import-export. Import-export you will make first. Amount of exposure is $1 lakh. Now you felt that dollar is rising every day. Immediately you need to lock the price or else you are gone. Now you will go for hedging with the bankers. That means hedging means simultaneously two positions no people will take. First they will enter into one position. They will take one position. That position, if they felt that there is a risk in that, they will give a stop loss. Listening or not everyone? This is the concept of speculators. Hedgers. Speculator, forget about the risk. Actually, he know that there is a risk and then only he will enter into the game. Okay? Arbitrators are different gameplay. I will do one thing. Once I complete hedging, two problems I will explain on arbitration. We will go into the next part. Arbitrage are not asked in examination in the recent times. Maybe tested in your attempt. I am not denying that. But I felt that hedging is more important than that. In the revision class I am taking it. Okay, now, if given in examination, the very next moment don't tag me. My point is, I felt that hedging is more difficult and important than hedging. Therefore, I am covering this on the revision part. Clear everyone? Shall we begin? So, why hedging is required in futures? Please see there. Futures is used as a tool for hedging. Okay, futures is used as a tool for hedging. Listen carefully. Futures ke hedging is not there. Futures are used for hedging. Did you understand or not? Futures la hedging is not there. Futures will be used as a tool for hedging. Actually, the main motive of futures to be brought into the world is hedging. People are doing everything with futures except hedging. For risk coverage, they brought this. Are you understanding or not? People brought it for risk coverage, but these people are using for Adi. So try to understand clearly. Government intention to bring potassium is to use it for good purposes, not to make human bombs. Are you understanding or not? Potassium was brought for fertilizers, but the same potassium is also used in making the bombs. So intention is different. I brought with one intention, you are using for another intention. Clear? So same, futures was originally brought with an intention that it will be used as a tool for hedging. People are using not as a tool for hedging, they are doing gambling on that. Clear? In India, futures a hedging concept, a little number of people will know. They don't implement it. How beautifully we can implement the futures hedging, let us see in the today's session. First point number 1, I will ask a question, fatafat give the answer. First, cash market, futures market. See here. Cash market means spot market. Okay? Now listen, see the screen. Cash market means futures are real stock market. Really, I bought the shares. I am a trader. I am a 30-day trader. Do you know who is a 30-day trader? Buy today, sell after 30 days. I am a 30-day trader. What I thought, see the screen. I bought the share. I predicted that price of the share will go up. And I bought the share such that I can sell the share at a higher price. But everything, if it goes as per plan, why it will become stock market? And that's life. What we expect may not happen. Therefore, like this, the moment I started buying, markets started falling. Okay? I bought at 100, price became 99.75, 99.12, 98.73. Like that every day, half a paisa, it is dropping down. On a bulk purchase, it's a great loss to the investor or not. 1.5 2 rupee loss and not a normal loss. It's abnormal because they will buy in lots of thousands. So, in my investment of 1 lakh, 20-30,000 is going in the form of loss. I wanted to protect myself against the loss now. What to do? See the screen. Point. Tell me, which market I entered? Cash market. What position I have taken? Now the markets are rising or falling? Falling. Now I want to protect against the falling prices or rising prices. Falling prices I should protect, because when I go for sell, definitely I will incur a loss. Pakka, no doubt in that. I also know that I can't control that. One thing I can do, simultaneously I will take another position in futures market in such a way that this loss will be compensated with this gain. Again I am repeating, what damage has to be caused will be caused. You can only compensate, you can't control the damage. Are you understanding or not? Life Insurance Corporation, LIC, can give claim after death, it can't stop the death. Are you understanding or not? If a person die, I can give you compensation for his death, I can't stop the person from death. Same, markets are falling down means everyone is same. You have to suffer that. Maximum possible what I will do is I will compensate you. Now did you understand the intention of hedging or not? Original market, sir, I am incurring a loss. You will incur. God also can't stop that. The maximum what I can do, God-like structure I can create, which will protect you from that. Are you understanding the point or not? Answer, yeah, everyone. Maximum, if a person's neck was cut, even for God, another elephant is a compensation. Understood? Head is not coming back. Maximum I can hedge. Are you understanding the point or not? Paramashivde hedging means, who are you and me? Are you understanding or not? So, once damage is caused, it is irreparable. You can't do anything. Maximum what we can do is, we can compensate. Instead of leaving like that and ask you to die, I can compensate. Clear, everyone? Futures also runs in the same way. Futures can control your loss. Futures can compensate your loss. When loss is caused, I can compensate. How to compensate? See there. So, I entered into TCS shares trading. Today I started trading on TCS shares. Today price is 4,300. I thought that it will go to 4,600 in another 1 month. I read the newspaper. Newspaper, one new contract came to TCS. American municipalities and all these things are making software within India. Really also they are making. That contract came to TCS. I saw that news in the newspaper. Immediately I felt that this will really is a great news for TCS. Share prices will increase. I bought the share. Listening or not? I bought the share. 4,300. 1 lakh shares I bought. Huge money investment. Are you understanding or not? 14 crore rupees I invested in the market. Full wealth kept in that. The moment I purchased, market started falling. Political reasons, other reasons within India affected mine. Okay? From 4,300 it came to 4,296. 4,293. You may think that, sir, 4 rupees, 5 rupees are not even a cost of 5-star chocolate. Don't tell like that. We are not buying one share. We are buying how many shares? 1 lakh shares. He is fat. So therefore, we should not take so much light. So therefore, what happened? Immediately he wanted to protect himself against this particular loss. Listening or not? What he can do is, TCS futures, you take a reversal position. Everyone loudly tell. TCS futures, he should take a reversal position. You may ask, sir, why reversal, sir? I should mug up like that? No. Shall I tell you why? Tell me. Markets are rising or falling? Everyone? Markets are falling. When the markets are falling, if you take, what position you have taken in cash market? Take which position in futures market? Sell. Take a sell position. Sell position you have taken on cash market or futures market? You said that you will sell at 4,325. Futures and cash market prices are different or not? So you entered into the cash market on 1-1. You entered into futures on 10-1. Can I do like that or not? Simultaneously, is there any rule that we need to go? No. You need not go simultaneously. The moment when you felt that the loss is coming, you will enter into the hedging. Okay? Futures market, I took a sell position. At what rate? Answer. First tell me, future is a independent instrument or dependent? Derivative or a normal instrument? Derives value from the value of it, sir. Kada. Now starts the play. Therefore, what happened? Markets are slowly falling down. Correct? Futures also will come down. Now you answer. In futures, if I give a sell click, I will really sell, I will go for buy. Yesterday only we read, seller will really sell, seller will take a counter buy. When markets fall, I will take a buy at 4325 lesser than 4325. I will make a profit or loss. Guaranteed profit you will make. This profit will compensate this loss. Are you understanding the point or not? So tell me, what position I have taken? Sell position. Really on maturity date I will take a really seller or take a counter buy. Counter buy I have taken at 4,100. 4,000. At the time this is at, say for example, 4,090. 4,090. Here I incurred a loss again, a loss. 210 loss I incurred. Listening? Next. 4325 became how much? 4100. So here also there is some gain compensation given or not? That's it. This is how the futures hedging will actually work. Futures will be used as a tool for hedging the cash market risk. Hedging the cash market risk. That's the idea of the futures hedging concept. Understood the point clearly? You tell me now. Start from the beginning. Cash market, what position I have taken? The position became risky. Now I wanted to hedge. Hedge using futures market. Futures market we should take a same position or reversal position. Take a reversal position. Reversal position if you take, you will do same thing and reverse thing again. Reverse thing. Seller will not sell, he will buy. Buyer will not buy, he will sell. Clear? So this is how it will happen. Hopefully everyone understood the concept clearly. Idea clear and yes or no everyone? Done. So this is how the hedging will actually happen. Hedging will not ensure profit. Hedging will not stop your loss. I mean, directly it will not stop the loss of that market. It will only compensate the loss. This clarity if you have, when you do problem, you will understand clearly what is happening there. Are you understanding or not? Hedging is a stop loss strategy. Stopping the loss after occurrence. It will not stop from occurrence. Are you understanding or not? Stopping the loss after occurrence. It will not stop the occurrence. Clear? There is a lot of difference between hedging. Are you understand the point or not? Okay. So this is the point. On this, there are several problems in the textbook. I will do some very good questions that were already tested. Okay. By the way, one small question. Which company I purchased? TCS. Everyone? TCS. Sorry, I am not purchasing TCS shares. Say, I am purchasing shares of 20 Microns Limited. Which company? 20 You don't know 20 Microns, sir? 20 Microns Limited. 2016-17 when I purchased 18 rupees share price. Hundreds now it is trading. 20 Microns Limited, government subsidy came. 2018-19. Do you know what is the 20 Microns Limited? Do you use polythene bags? Polythene bags. India all polythene bags are manufactured by 20 Microns Limited. That's a company that went for public offer. Long back. Super success. 20 Microns Limited is now trading in one of the most profitable stocks. Clear? So 20 Microns Limited I purchased. It's a listed company. But all listed companies in India did not have futures market. Futures market, if you have to get a license, your turnover, your sales, your trading pattern should have certain characters and parameters. If you satisfy that, then only possible. India, there are around 7,000 to 8,000 listed companies are there. Are you listening? In that, 1100 to 1200 have derivative segment. Remaining all the people don't have derivatives. Understood? Every listed company don't have derivative segment in India. Derivative segment was there for hardly 1100 or 1200 companies. 2014 500 companies has futures. Now slowly they are adding every single day. So today 8,000 companies, 1,200, 1,300 companies are having. My question is, I purchased 20 Microns. Prices are falling down. Prices are falling down. I went for hedging, but I didn't find anywhere. Which one? My 20 Microns futures are not there. Can I use Infosys shares to hedge the loss of 20 microns? I repeat one more time. Which company shares I purchase? Here TCS. Now microns. Falling. I wanted to cover the risk. Now what I will do? I will enter into futures. Futures on which share? 20 microns. I could not find. Whole segment of 20 microns are not there. Item not shown in the list. One error message came. Now I was worried. I thought that okay, let me enter into Infosys futures and hedge. Useful, useless. Pakka useless because Infosys futures will derive its value from Infosys cash market. Are you understanding or not? It don't derive value from 20 microns. So I can't use it. Therefore, Nifty futures came. Therefore, Nifty futures came into picture. Nifty is a one single stock, entire portfolio. Na? Nifty means one stock, entire market. Everyone? Sir, when Infosys I can't use, how can I use entire market? That's why we will use a beta as a hedge tool. That's why it came as a beta hedging. Beta will match your company with the market. That's how the beta hedging concept came into futures. Understood the concept clearly, yeah? So, do you know what is a beta? Beta. How many formulas are there for beta calculation? There are totally 9 formulas are there for calculating the beta. Normal beta calculation you will do, correct or not? Normal beta sigma S by sigma M into RSM, covariance of SM divided by sigma M square, or covariance of SM divided by sigma M square into sigma M. You can use that formula, or you can use as a summation of x minus x bar, or m minus m bar into s minus s bar divided by m minus m bar the whole square, n sigma xy minus sigma x sigma y whole divided by n x bar minus n x bar the whole square. Or you can use another formula, sigma x minus sigma y minus n sigma xy whole divided by sigma x and sigma y. Or you can use even method of least squares. You can use sigma y equal to n alpha plus beta sigma x. Beta sigma x equal to alpha sigma x plus beta sigma x square. Simultaneous equations you have to use. Or you can go for a levered unlevered beta calculation. Beta levered equal to beta unlevered into d plus e divided by e. Or reverse formula for beta for levered company equal to beta unlevered company equal to beta levered into d by d plus e. These are all the various formulas which we can use for calculation of beta under financial management. Not as a subject. Normally also there are only these types of calculations available. Okay. So out of all these betas, we will calculate the beta calculation till the value. This is the value of the beta. Correct or not? So these many beta calculations are there in the financial management area. What I should use here? They will only give the beta here. You need not worry. Okay. If at all they wanted to merge portfolio, question and futures, I don't know. But in all other normal circumstances, they will give you the beta value. Listening? So there are so many formula. Popular formula will be n sigma xy minus sigma x sigma y whole divided by, you might see this formula, sigma x square minus sigma n sigma x and sigma y, like that. That formula will be there. Sir, I will show you that when time permit, but the concept is what matters. There are so many formulas to calculate the beta. They will only give you beta. Tell me, what do you mean by a beta? Beta is a measure of sensitivity of my company to the market. My company to the market. Tell me, can there be a beta between, I repeat, can there be a beta between Infosys and TCS? Can there be a beta between Infosys and TCS? Answer. It can never be possible. Do you know why? Infosys can't influence TCS, neither TCS can't influence Infosys. Influencer influenced is there, then only the concept of beta will come. Listening or not, everyone? Answer, yeah, understood. So therefore, the point is very clear. Who influences whom is a question now. Okay? Market influences whom? Security. Market influences whom? Security. Now tell me, 20 microns will be affected by market movement or not? 20 microns is affected by TCS movement or not? Therefore, who is the representative here? Market. But I am completely inclined towards market. I may be, I may not be. That's why the measure is called as a beta. That's why we use the beta hedging. Understood the concept clearly? Now we are going to start with this particular concept. Let us start doing some problems in that regard. Take question number 21 now. In my textbook 21, in study material it's not there, it's a RTP question. Read the question first before we start with the solution. Read. In reading a half work will be done. Start. Hari buys 1000 shares of HPCL. HPCL. Okay? Remember the stock name. HPCL he bought. At what price? 190. Some date he bought. He started seeing that prices are falling. Immediately sleepless night. What he has to do immediately after waking up, he thought that let me take a position in futures. Okay? Obtains a complete hedge by shorting. Whenever I say short, it represents a sell. Short. I told you, if you take buy position in cash market, what position you should take in futures market? Sell position you have to take. Okay? At what price Nifty is trading at that time? 972 ki Nifty is getting traded. He closes out his position at the closing price of the next day. At this point, HPCL dropped by 5%, Nifty by 4. Why both are not dropped by 5? You are not answering. HPCL dropped by how much? 5. Nifty dropped by? For 4% drop in Nifty, there is a 5% drop in HPCL means, tell me, 4 by 5, a change in security return by change in market return, 5 by 4. Beta is 1.2 in this case. Beta is how much? 1.2 means for 1% fall in Nifty, I will fall by 1.2%. For 4% fall in Nifty, I will fall by 5%. That's the meaning of that. Hello, I'm talking with everyone. Understood? Okay. So now tell me, Hari took which position? On how many shares? Of which company? What is the price? Now he was in a risk of falling prices or rising prices? Falling prices. He wanted to protect or not to protect? Protect. Protect through which one? Protect through which one? Nifty futures, not futures. Which futures? Yesterday, first problem, do you remember? Various questions I answered. In that last bit, I didn't tell you. What is the difference between company futures and Nifty futures? I didn't tell because at the time you can't understand if I tell. Listening. Now tell me, we are now reading about company futures and Nifty futures. If company has a Nifty market, futures market, then I will do. All company futures are not there means how to hedge? Nifty is the only way. Understood everyone in the class? Tell me. Hari buys. Buys how many? 1000. 1000 shares of which company? HPCL. At what price? 190. Fear of rising prices, falling prices. Now he obtains a hedge by shorting. Why shorting? I should take same position or reversal position? See, this is 4 marks question. Therefore, he said what he is doing. Example, he don't even tell. Are you understanding? At that time, you should not ask other person sitting in the room. He will not hedge you. He will become double risk. Buy a sell means he will tell both buy and sell. So, both buy and sell. One side buy, one side sell. So, don't believe others. Follow the policy properly. At what price Nifty was trading? 972. He closes out his position at the closing price of the next day. Literally, do you know what he is telling? He could not sleep for another 1 day also. Tension started mounting. BP raised. He is about to die. Next day, he took a reversal position and came out of the market. Namaste, never enter into stock markets. That's the meaning behind this statement. Okay? 1 day only he stayed in the market. 1 day ke gone. At this point, HPCL dropped by 5. Nifty dropped by 4. What is the overall profit or loss made? Shall we start doing the answer? Start. Next question is in study material. Okay. First, you tell and write. Write down along with me. Don't wait for me. 2 branches. Tell me, how many markets have we entered? 2 markets. Number 1, cash market. Number 2, futures market. Tell me, cash market I took buy position or sell position? Buy position. At what price? 190. Market is rising or falling? Fall by how much percentage? So, when I go for sell, I will sell at 190. 190 minus 5%. Tell me. 180.5. So what is my loss? 9 point number of shares 1000 shares. Total loss 9500. Loss or gain? Loss. Up to here everyone understood? Next, to compensate this, I entered into which market the very next day? Futures market. I took which position? Sell position. Write down. Sell. Sell at what price? 972. 972. Okay. Tell me. Sell at 972. When I give a sell click on futures, on maturity date when I take an exit. I forgot to ask you. Yesterday I told you one question. Can I exit before maturity date? A, B entered into contract originally for 27th January expiry. First problem yesterday. But A didn't stay till that. Very next day he came out and C is substituted for him. Can I exit before maturity date? Now see. Cash market lo what? Cash market lo what position I have taken? In cash market I should stay for longer. I can sell. I can sell. Very next day I sold. Are you listening? Futures also I entered with an expiry, but I need not stay till expiry. Next day I give a reverse click and I came out. Seller can come out by giving a sell, really by selling shares or by taking a counter buy. Market lo fall or rise? Everyone tell me how much is the fall? Sell I will give another seller, buy. Fall or rise? Fall. How much fall? 4%. Value please. 930.12. So tell me, sell at 972, buy at 933. I getting a margin gain or margin loss? Margin gain or margin loss? So I am getting a margin gain. Tell me the margin gain value. 38.88. Okay. How many Nifties I am buying? 300. I am getting a gain or loss? Gain. Total gain. 6. Net. I am getting a gain or loss? Gain. 2000. Forget about loss. It protected and also gave me a gain. Hedging intention is not to make gain. But if gain comes, you take. Then you should not tell no. You should only cover the loss. You should not give profit. That is overaction. Intention is not to make profit. Non-profit companies also make profits. Intention is not to make profit. Shall we continue? Okay. I will ask you to do another question. Do 22nd question. Do 22nd question. 2 minutes time for you. Fatafat give the answer for the question. 1 minute. Now read the question number 22. First tell me, TCS is at how much price? 22. Never TCS is at that price in reality. Actually, the name of that stock is not TCS. I changed it to TCS. Actually, the name of that company, some HPCL or something is there. I changed it to TCS, that's all. Okay, don't literally take that. One TCS is 22 rupees. Even at the beginning, it is not there. So, 22 rupees is the price. I bought or sold a original position. Bought. Okay. How many shares? 10,000 shares. obtains a complete hedge by shorting how many nifties? 400 nifties. That's all. Time over. Tell me the answer, everyone. 2000? Ain't the profit or loss? Answer. Okay, I want two answers now. What is the loss you made in the cash market? What is the profit you made in the futures market? 6,000? That's it. Everyone understood the point clearly? See here, this is how it will be. So, cash market, like examination, you present this way. Okay, or you can present the same in a horizontal way. First write down cash market, underline answer, next write down futures market, underline and write down the answer. Understood? Net gain or loss you have to write. Don't just roughly work out and give the answers to them. Listening? Or else write down this way clearly. Let that person understand what you are trying to convey. Listening? So, original position buy, original position sell, reversal position sell, reversal position buy, loss, gain, number of shares, number of nifties, total loss, total gain. Clarity will be there for him in comparison and valuing. Understood the point, everyone? Institute material, they will give on one-on-one. Because they don't prepare charts, na? They will present everything in a normal line-by-line format. First they will give cash market position, next they will give futures market position, lastly conclusion, gain or loss. Understood? You follow any pattern. Pattern following is not the problem here. First you should know now what to do. Or else what you will put a number A, number B, number C and next question. So therefore, let us come to the next question. Question number 24. Very good question, RTP question. Not there in the study material, don't search and waste time. Let's read the question first together. Start. By the way, I got one doubt. Please clarify my doubt. My doubt is, tell me, how many shares of TCS I bought? How many shares of HPCL I bought? Answer, sir. That I will decide or some other person will decide? I will only decide. I wanted to buy 10 means I will buy 10. I wanted to buy 1 lakh means I will buy 1 lakh, 10,000 means 10,000, 1,000 means 1,000. Clarity is there. Correct? Now I will ask a question. Who decided 300 nifties to 400 nifties? Market. That also you should only decide. Our decision is dependent on the beta hedging strategy. Okay? In this question, why 3 marks ki 4 marks ki they are giving? Because you are not doing anything in this answer. You are just putting the numbers in place. You are telling gain or loss. But how come you know that exactly you should sell 300? Exactly you should sell 400? Who told you? That's the question. That is answered in the next question we are going to see. Listening or not? So how come that 300, 400 you got? So first tell me. That answer will be given in question number 24. Read question number 24. Start. Shyam adopts a position of 1 million long. Long means what? Buying. MTNL stocks on 5th June. Plans to hold it till 25th. That's the plan. Okay? When he bought? How much money he invested? 10 lakhs he invested. In which company? MTNL. Plan is to hold for 25 days. 20 days. After that, what he wanted to do? Sell. And later prices started falling. Now what he wanted to do? He intends to protect himself through Nifty futures hedging. Beta is now given. What is given? Beta is given. How much is the beta? 1.2. Tell me, what do you mean by beta 1.2? If market changes by 1%, my company's share will change by 1.2%. That means I am 1.2 times more sensitive than the market. Clear or not, everyone? Aggressive stock. Loss will be high if something wrong happen. Clear? See the screen. So, Shyam adopts a position of 10 lakh on 5th June. Plans to hold it till 20th June. He wanted to protect himself through the Nifty futures hedging. Beta 1.2. On 5th June, Nifty futures are trading at how much? 1,000. Which futures? Nifty futures. On 25th June, Nifty is at 900. price of MTNL has dropped, resulting in a loss of 1,20,000 directly as given. You need not calculate, yeah. Okay, show how the futures hedging will reduce the loss in cash market. Means here reduction represents the compensation. How much loss you already caused will be reduced by hedging, he is asking. That means the idea is very clear. Hedging is what strategy? Risk reduction, loss reduction, stop loss strategy, profit making strategy. In the process of making the stop loss, sometimes you may get a gain. Answer, in the process of doing the stop loss, you may sometimes get a gain. That does not mean intention was to make the gain. Are you understanding or not? Tell me, corporate social responsibility, companies act, CSR. CSR intention is to do some service or to make profits. But CSR also you may get profits, do you know? I started a school. I charged 1,000 rupees per annum. Okay, 1 lakh people joined. I didn't expect. Bumper gain. Now what should I do? God has given. Are you understanding? I tried to do social service, but I made profits. Are you understanding the point or not? Answer, sir. I planted trees across the highway. CSR policy from Vijayawada to Chennai. Consistently I planted trees for 430 kilometers. One corporate company came and said that on the trees I will put my advertisement plate. I said, okay, go on. For that he paid me 1 crore rupee. What should I do? God has given. Are you understanding or not? If luck favors you, anything can happen. Are you understanding or not? So therefore, point is very clear. Now you tell me, see the situation. Shyam has taken what position in cash market? On which date? Want to hold it till what date? Next, he wanted to protect himself using what hedging? Why Nifty futures? Why not MTNL futures? MTNL don't have futures at all to hedge it. So we used which futures? Nifty futures. Next one. Beta of MTNL, how much? 1.2. Beta of MTNL, 1.2. On 5th June, Nifty futures are at what price? Tell me, what is the importance of that date? What is the importance of that rate? What is the importance of that date? What is the importance of that rate? 1,000. What is the importance of 5th June? What is the importance of 1,000? You should first understand question before doing answer. As question and not understand, what is the use? Again tell me from the beginning. Cash market lo, what is my original position? At what price? Total value. 1 million. Adi clarity. Okay, come to the futures market. Futures like you take which position originally? Sell. Sell at what price? Adi, that's the important. That is the price at which we locked ourselves today. On which day? To be executed on which day? 25th June. But the 25th June really price is at 1,000, change you to 900. You took which position? You took which position? Therefore you will really sell, you will take a counter buy. Counter buy you will take at 1,000 or 900. Sell 1,000, buy 900, you are making a gain or loss. So you will be compensated. Are you understanding concept clearly? But how many Nifties? Sare, hey, don't tell what you get in mouth. 1,000 is the amount. How many Nifties, how many contracts of Nifties I should enter now to cover that 1 lakh? Question will arise or not? Here the catch point will come. Don't mug up the steps. Beta, cash market value into beta. Don't mug up the answers. Okay? I will let you tell what is the real meaning behind it. Listen carefully. Or else I will do one thing. I will do and I will tell you. First copy down the notes up to here. Start question number 20. Write down. Question number 24. Shall we? Do it. Cash market, futures market, faster. We have to do another 5 problems in this regard. Start. Original position. So, what is the original position? Buy or sell? Buy. At what price? 10 lakhs. 1 million, 10 lakhs. What is the reversal position? Sell. At 8,80,000. How I know? Because they have already given the loss. How much? 1,20,000. This is final. Over. Done. We need not do anything. Question only they have said. Clear? Next. Answer to the next one. I will take which position here? Sell. Sell at what price? And one second. Futures market la original position is a sell position. At what price? 1,000. I will take a reversal position at 1,900. At that price I will buy or sell or buy. Here I am getting a gain or loss? Gain. Gain of how much? 100. Now my question is, number of nifties per contract, number of, now my question is, how many nifties are there in one contract? How many nifties I need to trade? Previous example 400, 300 nifties they have given or not? Now I wanted to know how many nifties. Next I wanted to know how many nifties per contract. Later I will know number of contracts to be traded. Listening everyone? Sorry. See the previous question I am opening. Okay, see here. So tell me. Please listen. So, original position sell 1,000. Reversal position buy 900. Gain is how much? 100. Previous question, I will show you. See and tell me the answer. Previous question. Okay. How many contracts we traded? First question, 21 question. How many contracts we traded? 3 contracts with 300 nifties, because we assume that always 100 is the lot size. First question only I told you this yesterday. Standardized lot size, like nothing is given, how much will be the lot size? 100 is a lot size. How many nifties? 300. Means how many contracts? 3 contracts. How do you know that it is exactly 3? That's the question. At least now I understood or not? Now I wanted to know this. In this question, since contract size is not given, I will write it 100. Okay. But how many nifties and how many contracts? That is the missing figure here. That's what we are going to calculate. Shall we do that? Write down below. Number of contracts to be traded. Number of contracts to be traded. Main important bit in this question is number of contracts to be traded. Write down one by one. First, step by step. I will tell you the logic later once you write. First, write down. First, cash market value. Tell me, what is the cash market value entered? 10 lakhs. Step 1. Step 2. Futures market value equal to cash market value into beta. Cash market value into beta. Cash market value is how much? 10 lakhs. Beta is how much? 1.2. So how much it is? 12 lakhs. Okay, 12 lakhs. Next. What is the spot futures value? Sir, don't write spot value. Answer gone. I am asking spot value or spot futures value. Spot love, what is the futures? The day on which you are entering into the execution, what is the execution price? Write down that. Spot futures value or spot index futures value, anything you can write. Number 4. Now you tell me, number of nifties to be traded. Tell me, 12 lakh divided by 1000 means how many nifties? Answer, sir. 1200. Number of nifties per contract, nothing is said, assumed to be 100. So number of contracts equal to 12. In the previous question, the 1200 they have given directly. Understood or not? In the last questions, 2 questions, the 1200 they have given. Examiner generally they are not asking such type of questions. They are asking you to do that. Are you understanding the point or not? Here at least margin is given. CFA papers margin also we should calculate. You should see once, full fun. At least in the margin amounts they are giving margin related things they will, that also they don't give. Everything we should calculate. Sir, okay. Now answer my question. What is the CMV? What is the CMV? Now tell me, what is FMV? CMV into beta. How much? 12 lakh. Spot index value? Spot futures value? 1000. Number of nifties? 1200. Nothing is given. Number of nifties per contract? 100. Number of contracts to be traded? 12. Now put the number here. Number of nifties per contract is how much? Number of nifties is 1200. Number of contracts equal to 12. Working, huh? Complete. Now it's working. See here. Tell me. Yeah. Tell me, what is the opening value? Sorry, what is the original position? Here, futures. Sell. What is the reversal position? Buy. Gain 100. Now you tell me what is the total gain that I made. Tell me. 100. How many contracts I entered? 100. Sorry, how many contracts I entered? 12. Each contract, how many are there? 100. Take the calculator. Gain is 100. Number of contracts is 12. Number of contracts are, number of nifties per contract are 100. 100 into 100 into 12. 1 lakh. That's all. Overdone. Loss is substituted with the profit. So understood how to do this or not? Tell all the 5 steps, 6 steps. Number 1, cash market value. Next one, futures market value equal to what? Cash market value into beta. Next one, spot futures value. How much? 1000. Number of nifties? 1200. Number of nifties per contract? 100. Number of contracts? 12. This is the answer for this question. Everyone understood the concept clearly? Everyone? Now last question before we move on. Why we need to hedge cash market value into beta? Did you understand the question? My question is, first point, okay, cash market value 10 lakh. Why can't I enter into 10 lakh? I will give you an example. You wrote the answer, huh? Then I will ask one question, please answer this. 10 lakhs is the cash market value. You entered into same amount in the futures also. Let us see what will happen. Instead of 12 lakh, what you will write? 10 lakh. Answer. 10 lakh. 1000 will be same. Instead of 1200, you will get answer as 1000. Answer as 1000. Number of nifties? 100. Number of contracts? 10. In that place, if you put 10, what will be the answer? Can you please tell me? Just work out and tell me. How many lakhs? 1 lakh. What 1 lakh? Gain will be 1 lakh. Instead of how much? 1,20,000. And still there is a 20,000 unhedged part or not? That's why we will do that. Are you understanding? Number 2. That is an answer-wise explanation. But a real meaning, let us understand. Tell me. Infosys futures will be influenced by whom? Infosys spot market. Because both are having both a stock market and derivative segment as well. If a company is having a derivative segment, if a company is having a, no fool will go for Nifty hedging. When you will go for Nifty hedging? If that company do not have derivative segment, then there is no option and alternative, then we will go for Nifty hedging. But if that company is having a futures market, no fool will go for Nifty hedging. Listening or not? So try to understand the point clearly. TCS is having both futures options and derivative segment as well. Are you understanding? Normal stock segment is anyway there. Future segment is also there for TCS. Therefore, futures TCS will be used to hedge the TCS spot market. Now you tell me. Mark, listening everyone? TCS spot market TCS futures market, listen to my words. TCS spot market, TCS futures market. What will be the beta? 1. Because both are of same stock. What is my correlation with me with my shadow? Doubt. Doubt. Me with my shadow, you got doubt. If I move forward, my shadow will tell, wait, I will come after some time. It will come along with me. Kada? Now tell me, what is the correlation of me with my shadow? 1. Beta. Beta is how much? Same. I am asking TCS with the TCS futures. What will be the beta? Obviously 1. Then concept doesn't arise. Cash market value 1 lakh means futures market also 1 lakh only you will enter. Listening or not? Now you answer. You are using company futures or Nifty futures? Everyone? But in a reverse way. Do you know why it is reverse? Listen carefully. Cash market of TCS will influence the futures market. Futures market of TCS will influence cash market. But here reverse, Nifty is influencing you. And a futures instrument is influencing your cash market. That's why we will enter as per the futures. You did not understand. Tell me, TCS cash market will influence? TCS cash market will influence? TCS futures. Understandable. Correct or not? Nifty influences TCS or TCS influences Nifty? Nifty influence TCS, market influence TCS, TCS influence market. Now tell me, instead of cash market influencing future market, here who is the influencer? Nifty is the influencer which is on a future side. Therefore, according to them, you should do. I am influencing you 1.2 times. Therefore, you should enter in 1.2 times your beta. Are you understanding the point or not, everyone? So tell me, what is the step number 1? Bad response. What is the step number 1? What is the step number 2? Futures market value. Futures market value. How much? How much? I am entering into which market? Futures market la vegetable prices will be there. Which prices will be there? Futures prices will be there. Therefore, on that day, what is the futures value? You should check. Remaining is same. Number of Nifties, number of Nifties per contract, and number of contracts you need to put. Calculate the profit or loss. Everyone understood the concept clearly? Yeah. Everyone in the class understood clearly? Idea clear and everyone? Let us do one very good question in that regard. Small question only, but a good question. I will make you understand that using that. All are 8 marks questions here. Do one thing. Take question number 25. This is there in study material also, I think. But no worry. First see this and do that first. See the question. Unit Trust wants to hedge its portfolio of shares worth 5 million using BSE Sensex futures. Contract size is 100. Current index is 6840. Sir, when no information is given, current index means you can interpret as a current futures index value 6840. Beta 0.8, index beta 1, no need to tell that. Number of contracts to be traded. You should calculate only number of contracts. Start. Let everyone do. Everyone completed? How much is the answer you got, everyone? 5.84 not possible. Go for 6. You can go either for 5, you can go either for 6. 5.84 means nearing towards 6. You should enter into 6 contracts. Everyone understood the point. How many of you got the answer? 6 contracts answer. Everyone got the answer properly? Yes, so which question we completed? Question number 25. Those who didn't get the answer, 1 minute I am putting the answer before you, please see. Cash market, like that we should present the answer in exam. Cash market value, futures market value, spot futures values, number of nifties per contract, and number of contracts. That's it. Can you go to the next one? Next. Most important question in this slot. Question came for 8 marks in exam already. Number of RTPs, so you might have found this question. Question number 27. Mark it very, 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 very important. This attempt also expected it. This was asked 3 attempts back. Again there is a chance to come. It's there in study material also. In ISM also it is there. You can see the question. Question number 5. Question number 5. Study material futures chapter. If you have my material, see there, or else at least see the study material. Okay, see the question 27. Most important, so much of tricky question. That's why they asked for 8 marks in exam. Very good question. Let us read the question first. BSC spot. What do you mean BSC spot? Current spot index value. How much? Not futures index, normal index value. How much? 5,000. Spot market value. Value of portfolio. Our portfolio value is how much? 10 lakh 10,000. Risk free rate is how much? 9% per annum. Dividend yield is how much? 6% per annum. Beta of portfolio 1.5. We assume that the futures contract on BSE index with the 4 months maturity is used to hedge the value of portfolio over the next 3 months. One future contract is for delivery of 50 times the index. What do you mean by that? Standardized lot size is 50. Next, based on above information, calculate price of the futures contract. Second one, the gain on short futures position if the index turns out to be 4,500 in 3 months. Read the question properly. Don't do anything first. Read the question properly. We both will do it together. Fastly we will complete it. 5 minutes we can complete the answer, but logic is what matters. Okay now, have you read the question? Okay. Now see here. 1 second, sir, please. Listen. Let's do it together. First point number 1. This particular company, this particular question, what we are going to do is, tell me, what is our portfolio value? Portfolio will be created if you buy a seller. Therefore, it is a buy contract first entered. Correct or not? Later, the values are increasing or falling. He need not tell that. That's why they are going for hedging. Why anyone will go for hedging? When there is a fear of loss only, they will go for hedging. Correct or not? Therefore, tell me, what is our cash market value? What is our cash market value? 10 lakh, 10,000. Tell me, what is the difference between all the previous questions you have seen and this one? In this question, the point is, they didn't give the futures value with what we have to hedge. We have to calculate that futures value. Understood the point or not? Let us start doing. Question number 27. Okay, see here once. First thing, we have to calculate the value of the futures. Write down step 1. Fair futures price. You see the question and tell me, it is a no dividend stock, dividend in rupee stock, dividend in yield. What is the formula? Yesterday we have done. F equal to S into E power T into RF minus D. Using that, can we calculate the F value or not? Okay, tell me, what is the life of this particular futures contract? What is the life of this futures contract? Write down. Sir, then what is this meaning of 3 months? Answer. What do you mean by that? Exit before maturity date again. Though contract is for 4 months, I will take exit before maturity. Yesterday when I am discussing about exit before maturity, I made one statement. One question, 8 marks question, there is a point on exit before maturity. This is that question. Sir, okay, tell me, what is the, see here, what is the life of futures? 4 months. Can I take an exit at 3 months end? Yes, you can take at the value on the date, you can take an exit. Okay, let's start. Futures price. F equal to S into E power T into RF minus D. Everyone please answer, what is the S value? See the textbook and tell. 5,000 into E power. Okay, E power. What is the time? 4 by 12. What is the RF given in the question? 9%. 0.09. What is the yield percent? 0.06. 5,000 into E power 4 by 12 into 0.03. 5,000 into E power 0.01. 5,000 into 1.01005. This I don't know. Tell the answer. 5,000? 55 point? 550 point. 5050 na? Okay, 5050.25. Okay. What is 5050.25? What is the spot value? What is the futures value? Market is contango. Futures is more than spot. Yesterday only we discussed about all those things, na? So tell me, how much it is? 5050.25. What is the meaning of this value? What is the significance of this value? At this value, we are going to calculate the number of futures contracts to be entered. Correct or not? No. Tell me now. Next, step 2. Number of contracts to be traded. Number of contracts to be traded. Step by step you will tell, I will write now. Start. Tell me. Cash market value. Tell me cash market value how much? 10 lakh 10,000. Write down. 10 lakh 10,000. Second bit. Futures market value. Tell the formula. Cash market value into beta. Tell the cash market value into beta. Rupees 10 lakh 10,000 into 1 point given in the question. 15 lakh 15,000. Okay. C. Spot futures value. Tell me, you calculated just now. 5,050.25. Next. Number of nifties or indices, anything you can call. 15 lakh 15,000 divided by 5050.25. 299. Obviously round it off to how much? 300. Next, E. Number of indices per contract. Standard is lot size 50. Number of contracts to be traded 6 contracts. How many contracts, sir? 6 contracts. Everyone understood up to here clearly? Everyone? Okay. Now answer. How many steps we completed now? 2. First one, calculation of what? Futures value. Second one, what is the calculation? Number of contracts to be traded. Finally, we should show the gain or loss. Okay. See here. Low. See here. First, what is the first bit he asked in the question? Tell me, what is the answer we calculated? Over. Done. Next one, number of contracts. Next one is what? Gain on short futures. Tell me, original position is what? In cash market, what position we have taken? Buy. Futures law, what position I should take? Sell. That's why short position he is clearly saying here. Okay. Gain he wanted to know if index turns out to be how much? 4,500. First tell me. Read the question first. Last 1 minute I will give time. I want one answer from you. That's why I ask you to read. Okay? My question. Tell me. Answer my question. Shall we? I am going to exit after 4 months. I am going to exit after 3 months. Everyone? 3 months. After 3 months. Okay. After 3 months, I am going to take which position? Correct. No. Buy only. Original position, what you have taken already? Answer, sir. Sell. Reversal position, what you will take? Buy today, na? In future. In future, you will take a buy position. Reversal buy you will take. Correct or not? Reversal buy you are going to take in cash market or futures market? Tell me, what is the index price on that date? 3 months after. What is the date? What is the price? 4,500. Can we take that value or not? You cannot. At the spot index value, 1 month we should calculate futures value again. Index turns out to be, not futures turns out to be. Again, start. Now you understood twist? See there again. See there here first. Tell me, index in the market, sir, what is the life of the contract? I want to hedge only for? At the end of which month I should come out? At the end of which month I should come out? 3rd month. By giving what? Seller buyer. At the end of 3 months I should give buyer seller. Buy and I should come out or not? At the time I am going to buy, give a buy click, I will give buy click in cash market or futures market. Futures market, like cash market prices will be traded. Which price will be traded? Future. By the time I entered into, I tried to buy, reversal buy, futures value is required or not? That value given or not given? Not given. But what value was given? Spot was given. Tell me. 3rd month ki, 4th month will be how many months future? 1 month. For 1 month, F again we have to calculate. Understood the point or not, everyone? Okay, that. Tell me. Before calculating gain, write down bit A. Calculation of value of 1 month futures contract. Calculation of value of 1 month future contract. Same concept. F equal to S into E power T into RF minus D. Tell me, what is the S? 500 into E power T 1 by 12. RF 0.09. D 0.06. 4500 into E power 1 by 12 into 0.03. 4500 into E power 0.025. 0025, yeah? 0025. 4500 into this value I don't remember. You do. Okay, va? Tell me how much? E value you tell. 1.0025? 25, that's all. So value? 4511? 2? So 25. 4511.25. Okay. Why it is useful? In what way we are going to use this? In what way we are going to use this 4511.25? Answer, sir. This is a price at which we are going to take the counter buy. Write down. B bit. Gain or loss. Now write down. Don't just copy. Original position is what? In futures. Sell. At what price? 5050.25. Reversal position is what? Buy. Now tell me, what is the price? 4511.25. Now tell me, there is a gain or loss? Gain. How much? 539. Number of contracts? 6. Number of nifties per contract? Total gain 1,61,000. See the study material answer. See the study material answer once. 625, 630, okay. Small decimal changes will come. Now did you understand how the questions will be tested? Yes, be careful. If you understand the concept, it's very easy. Just need some practice. So after the futures is complete, sir, futures la almost all important problems I have done in the class. Still there are another 2-3 problems for us. We will do that. Shall we continue? Yes, I will show another question. Bumper question. See, super question. 28. Where a level? I don't know whether it is there in study material or not. Yes, it is there, huh? Then super. Open that. 8. Eighth question. Okay? Tell me, how many of you done this problem before? Oh, really? What is the meaning? Hmm? No, wrong. First question. Huh? That is okay. Okay. Beta everyone will tell now because it's there in portfolio chapter. Remaining thing what you did. Mugged the format. Huh? If question comes like this, we should answer like this. If I change the question, gone. Sorry, okay. Shall I tell you what is the meaning? This question, mind-blowing question. How institute got this thought, I don't know. Definitely they might have copied from some source. There are no doubt. But the source what they have taken might be fantastic source. So, idea is very clear. See there, a trader is having in its portfolio shares worth 85 lakh, cash is 15 lakh. Beta of share portfolio how much? 1.6. Beta of cash will be? Answer, yeah? Tell me, I have 100 rupees in my pocket. Today market raise, 100 rupee become? 100 rupee. Market fall, 100 rupee cash will become? Now tell me, market influencing my pocket la cash or not influencing? Cash don't have beta. Over answer. Next. So after 3 months, the price of the shares dropped by how much percent? 3.2%. Calculate the portfolio beta. First, can we calculate the portfolio beta or not? This you will do very easily with your great portfolio knowledge. What is the portfolio beta? Weighted average beta. How much is the total amount? 85 lakh plus 15 lakh. Total how much? 100 lakhs. 85 lakh plus 15 lakhs. Total how much? 100 lakhs. So tell me, in that 100, proportion of equity is 0.85. Proportion of cash is 0.15. Beta of equity is 1. Where it is given? Prices of the shares dropped by 3.2%, he said. Okay, and moreover, beta is 1.6 already given. Can we calculate the weighted average beta for this particular question or not? Yes, answer, sir. Yes, let us start doing it. First bit, let us calculate. Do it, sir. Make it fast. One minute. I will copy the question. Okay, see here. Tell me first, trader has in its portfolio how many lakhs worth shares? 85 lakhs. Cash, 15 lakhs. Step 1. First one is portfolio beta. Write down clearly. Asset, proportion, beta, weighted beta. What are the two assets in my portfolio? Shares, cash. Shares worth 85 lakhs means 85%, 0.85. Next. So 0.15. What is the beta of cash shares? 1.6. Cash 0. 1.6 into 0.85. 1.36. Cash beta value is 0. Total is 1.36. Up to here everyone understood the point? Done. Over. Second bit. What is the portfolio beta after 3 months if the trader on the current date goes for a long position on 100 lakh Nifty futures contract? First answer my question clearly. He is asking again to calculate what? Recalculate the beta of cash or beta of portfolio na? First tell me beta of cash will be? Answer. So beta of cash will change or will not change along with the market? Loudly, sir. So now, trader has in its portfolio shares worth 85 lakh at current price, cash 15 lakh. Beta of share portfolio 1.6. After 3 months, the prices of the shares dropped by 3.2. I will ask a question, tell me. Beta, there are so many formulas. One formula is there, delta SR by delta MR, which means a change in security return by change in market return. Change in? Loudly, change in? See here now. I ask you one question. What is the security change prices? Again. Tell me now. What is the change in the security return? Everyone? Change in security return by change in market return is equal to beta. Shares ki beta. Already beta we know. How much? 1.6. How much is the share return change? 3.2. That means can I know the change in the market return or not? Tell me what is the change in the market return? How much? That's all. That means for 2% change in the market, our company stocks have changed by how many times? 3.2%. Therefore, the beta is 1.6. That's the meaning. Did you understand the point or not, everyone? I repeat one more time. Tell me what we calculated now? What we calculated now? Change in the market return. Because they have given change in security return. They have given the beta. What we can calculate using both the information? We can calculate the change in market return. Why I am asking you to calculate market return change means on that basis only we have to hedge it. Okay? Start one by one. So let's continue. So tell me, what is the asset? Please, just 5 minutes we will complete this. Tell me now, what is the assets that are available now? Shares and cash. Okay, now tell me, this particular question, what is the new point we learn? What is the new point that we have seen? Tell me, what is the new point that we can see? Answer, sir. Cash beta will be 0. Illa. For that you need not come to futures and learn. Understand they have taken long position again. For long he has taken again long position in futures. Either bumper profit or bumper loss. Rest in peace. Are you understanding or not? Either you will get super duper bumper profit, industry hit, or industry utter flop. Either two things will happen. Do you know why? Do you know why? Tell me. I have taken which position in the cash market already? How do you know? Portfolio means if you sell, portfolio will be created. If you buy, only portfolio is created. Means already what position I have taken? Now I have to do what? Sell. Instead of that, what I have done? Again long position I have taken. Na? For example, I have taken sell position. I have taken sell position. Original position is buy. I have taken sell, reversal. Then what will happen if the market is falling? Compensation will be coming in the form of profit. Correct or not? Tell me. My original position is what? Buy position. Reversal position is also what? Buy position. Listening? Markets raised here. I will make a gain or loss? Gain. Market raised also here. I will make a gain or loss? Gain. I will make how many gains now? 2 times gain. You will become millionaire on a day. Suppose. For suppose. If prices fell down, you will make gain or loss? Loudly, everyone. Automatically here also what you will make? Loss. What will happen? One wooden bowl will come. That's all. Over. You are gone. Your history was torn into pieces now. So try to understand clearly. It is a risky move. That person has done that. He has already taken a long position. Overconfidence again made a long position on the futures market as well. That's the new point you should learn. Cash ki beta 0. These are not the new things you are learning here. Are you understanding the point or not? Cash ki beta 0 for this chapter. Why you have to come? You can learn that in portfolio chapter. In this area, what is the new thing you are learning? Already I have taken a long position. Again I am taking what position? Long position. Now you tell me. Long position I have taken, yeah. Sir, I have taken. How many lakhs long position? Answer. That 100 lakhs stayed at 100, it fell. 100 lakhs will be at 100 lakhs, it fell. It fell. How much it fell? 2%. For that only we calculated that. Now you realized it. Write down. Step 1 completed, everyone? Step 2. Change in market return. Again gone. Why only to me? Try someone. So, what is the thing we need to calculate? Change in market return. So, Lupa, what is the formula for beta? Change in security return by change in market return equal to what? Beta. Security return changes how much percent? 3.2. Market return, we don't know. Beta is how much? 1.6. What is the change in market return? 2 times. Or 2%. You can call it in any way. 2%. 2%. Now answer. My portfolio of 85 lakhs. My portfolio of 85 lakhs will be at 85 lakhs or will come down? Everyone? Obviously will come down. Come down by how much percentage? 3.2%. For how much fall in the market? 2%. Nifty fell by? Nifty fell by? I will fell by? Now did you understand the situation clearly? Everyone in the class, idea clear and everyone? Let's do. Step 3. Calculation of gain or loss. Loss A, but just write down. Write down. Cash market, futures market. Tell me, in cash market, what is your original position? Buyer, seller? Buy. At what price? Answer, yeah? Your original position is how many lakhs? Very good. 85 lakhs. Tell me, reversal position, it will be 85 lakhs. It will be 3.2% less than 85 lakhs. Tell me the value. 82.28 to 8 lakhs. What is the loss you obtained here? 2.72 lakhs. Okay. 2.72 lakhs. So 2.72 lakhs you have got in the futures market or cash market? Cash market you have got. Correct, everyone? Okay. Next. Futures market. Tell me. Original position buyer, seller? Buy. Reversal position buyer, seller? Sell. Tell me. Original position how much value? 100 lakhs. Reversal position how many lakhs? Minus 2% you should take the reversal. Tell me. 98 lakh. Here you are having a gain or loss or loss. How much loss? 2 lakhs. Okay na? How much loss? 2 lakhs. Now tell me. In this question, number of contracts, number of nifties, all these are there or not there? Not there. Plain question, direct question. Okay. Now I have one important question for you. What do you mean by loss of 2 lakh? That means we have given a buy position of how much? The answer, sir. Sell at how much price? I am getting a gain or loss. Cash went from 15 lakhs to 13 lakhs because of margin money gone. What gone? What gone? Now you tell me, cash beta is how much? Normal cash beta how much? Wrong answer. In futures, cash will have a beta because the market is influencing my cash balances. Market raise na, cash will raise. Market fall na, cash is falling. Means cash is having necessarily a beta in futures. That is a new point we are going to learn here. That's what I asked you previously, what you understood before. Cash will necessarily have a beta in futures market, not otherwise. Portfolio chapter, what you will read, cash will have a beta of how much? 0. Yes, 100% right. But in futures market, it's not true. You tell me, how much cash balance is there before? The answer, yeah, what is the cash balance before? Now it became how much? 13 lakh. 2 lakh reduction happened because of theft, embezzlement, absconding, market change. And who is affecting your cash balance? Because you know, your money is not in bank, your money is in the mark-to-market margin account. That means it is linked to market already. So, cash will have a beta, will not have a beta, will necessarily have a beta in futures. It is the first mark that you need to put in mind. That's why that question is super question, I said. Okay. Now tell me, what is my revised portfolio value? 8. Tell me, how much? 82.28 lakhs of stock balance and 13 lakhs of cash balance. Tell me totally. 95.28 lakhs. What is 82.28? Revised what value? Share portfolio value. What is 13 lakh? Revised cash balance. Both are affected by market movements. Therefore, both are having a beta. Understood the point clearly, everyone? Understood? Okay, I'll ask one last question. Tell me now, please. Listen carefully. Market la how much price movement has come? 3.2%. Because of, market la change is 2%. Because of that, my shares changed by how much percent? 2%. Beta we calculated as how much? 1.6. This all happened before my cash entered into margin account. You are not here. Listen again. I should not teach all those things here, but still I am telling. So please be present here. I am repeating one more time. Market changes by 2%. My portfolio changes by 3.2%. That is share portfolio ne. Because cash beta is 0 before entering into margin account. Once cash enters into your margin account, what also will have a beta? Cash also started having a beta along with the shares. Listening? Okay. Now my question is, you tell me, what is the change in my portfolio value? Previously, how much is my portfolio value? 100. Now it became how much? That means, can I know the change in my security return or not? Tell me. 100 became 95.28 divided by how many times it will go? Tell me. What is my portfolio value before? Answer. It became how much? From what? From 100 it has become. And P1 minus P0 like that we will take. So technically you can take this way. Instead of writing like this, you can write, I became 95.28 from what? 100. Why it is not working? Yeah? Write down before it go. Tell me, from 95.28, from 100 it became 95.28. Correct? P1 is 95.28, P0 will be 100. Divided by 100. 4.72%. Correct or not? 4.72%. What is this? 4.72. Change in the security return. Change in the portfolio return. Change in the portfolio return. It is no more a security return. It is the. That's why he asked portfolio beta. Institute is having full clarity. They didn't ask security beta. They asked portfolio beta because cash is in the portfolio. It is also influenced by market. Listening? Tell me now. How much is the market before? How many times I should ask? How much is the market before? 100. It became how much? 98. It became how much? 98. Means how much percent change? Now tell me, what is the change in security return by change in market return? Calculate revised beta. 4.72 divided by 2. 2.36. This is the beta. Check the institute answer. Stuck again? Very good. Nice. This time full gone. Okay, see here. One last calculation. Again not working. 1 minute. See there. Answer to the question. Market portfolio. First thing, tell me. My security portfolio original value is how much? 100. Became how much? 95.28. In that 95.28, what and what is there? Shares are there, cash is also there. And what is also influenced by market? Cash is also influenced by market. Therefore, now the portfolio beta is the beta of security or beta of security with cash. Beta of security with cash. Therefore, what happened? 95.28 is the value that I got at the end, which I started with 100. So the percentage change is how much? 4.72. Next, market changed by how many times? 2 times. Market changed by 2 times. I changed by 2.36 times instead of changing by 1.36. 1.36 is the beta of total portfolio with cash beta as 0. Why then cash beta is 0? Just now I told the reason also. Why cash beta is 0? Because it did not enter into the margin accounts. Margin accounts are linked to market. That's why we call it MTM margin, mark to market margin. Means cash is mark to market now. Once cash is mark to market, cash also will get the beta. Understood the logic clearly? Everyone in the class? Got this new point learned, everyone in the class? Yes, sir. This is a new point I wanted to make you learn in this particular area. That's why I said this is a very unique question. Okay, I don't know what you have done in before knowing, without knowing all this, but the point is what matters. You should know what you are doing, or else portfolio beta will be there. You will just calculate 100 minus 95.36. At that time, why you didn't get a doubt? At the time, why you didn't get a doubt? Why we are calculating with the cash? This is the reason. When cash enters into margin account, cash also start getting the beta. That's a new and unique question that they asked in exam. Everyone understood the question up to here clearly? Yeah? Take a break and come. We'll continue with the remaining part. One last question is there that we will do, and then we'll go into the next area, Forex. So let us continue. Please come to take this question. Sir, everyone understood question number 28 like important point or not? Cash also will have a beta. Last question in this particular area. We are closing futures with this. Question number 26. Similar questions are coming in examination every attempt. What is this concept? I told you, hedging there are 3 concepts. One, plain hedging. Second one will be beta hedging. Third one will be target beta hedging. In the plain hedging over, beta hedging over, now we are going to start with the target beta hedging. Take question number 26. See here, this is there in study material means okay. If not there means please see the screen. A portfolio manager owns 3 stocks. Stock 1, 2, 3, number of shares, stock price, beta. Spot Nifty index 1350, futures price is 1352. To use the stock index futures to decrease the portfolio beta to 0.8, increase the portfolio beta to 1.5. Contract multiplier is 100. This is the question. Read the question first. Similar questions are getting tested in the examination every attempt, so please be careful. Okay, read the question. First tell me, we have invested in a portfolio having 1 lakh shares with 400 rupees, 2 lakh shares with 300 rupees and 3 lakh shares with 100 rupees. Beta is also given. Spot Nifty index 1350, futures is 1352. Use this to decrease the portfolio beta to 0.8, increase the portfolio beta to 1.5. Contract multiplier is 100. What is the new thing you are learning here? At least, what is the new thing you are seeing here? You are asking a beta to be achieved. Okay? Simply to tell, I will give you one example first. I will give you one example. See here. I will take this as an example. See here, this question. I will ask a question, first answer. See the screen. What is the cash market value? Original position. See there it tell you. What is the reversal position? Sell, we have selling at 8,80,000 incurring a loss of 1,20,000. Very good. Next, futures market law, what is the original position taken? Sell. Reversal position will be buy. At how much price? 900 you are making a gain. Totally how much gain you are making? Totally how much gain you are making? 1,20,000. You only done here before the break. How much is a gain? 1,20,000. How much is a loss? 1,20,000. So loss 1,20,000 has been covered. Correct or not? I'll ask a question. Tell me. What is my opening value of my portfolio? What is the loss you made? Became how much? Futures la how much margin cash received? Again it became how much? What is your rate of return? Then why you invested? This is the question. Why you invested? To hedge. Why you invested to hedge? Why you are born means to buy LIC policy. How this answer is like that, that answer also will be. Why you entered into market means for hedging. I ask you one more time. Use this fastly, tell the answer. Point number 1. What is your opening portfolio value? What is the loss you incurred? Became how much? Therefore you entered into which market? There you got a gain or loss. How much gain? Now add that cash to your portfolio. Totally how much it became? 10 lakh. Opened with, closed with, return is, then why you invested? If you put in FD at least 6% you might have got. First one thing I'll ask you, tell me, did you understand my question? Shall I tell you the bad reality, sad reality? You didn't even think about what I said till now. You are seeing 1,20,000, both are matching each other. But the point is, why you invested question started. When you are starting with 10 lakh and closing with 10 lakh, why you started? Therefore, people started thinking this way. Always, whenever we go for hedging, we are of a thought that markets will go down. Market will or go up. Anything can happen. Please see the screen now. What is my opening position? Opening position by how much? 10 lakhs. Correct or not? Okay. I am taking a reversal position for 1,20,000 including that gain. Correct or not? Do you know what is happening here? This concept is called as full hedging. What hedging? Full hedging. Complete hedging. Complete hedging, there is a problem. Do you know what is the problem of complete hedging? Complete hedging, the problem is there will be no return also at the end of the day. What also will not be there? Return also will not be there at the end. It will eat away your return, just it will make you zero profit, zero loss situation, it will gain. You will get a doubt of why I invested and waited for 6 months time. Are you understanding the point? So therefore try to understand clearly. Beta hedging is a concept where, I repeat, beta hedging is a concept where we don't want complete hedging. We don't want. We want to keep our exposure uncovered such that if a market is going out of our favor, we will become successful. If I tell like this, no one will understand, I know. I will give you one example. Tell me, futures market, you have taken what position originally? Answer? Markets will fall or rise? Start again. Cash market, what position? Everyone? Buy. Okay. Then immediately futures, what you have done? Took a sell position. Okay. You thought that next 15 days, definitely markets will go down. Markets will? As per your expectation, if it go down, very well. Stock markets are always going against our will and wish. For suppose markets raised again, today how much I invested? One day after market started, I thought that next 5 to 10 days like that only pattern will continue. Immediately I took a sell position in the futures market. Listening or not? Now tell me, on maturity date after 15 days, I am trying to sell. I am trying to what? Sell. Markets are rising or falling? Rising. I thought that it will? I thought that it will? See here. Original position, buy or sell? Buy. How much lakhs? Tell her, I am thinking that markets will fall. Therefore, immediately I took which position? Sell position. Which position? Sell position. Sell position I have taken on the other side of the market. Okay? But against to my expectation, first 5 days really there is a fall. Seeing that 5 days situation, I immediately entered into the futures market. The moment I entered into future market, market started growing. Are you understanding? So markets increased. Now tell me, my original position, my reversal position. Now what will happen? I will get a gain or loss? Gain. I will get a gain or loss? So market raised. Therefore automatically futures also will raise. Futures law what you will do? Buy. At the time, do you know what will happen? Loss will come. This gain will be eaten by this loss now. Therefore, people don't want to have full hedging. They will put only a partial hedging. They are ready to take a level of risk. They are ready to take a level of risk. Therefore, see the question now. What he is saying is, I am ready to take 0.8 beta. I am ready to take. To that extent only tell me how many contracts I need to buy. Understood the point or not clearly? Okay. Now tell me. Right, I am writing here itself. You just tell me the answer. 1 lakh into 400 means how many lakhs? 2 lakh into 3 lakh into. Now tell me what is the total? 9 and 4 means 1300. Correct or not? 4 on 1300. 308. Fastly. 6 on 13. 4. 6. 2. Next. Point. 231. Okay. Into 1.1, into 1.2, into 1.3. Directly till the beta. How come it will be 0.3388? Everything is more than 1. It should be more than 1 obviously. Tell me how much? 19? Sorry, 194 I will write. 1.194. 1.194. The beta calculation you are taking time. Confirm your answer everyone. What is answer? 1.194. Now tell me. What do you mean by 1.194 beta? What do you mean by 1.194 beta? If market changes by 1%, my portfolio will change by 1.194%. Correct or not? Now what I will do? I will do this way. If you see, you will understand. Or else again same situation will arise. Tell me, what is the number of contracts? Step number 1. Cash market value. Next, second one. Tell me the futures market value formula. Value into beta. Do you know how to understand this? 0 has a value or no value? It has thousands of value. Do you know why? So concept will change because of that. See the screen. I will put a bracket here. Minus 0 if I add. Answer will be same or different? Answer will be same or different? Interpretation I am not asking. Answer same or different? Do you know what is the meaning? You are making this beta of something to 0. Previous questions. CMV into beta the moment you make. Do you know what you are doing? You are bringing your portfolio to 0 beta. 0 beta means risky or risk free? Answer. High risk, high return. Low risk, low return. No risk, no return. That's why you are not getting any return there, because you are reducing beta to 0. Are you understanding the point or not? In the all previous questions, we are reducing beta to what level? 0 level. We are bringing the beta. Therefore, you are not getting any return there, since you are not taking any risk there. Therefore, people don't like that to happen. Listening or not, everyone? Sir, for you, for me, not for me, I am also doing a very good trade on stocks. For example, a normal learning trader is there. What he will generally do, he will buy some amount of stocks. 5 lakh, 10 lakh, 2 lakh, 3 lakh. He will buy some amount. Correct or not? He will buy the amount. He will buy the shares. Put it in a demat account. Listening? Now, I wanted to sell. Sell after 3 months. I wanted to sell after 3 months. I am repeating the words again. Listen carefully. I wanted to sell after. Such a case, I don't get the profit means no problem, but I should not get the loss. That will be my intention. I may or may not get the profit, but when I sell, I should not get the loss. Such a psychology will go for full beta hedging. I bought the shares, 10 lakhs, growing, no hedging. Unnecessarily, that will eat your profit when it is growing. So no need. I bought with the intention to grow. Go slowly, coming down. I will enter into futures hedging. Now what will be my thought process? Profits give to God. My investment should not die. Such people will go for full hedging, they will go. Complete hedging, they will go. Okay, na? Now shall I tell you one super logic? If investment is made not by people, investment is made by mutual fund, then mutual fund companies' purpose is buying and selling or holding. At that time, how can I sell? Selling means you should sell all the stocks, because all stocks will drop down their value someday. Mutual company. That's why, shall I tell you, institute did not do mistakes. Yeah, we are not understanding its motive. Unit trust. It's a mutual fund company. Same mutual fund portfolio. I don't wanted to sell. I wanted to hold. When I am holding, I am not intended to sell in the future. I just wanted to hold. But loss, whenever it comes, it drops my NAV down. What will drop? Mutual funds have we done in the revision classes or not? Answer. Market value of the investments, if they come down, what will come down? Answer. But markets will definitely come down, may or may not. May or may not. Then confidently, how will you tell that markets will come down? Sorry, markets will come down. In your portfolio, 10 securities are there. How can you tell that all 10 will fall or all 10 will rise? Listening or not, everyone? I have TCS, futures is there. Infosys, futures is there. Reliance, futures is there. I am having 3 stocks, A3, A3. Okay? Now tell me. I am having Infosys, Reliance, TCS, all the 3. That means one security, portfolio. Portfolio should be hedged with another portfolio only. That's why Nifty portfolio is used for hedging. Understood the point or not? My intention is to buy and sell. My intention is to buy and hold. Tell me, mutual fund company's intention will be to buy and sell, or to buy and hold and increase NAV. Hold and increase NAV. To increase NAV, what should increase? Market value should increase. They are dropping. At least if market value of is dropping, cash balance should compensate NAV. That's why you will invest in futures, get the gain in margin account, invest that cash back into the mutual fund. NAVs are maintained. Are you understanding the point or not clearly? That's how these problems were made. Intention was good. Problem with the institute is, said always, to be very frank on this, they lift problems from some foreign materials. Obviously, 100%, no doubt in that. Because finance concept is not from India. Modiglani Miller is from Chennai. Walter is from Walter in Andhra Pradesh. None of the persons who did the finance research are not from India. All are foreign made. Therefore, questions, answers, everything is foreign made questions. These people will lift the questions and put it here. While putting it here, they should also make an effort to explain that in the books. So what is this question? What is the logic behind this? Why they have kept? But all thanks to the CFA materials. I'm not promoting CFA, but I have to tell. CFA, where a level they will prepare. Means a person who read the material will understand her first thesis what it wanted to tell. So every concept will be made for some purpose. Always try to understand. Mutual funds you take. Mutual fund. Which one? Mutual funds. If it go for full beta hedging, what will happen? Whatever NAV growth came here, it will also fall on the other side. Your NAV is same always every month. People will like mutual fund, will not like. I want hike in NAV. Last month 40 rupees NAV per unit. Now also 40. Next month also. What you are doing? You invested in bank deposit. Like that people will get a doubt. You should show some hike in the market. Are you understanding or not? Tell me, what is the disadvantage of going for a full beta hedging by mutual funds? If you go for full beta hedging, what is the problem? When you are a trader buying and selling, your loss will be protected, no doubt. For you, full beta hedging is recommended. But for whom it is not recommended? Mutual fund companies, never in their life they will go. Or you understand? Never in their life they don't go. Who? Mutual fund companies will never ever they will go into the full hedging. Are you understanding or not? May I told you or not, in regular classes I used to tell. I worked with 9.5 months with a mutual fund as a hedge fund manager, Franklin Templeton, Hyderabad. So you ask me, I will tell how they do. So what they do is they will not hedge completely. So hedge work will be done by a separate department. Only the department work is every day, mutual funds, whatever the investments are being up and down, how they are moving every day, they will track. They will understand the pattern of movements, how they will be happening in future, predictions will be made, simulation will be done. After that, they will take 0.3 beta, 0.4 beta, 0.7 beta, like that they will take. Up to here, everyone understood clearly? I will ask one question, tell me, in my portfolio, how many stocks are there? My total portfolio beta is how much? CMV is how much? You see there, CMV is how much? Tell me, if at all I will go for full hedging, what I should do? 1300 into 1.194. Some amount will come, correct or not? With that amount I should go. With that amount, if you go for a trader who buy and sell, okay. But for whom it is not recommended? For a mutual fund holders, all these people, they are not investing to sell, yeah. They are investing to hold and grow the NAV. Understood or not? So therefore, what mutual funds will see? Mutual fund will invest in 1,000 crore portfolio. That 1,000 crore portfolio, some shares are going down. Some shares are. They projected that they will go. Whether they will go down or not, no one will know. They projected that this month 2% fall is expected. 2% fall is, but 2% fall will be definitely there, may or may not be there. Therefore, 2% when they expected cash market to go down, they will not take into directly beta and hedge the other side. Because of the two mistakes they will do. Unnecessarily futures you will take higher position. For that higher margin amounts will be blocked. Understood or not? If against to your expectation there, if it get the gain, that gain will be eaten away by this loss. Therefore, they will not go for full beta hedging. When you will get the return? If you take risk. When risk will be there? If there is a beta. If you make it zero, it become risk free. Are you understanding or not? You will not get any kind of return. You will get only risk free return, that you will get in FD also. For that, why you came to futures and options? Understood the point or not? So tell me, we are going for full hedging or partial beta hedging? Now you see this question. This is the idea behind this. In this wavelength, you should read the question. Now tell me, what is the spot value of index? 13? Futures. I wanted to decrease the portfolio beta to 0, 0.8. That's why in place of 0, you will put this 0.8. For that one formula, CMV into beta new minus beta old, or beta old minus beta new. Asla new old you keep away. Logic, did you understand or not? What is my existing beta? I want to maintain it, I want to reduce it. Reduce it to 0, reduce it to 0.8. Therefore, balance only will hedge now. What only will be hedged? Balance only will be hedged now. Understood the concept? Shall we do it together now? Ante ayipin over, that's all. This is the end of the futures chapter. These are the questions that they will ask in exam. Okay? Let's start doing one problem on this. Let's start. Keep the heading. Number of contracts to be traded. Start. Number of contracts to be traded. Number of contracts to be traded. One by one, I will tell you, write down. I will not tell answers. I will give only hint to you, write down. Okay? Start from the beginning. Number of contracts to be traded. Write down. CMV. Write the answer. CMV. On the screen it is there, yeah? CMV. 1300 lakhs. You write as 1300 lakhs. Okay, na? Done. Next, second one, FMV. FMV equal to CMV into beta O minus beta N. What is O? Old beta. N, new beta. Books lo you will find beta O minus beta E. Beta E minus beta N, something there nonsense I will write. Existing new, adi meaning. Existing, how much is a beta? 1.19. I wanted to reduce it to 2, how much? 0.8. So balance only you have to do the hedging part. Equal to 1300 into 1300 into 1.194 minus 0.8. How much you got? 517? 512. Expand it. 512.2 lakhs. Correct or not? 512.2 lakhs means how many crores? How many crores? Yeah? Like write in crores. Now you are getting doubt how many lakhs makes a crore. 100 lakhs makes a crore here. 5.12 crores. So write down as 5 crores. 12 lakh, like that you write down. That's what I am asking you. Okay, we're done. Next, below that. So once completed, FMV also over. We will hedge in which market? Future. We want futures rate, spot rate, future. Spot futures value. Write down. Spot futures value. How much is the spot futures value in the given question? 1352. 1350 is what value? A spot value. We want futures. Spot la futures is traded. 1352. That's why this division becomes easy if you write in full value. That's why I asked you to write. 5 crore 12 lakh 20,000 divided by 1352. 37,885. 37,885. 37,885. 885 what? 885 indices you need to buy. Now, what is the contract size given in the question? 100 is a contract size. Okay, divided by 100. Divided by 100. So, tell the value how many? 378.8 crores. 8 contract. But 378.8 is not possible. So, how many contracts you should enter? 379. So, this is, if you wanted to enter into, if you want a beta of how much? 0.8 beta, this is the answer. Correct or not? Now I will ask you to do for one, something is given. How much? 1.5. Tell me, how much is the beta now? 1.194. I wanted to make it as 1.5. Means I wanted to increase the beta and decrease the beta. Na? I want to take extra risk. That's why in that previous question, long position he has taken. Understood? Do that. You will get answer in minus. If you get answer in minus, what is the meaning? For long, you should again take a long position only, not reversal. Start doing it fast. Same procedure. Done. How much you got? 3 crore 97 lakh 80,000 divided by 1352. 29,420. 29,423 divided by 100. 295 contracts. 294 or 295 anything. So 294 or 295, no problem. Those many number of contracts you should get. Understood the concept, everyone? That's it, sir. This is the end of the chapter futures. All the concepts have been covered thoroughly. Everyone got a full clarity on futures chapter? Come to the next area. Come to Forex. Presentation of this answer, as I told you already, please see here. Target beta hedging. Beta E minus beta N, like that you need to write. Like this you need to do. Small decimal differences can come. We got 1.194. I have taken 4 digits, therefore I got how much? 1.192. Like that, small changes may come. You got 378 contracts, huh? 9. I got 377. No problem. That decimal change, no, not a problem. Okay, 1 or 2 differences can come. So this is how we need to do. Okay. So with that, we have completed this particular area called as futures. Previous question, if you see, 1.36 calculation of beta portfolio for a long position. Read the notes once, you will get a clarity. Investor already has a portfolio. That means he has already taken a long position on cash market. To hedge the risk, he need to take a short position on futures. But the investor in this case is taking same long position. That means he is taking double risk, expecting extravagant returns. But he got extravagant loss. Okay. See here, I have given clear explanation here. 15 lakhs minus 2 lakh. Why that minus 2 lakh? Margin value reduction due to loss in futures market. So that's the answer. And that's how we completed this particular area called as derivative futures. Come to the Forex chapter. Okay, see here, listen please. In Forex area, problem will come in 2 different parts. First thing, not having a clarity on basics. What is ask rate, what is bid rate, everyone know. But when to apply ask, when to apply bid, how to understand in a given quotation is a problem. All this happens because of not having a basic clarity on the introduction areas of Forex. Once that is understood, chapter becomes very easy. Ask bid la problem may never happen. Okay. If you spend exactly 25-30 minutes for 20 minutes from now, in life you will never forget a concept of ask bid, why they come and why they go. Mark my words. After 20 minutes you see the change. But listen carefully to the first 20 minutes of the story. Okay. I am trying to tell you the introduction of this particular concept. Okay. I am not going to do all introduction concepts for you. This is not the time, I know. I will tell you the main important things which you need to learn to make strong in your basics of Forex. Shall we? Listen carefully. So first important thing, with regard to the Forex, what is the most important observation that we need to keep in mind? Number 1, basics. Basics la how many points are there? I will one by one I will tell you. Just see them, complete them, we'll go into the next part. See here. First, not all the questions on introduction. I have 20 introduction questions. All 20 I am not going to do. I will do 5 to 6 in that. What is very important for you at this stage, I will discuss about those. First, what is the bit number 2? What are the various foreign exchange codes? Okay. See here. First, There are two types of foreign exchange quotations. Number one will be direct quote and number two will be indirect quote. Next, one bit over. Second, what is a direct quote? Explain it with an example. Okay, see here. Direct quote. Direct quote represents number of units of home currency for 1 unit of foreign currency. Everyone repeat, what is a direct quote? Units of home currency for 1 unit of foreign currency is called as what quote? Direct quote. Now you should tell what is an indirect quote. Number of units of foreign currency for 1 unit of home currency is called as what quote? One last time, what is a direct quote? Number of units of home currency for 1 unit of foreign currency. What quote? Indirect quote. Number of units of foreign currency for 1 unit of home currency is called as a indirect quote. $1 equal to rupees 70. Let's say for example, I have written like that. Number of rupees, what is written? Number of currencies, what is written? Rupee. Single unit, per unit, what is written? Dollar. Therefore, this becomes what quotation? Direct quotation on. This is doubt first. So see, no one is filling the blank properly. Direct quote is a wrong statement. Direct quote on what is a correct statement? Okay, start again. This is a direct quotation on what? This is a direct quotation on what? This is a direct quotation on dollar against rupee. Direct quotation on? Direct quotation on? Against the? This is direct dollar ki direct quotation in India against rupee. Listening or not everyone? Okay. Now next. What is the next one? Indirect quotation. Read. $1 equal to a 1 rupee equal to a 1 rupee equal to $0.0143. Now tell me, number of units of what is written? Number of does not mean multiples of 1. It can be fraction also. Which is not 1 is number of units. Okay. Per unit what is there? Very bad response here. Per unit what is there? Next, number of units dollar is there. This is an indirect quotation on this. Are you understanding the point? This is a direct quotation and this is a indirect quotation. Understood the point clearly? Everyone in the class, idea clear? Now listen carefully. Point number 1. How many quotes are there? Number 1. Number 2. What is a direct quote? Number of units of home currency for 1 unit of foreign currency called as? Next. Number of units of foreign currency for 1 unit of home currency. What is that? That's all. Everyone understood the point clearly? Yeah. So direct quote, indirect quote over. Next one. Conversion of quotation. Simply indirect quote equal to 1 by direct quote. Indirect quote equal to means what? Tell me. $1 equal to rupees 70. Now I ask 1 rupee equal to how much? What you will do? 1 divided by 70. Correct or not? 70 is a direct quotation. 1 by 70 is the 1 by direct quotation. That's why it's called as what quotation? Indirect quotation. So tell me the formula. Indirect quotation equal to? That's it. Everyone understood? Now just on calculator you tell me. First tell me 2, 3, 4 questions. You got the answers, huh? 2, 3, 4 questions. What is 2? Tell me what are the various types? What is a direct quote? For is called as? Next one. Tell me. Now you see there. In this, given quotations are direct on dollar, direct on pound, direct on DM, direct on yen, you should tell. Okay? First, tell me. First one, direct, indirect. Direct, indirect. We are which banker? Mumbai is in? Therefore, we are seeing from Indian perspective. Anything you should tell from the Indian perspective point of view. Listening? Start. Tell me, what is the first one? $1 equal to rupees 60. Tell me now. Direct quotation on dollar against rupee. Next, second one. That's not direct, that's not indirect, because there is no per unit. That's what the first lesson and moral. Whenever quotations are given like this, first you should convert that into per unit on one of the sides. Listening or not? Tell me, if I write 1 pound equal to, how much it will become? 1.6, 100 divided by 1.6. Rupees? Now tell me, directa, indirecta? Directa, indirecta? Next one. Directa, indirecta, none. None. We need to convert it. Tell me, 1 dm equal to 21.28? 28. Okay. Next, 2800 then. Next, 1 n equal to rupees. 1 n equal to rupees 0.3. Tell me, direct, indirect? This is direct. This is direct. These two are indirect. These two are direct. We converted now, correct or not? Now I want one answer. Can you calculate and tell me indirect for all the four? Tell. Point 0.16. Next one. 0.016. 168. 16. Okay, done. Next one. 0.047. Okay, next. 3.3333. That's it. Everyone understood the direct and indirect quotations clearly? Yeah? Okay. So now we completed 2, 3, 4 and 5. Next, let us see the most important ones in this set. 6, 7, 8, 9. If you can solve, there is no chance that you will do mistakes in exam again on ask bid which rate to be taken. Okay, let's start from the basics. What is the sixth one? Please read. What are the various bankers' codes? How to understand any given quotation? What is the next one? What is the bid rate and ask or offer rate? What is the spread on bid and ask? How to interpret $1 equal to rupees 70-72? Next one. What do you mean by conversion of two-way quotations? Explain. These are the three questions which we are going to answer now. Okay. Please see here once. I will directly show you and explain. Rather than writing and spending some time on that, see directly the screen. Like yesterday futures law, how introduction we made? Do you remember? Introduction, once it is complete and a half concept should be over. Like that here also. Let's make a good introduction on this chapter such that problems become easy when you do. See there. Various types of bankers quotation. Bankers will have two types of quotation. Number one will be bid rate. Number two will be ask rate. Bid rate is a lower rate. Simply to tell, I am a trader. I'm a trader selling mic. This audio mics. I will buy and sell. I will buy at 100 and sell at 100. Obviously what I will do? I will buy at 100 and sell more than 100. Correct or not? Same bank also will do with the same. Bank is a trader on foreign currencies. If you are a trader on mic sets, I am a trader on currency. If you buy at a lower rate and sell at a higher rate, I will also do the same. Then why you are unnecessarily complicating that issue? Are you understanding the point? So now answer my question. Point number one. Tell me, bid rate, ask rate. How many quotations are there? Two types of rates are there. Bid rate. Bid rate is the lower rate at which bank will buy. Bid rate is the lower rate at which the bank will buy. Bank buys what? Tomatoes, potatoes, foreign currencies. Bank will bid $1 at a lower rate. That's why it's called as a bid rate. It will bid and buy. It will ask from you. Means it is selling. That's why ask rate came. Listening to the point or not? So one by one tell me. What are the two rates? Bid rate, ask rate. Bid rate is in any given quotation, lower rate will be called as a bid rate. Lower rate will be called as a higher rate will be called as a ask rate, also called as a offer rate. Generally institute uses ask rate. Therefore I never in the books use the word offer rate, because never in the institute book you will find the word offer. Understood? Generally, it is also called as offer rate, but I never use this in my book because institute books you will find only ask bid. Okay, you can see textbook also. Always ask rate, bid rate. These are the two words. So now tell me, ask rate is which rate? Ask rate is which rate? Bid rate is which rate? Bank buys and bank sells and buys at same rate at different rate. It will make profit or will not make a profit? Profit made by the banker on ask and bid is called as a ask bid spread. It's called as what? Ask bid spread. 70, 75. What is the spread? 5. What do you mean by 70, 75? Bank buys at 70, sells the same dollars to its customers at 75. Understood the point clearly? Done. Please read. And moreover, every question, transaction should be understood from the customer's perspective. Quotation should be understood from the banker's perspective. If a mismatch comes in this, answer gone. I repeat one more time. What I said? Transaction should be understood from customer's perspective because customer will do the transaction of import-export, not the bank. Listening or not? But quotation should be understood from banker's perspective because the bank is buying and selling the dollar, not you. Who is buying and selling? Answer. Bank. Are you understand the point or not? So now tell me, who is the dealer of foreign exchange? You are banker. So quotation, the rate of exchange should be understood from bank perspective. Transaction should be understood from customer's perspective. Sir, example I will give you. Listen, I said this way. Shall we? Yes, I made export of $5 lakh, I said. How to interpret this? I made export of, Koushik Mukhesh made an export of $5 lakh. How to interpret this? I made an export of how many dollars, sir? $5 lakh. Now you tell me, transaction I done, not the bank. Therefore tell from my point of view. I sold goods or bought goods, sir? Export I said. Sold goods or bought goods, sir? Therefore I will receive dollar, pay dollar. Huh? Is it transaction? Now tell me, I will receive dollar. So to the bank, I will sell dollar, buy dollar. Huh? Now tell me, what bank will do? Bank buys at which rate? Lower rate or higher rate? Lower rate will be which rate? That's how the quotations has to be understood. Understood the point or not? Transaction you should understand from the customer's perspective, but the rate and quotation should be understood from banker's perspective. When both these match, this chapter will become very easy to understand. Clear everyone in the class? Understood? Idea clear in everyone? So therefore this is the first point. The motive of this entire chapter is very simple. Identifying which rate to be taken in the exam. Okay? First tell me, what is the first rate? Next rate? Read this. Any given quotation shall be understood from banker's quotation. Though a transaction is made by customer with another overseas, the rates shall be quoted only by the banker, since only banker is licensed to buy and sell the foreign currency. So tell me, transaction should be seen from customer's perspective. Quotation will be seen from banker's perspective. Tell me, I imported goods worth pounds 10 lakh. Tell me the transaction. How to understand? We bought the goods. Therefore we have to receive currency or pay currency. Pay what? How many pounds, sir? 10 lakh pound. To pay the pounds, we should buy the pounds or sell the pounds, sir? Buy the pound. I have to buy the pounds means bank has to sell the pound. Bank sells at higher rate. Higher rate will be ask rate. That's how the ask rate will come in answer. Understood the point clearly, yeah, everyone? Idea clear, everyone in the class? This is the way in which we need to understand. Hopefully everyone had a clarity. Next. So, read this. Interpretation of bid and ask rate. Tell me, what is the bid rate? Banker's buying rate, ask rate. Banker's selling rate, bid rate. Customer's selling rate, ask rate. Customer's buying rate, bid rate. Lower rate, ask rate. Higher rate. 70-72, the 70 is a bid rate. 72 is a ask rate. Difference between ask and bid in a quotation is called as a spread, which is an obvious profit made by the banker. Completed. So understood bid and ask clearly, everyone? Everyone loudly? Okay, now tell me. Final touch for this Quotational basics. Let me explain clearly. You see and answer. We completed 5, 6, 7. Now we are into which question? Question number 8. Very, very important, complicated area. Takes 5-10 minutes time, but once you understand, no doubt will come in the basics again. Transaction wise, bankers quotation wise, understood everyone? Now practically in exam what they will ask, let us come. Always transaction will happen in one currency, quotations in the question will be given in another currency. Okay? Okay. How to understand that? Let me get the examples behind that. Very easy to understand. ரொம்ப simple concept, but still you have to understand why they come like that, then it will become very easy. Okay. First tell me. $1 equal to 70-75 I have written. Okay. 70 is what rate? 75. Bid means who will quote that bid rate? At a banker point of view, bid rate is a buying rate or selling rate? Answer? Dollar buying rate. Ask rate means dollar selling rate. See here now. 5 to 10 minutes you spend on this as I requested you. $1 equal to rupees 70 dash rupees 75. This is quotation. Okay. Now answer. $1 equal to rupees 70 or 70 dash 75. 70 to 75 or 70 dash 75. Means what? Lower rate is 70, bank buying at that rate. Higher rate is 75, bank selling at that rate. Understood? Okay. Now listen carefully. Problem with this chapter. Why always student find forex as a problem? The reason behind that is extremely very simple. Whenever I say commodity, commodity is a commodity everywhere in the world. Sir, I will ask a question. Okay? Tell me now. Please use this and tell. That's all. Nothing great required. What is this? What is this? In bottle. Clarity. Adi. Now tell me, what is this bottle? Water bottle. Some people are saying water is not there. Overaction. Tell me now. What bottle it is? Water bottle. Correct? Tell me. This is water bottle in India, in USA, in Africa, everywhere in the world. Answer, yeah? Now I will ask a question. Okay? Not a joke. Seriously answer this. Enna? Okay, na? See here. I gave 10 rupees. I took it. What I did, tell me. Purchase of? Loudly? Now, I am in USA, water bottle. I gave $2 and I bought. Tell me, how you will tell? Purchase of? Okay, I am in UK now, in London. I am purchasing this. Tell me, how to interpret? I think everywhere purchase a water bottle, eh? Really? Why? Bottle is a commodity. Correct or not, everyone? At the problem. Calculators, bottles, iPad, computers, all these things are commodities everywhere in the globe. But the problem with currency is commodity dollar in India is not a dollar in USA. Dollar is a commodity in India. Dollar is not a commodity in USA. People won't buy dollars in USA. Did you know, understand the point or not? Tell me no. Answer. What is this? Very good. India, 10 rupees. Tell me. Why you are not telling that I am selling 10 rupees? That you leave off, yeah? Why you are not telling that I am selling 10 rupees? Sir, see here. Again, 1 minute. What is this? I gave 10 rupees. You bought it. Okay, na? I am the seller. I am sitting in the shop. You gave. You said, how much is this? I said 10 rupees. You gave me 10, I gave you this water bottle. One friend of yours asked you, what you did? Now, you will tell, I sold 10 rupees and came. You will say up and down. You sold 10 rupees, you bought a water bottle. You did both. In reality, that is also correct. But we will not express our transaction on the point of view of the other part. We will express on the commodity point of view. Are you understanding or not? Tell me. Bottle buying is also called as what? Rupee selling. Bottle buying is also called as a rupee selling. Tell me. From my side if you tell. What I did? You bought. A person came and asked me, what you did? I bought 10 rupees. Then he will also see me up and down. Bought 10 rupees. How can you buy 10 rupees? Yeah? By selling water bottle. Then you must have told me selling water bottle. No. Indirectly I will tell everything. Therefore this is indirect quotation. Do you understand the point or not everything? So tell me, what is an indirect quotation? Understood the point? Thank you very much, bro. What is indirect? People don't have heart. So, point is, tell me now, thank you very much, but understand properly, indirect quotation is such a quotation where we will express the transaction other than from the commodity point of view. Here, what is a commodity? Bottle is a commodity. India ki dollar is a commodity. US ki rupee is a commodity. For India, dollar is a commodity. For USA, rupee is a commodity. Understood? Now I will ask a question. I am in India, you are in USA. Bankers, both of us are bankers. Express the transaction. Please listen. I am a bank. Okay, na? Customer came. He gave me dollar. I gave him rupee. I am Indian banker. Tell what I did. Start again. Please visualize the situation properly. I am which banker? Sitting in bank, Indian banker, forex banking unit. This is a forex banking unit. I have physical dollars. Physical dollars are can be given or cannot be given? Ask me. 6 months back I went to USA. I was there for 53 days and I came back. Happily you can buy $5,000 worth. Repatriation is also not required under FEMA. Understood or not? I stayed for 53 days. Traveler, sex I have taken, cash I have taken, everything I have taken. I stayed for 53 days and came back with the dollars again. Okay, so no problem. Physical dollars are also deliverable in India up to a particular limit as RBI specified under FEMA. Okay, now answer my question. Start. Point number 1. Who am I? Banker in India. Forex banker. I am Western Union. Thomas Cook. Western Union. Okay, SBI or any other forex banking unit. I am sitting here. Some customer came to me. He is my customer. He came. He gave me 1 lakh. Or say for example, he gave me 85,000. I gave him dollars. $1,000 for 85. Listening? Now tell me. Someone asked me, Koushik Mukhesh, what you did? You tell me. What I will tell? Loudly? Ayyo, why you are not telling I bought rupee? Because here commodity is what? Dollar is a commodity. For whom? Indian banker. For whom? Indian banker. Reverse now. Now you are the person. I am the customer. You are in USA now. You are in? USA. Now you tell. I gave you dollar. You gave me rupee. You are in which country now? USA. Tell me. I ask. What you did? What you will tell? I sold it. I bought dollar. Why you are telling that? Now did you understand what is direct and indirect? Are you understanding the point or not? That's how these transaction concepts came. Forex law, first confusion is the transaction banking unit. First you need to understand how the transaction is happening. So now you tell me, answer properly. Tell. Shall we continue now? Shall wavelength understood everyone clearly? Start now. Idenna? On what? On a dollar bid rate. Against which currency? Rupee. INR in the rupee. INR and it didn't strike to me also. What he is saying, INR. I means, okay. He is talking about Indian rupee. Don't complicate life here. Make it simple. You want Coke? No? Life is a magic. See there. So tell me, what is the lower rate? 70 bid rate. What is the bid rate? Amma, thank you. Ask. Now please apply. Next to 2-3 minutes, full clarity. What is this? Full transaction I am asking now. What is this? What is this? I said. It is banker's dollar buying rate. It is. Loudly it is. Very good. Next. Can I call it as US bankers rupee selling rate? Start again. Start again. What buying? What buying? Water bottle buying. What selling? Rupee selling. Like that. What buying? Dollar buying. What selling? Loudly, yeah? Rupee selling. But rupee selling will be for you or foreign banker? Loudly, sir, everyone. One last time I am asking. Properly answer. Don't make me to repeat this. Idanna? Which banker? Clarity. Bank can be there in India, also in USA. Tell me. Indian bankers dollar buying rate is this much. Okay. Same thing will become US bankers rupee selling rate. US bankers rupee. Now tell me. From US banker point of view, tell. He is selling rupiah, buying rupiah at this rate. Answer, sir. Loudly. Selling rupee means for him it should be ask rate or bid rate. Ask rate. Ask rate on dollar rupiah. Rupee. Ask should come on right side or left side? Right side. That's why you do the crisscross. So did you know we will always do the crisscross method or not, everyone? Just we will do one by. One by means because indirect quotation. We do crisscross or not? Start again. Start from beginning again. Till I get clarity, I will not continue. Start. $1 equal to 70. What does it mean by 70? Indian bankers dollar buying rate can also be said as US bankers rupee selling rate. But US dollar is not the commodity. So it should be written in per rupee value. Correct or not? Therefore, this will be US dollars buying rate or selling rate? Answer. 1 rupee equal to. Solupa. 1 rupee equal to. Fast. 0.0143. Okay, done. 0.0143. Tell me, what is 0.0143? US bankers rupee selling rate. Selling rate should be for them. Selling rate should be ask a bidda. Therefore, this 70 will become 1 by 70 and come to the ask. That's why we do crisscrossing. You did crisscrossing, everyone in the class? Why you did crisscross? This is the reason why you do crisscrossing. Or else we will mug up again. Whenever rates are given, indirect quotation, crisscross them. So, the logic is very simple. I call this B or B, any short or capital, anything. And the books sometimes it may change, that's why. Okay? This is A, this is B, and this is A. Per unit is A, number of units is B. Okay? Lastly, final touch. Don't tell the same story again. I am just asking different question now. This is in which format? Rupee by dollar, dollar by rupiah. And per unit should come in denominator always. Sir, rupees 40 per pen. Pen is in denominator. Like that, what is in denominator here? Loudly. This is in which format? Rupee by dollar. This is called as ask of, sorry. Very sorry. This is called as bid of rupee by dollar. This is called as ask of rupee by dollar. Tell me, this is called as? This is called as? Every time, one more time, one last time, this is called as bid of rupee by dollar. Next one, ask of rupee by dollar. Now, USA ki you tell me, USA it will be dollar by rupiah, sorry, rupee by dollar, dollar by rupiah. Directa, indirecta? Directa, indirecta? Here this is direct for us. For them that will become indirect. Are you understanding or not? For them the direct will be in 1 rupee terms. Direct will be in 1 rupee terms. Therefore, see here. 1 minute. Formula will be written like this. Bid of A by B equal to 1 by ask of B by A. Bid of B by A equal to 1 by ask of A by B. Next you should tell. Ask of A by B equal to 1 by bid of B by A. Next. Ask of B by A equal to 1 by bid of A by B. Practically I will give you one question. Try to do that, then I will believe that you understood. Shall I? Okay, tell me. $1 equal to rupees 80 dash rupees 85. This is the question. First express the thing properly. What do you mean by $1 equal to rupees 80 dash 85? Not like that. This quotation is given in India na in USA na. How do you know? Dollar is in commodity. Dollar is a commodity for USA na India na? Answer. Therefore, this is an Indian quotation. One clarity came. Listening. How to interpret $1 equal to 80? Indian banker buys dollar at rupees 80. How to interpret these two? Indian banker sells dollar at rupees 85. Clarity, yeah? Exact reverse you do now. US banker point of view, if you have to tell, how to tell this part? US banker sells, US banker buying dollar represents selling rupee. US dollar sells rupees. Okay, na? Sells rupee, okay. Up to there, okay. Selling is a ask a bidda. Answer. For the US banker, this should come on which side? Ask side. Okay. Now tell me, how to interpret this from our point of view? Indian banker buy dollar at 85. Sorry, sell dollar at 85. We are selling dollar means rupee is bought. Rupee is bought. Rupee buying will be expression of Indian banker or foreign banker? Foreign banker. Rupee buying means for them it will become a bid rate or ask rate. It will come to here. That's why 1 by 85 comes here. 1 by 80 will come here. Understood the point clearly? Yeah. What is 1 by 85? 0.01. Sir, some value. Everyone understood clearly? Yeah. Answer, sir. Everyone. Tell me. Now I will give one question. Shall we do together? This 9th question, if you can do. Seriously, I mean to say, ask bidla, never you will get a problem, because all 4 situations I kept in this question. One question you do properly, enough. 9th question. Consider the following quote by a Mumbai banker. Okay, first write down the quotation. How to read this quotation, tell me? $1 equal to rupees 26.5 dash 75. Correct? 26.5 dash 26.75. Then the difference will not be there. Hardly 1 rupee, 2 rupee difference will be there. Listening or not, everyone? Tell me, $1 equal to rupees 26.5 dash 26.75. First write down the quotation. I will ask the question, try to answer. One by one, try to answer the question. First, what is the first question it was tested there? Cost of buying $7,450 to you. That's the first question. Okay. Put the heading A. Cost of buying $7,450. Cost of buying $7,450. Okay. No notes writing. Just tell me the final answer. That's all. Quotation I want. Don't do anything. 1 minute. Listen. First, 1 second. We wanted to buy what? We wanted to buy what? Bank has to sell what? Start from the beginning. We wanted to. Bank has to. Bank sells at a higher rate or lower rate? Start from the beginning. Tell me now. We wanted to. We wanted to. Bank has to Bank sells at a higher rate will be. Therefore, required quotation will be ask of, what will be in numerator, what will be in denominator? Ask of rupee by dollar. Write down. Ask of rupee by dollar. Okay? Quotation ke they will give half mark in the exam. If you don't write quotation directly, if you write answer, 1 mark la half only will come, half gone. Because you copied from somewhere. You don't know the quotation. By fluke you applied it. That's how everyone will understand. You should write the quotation, ask. That's why if you see in any institute question, they will write clearly in the brackets first. Adi what by what, ask a bidda they will write. Understood the point or not? So, now you see, clarity will be there. In these two quotations, what is a ask, what is a bid? 26.5 ask, 26.75 ask. Below write down, $1 equal to, $1 equal to, rupees, write down, don't wait for me, rupees 26.75. Now, we have how many dollars? So, in the dollars write down, $7450 ke question mark. $1,99,288. Write down. 1,98,298. 288, 1,99,288. Okay. Completed. Take the second bit. Receipt on selling $18,340. Write down. Keep the heading. Receipt on selling $18,340. Receipt on selling $18,340. Okay, na? Same question I am asking again, repeat. We are selling what? Everyone, we are selling what? Bank has to? Bank buys at a lower rate will be? What is the quotation required? Bid of rupee by dollar. So simply, one second. Always keep in mind, what you are buying and what you are selling should come in the denominator. In the first question, you are buying what? Dollar is in denominator. In the second case, what you are selling? Dollar is in denominator. Always a buying a commodity will be in denominator per unit. Okay. Write down. Bid of rupee by dollar equal to how much? 26.5. Write down. $1 equal to rupees 26.5. How many dollars we are selling? $18,340. Question mark. How many rupees will come? That's all. Write down that. $4,86,010. Okay, na? Over. Done. Next to two bits say dangerous. Let me explain them. Before that, just keep the heading. Cost of buying rupees 55,000. Cost of buying rupees 55,000. Cost of buying rupees 55,000. Be careful. I ask a question, tell me. What is our commodity? What is our commodity? Dollar. First question, what is the commodity? Dollar. Transaction is also on? Straight away we answered. Second question again. What is the commodity? What we are selling? They don't make me to repeat here. What is the commodity? Second bit of what we are selling. Therefore, commodity is sold again. Clarity. Again, straight away we get done. Third bit of danger started. Okay. Tell me, what is a commodity? But transaction is happening on rupee. When question come like this, you can do this in three ways. First way, second way, third way. First way is a way in which I used to teach every time, which is the easiest way possible. Second way is a formula. Third way is a conversion. Second to third takes time. First one is dead easy. Tell me, what is the quotation? Stop, that's all. $1 equal to, and per unit is what? Per unit is what? They give rupee in transaction and dollar in transaction. Forget. We will express everything only in terms of dollar. You see there and tell me. See there and tell me. We are buying what? Rupees. We are buying what? Rupees. Means we are selling? Dollar. That's all. Continue with the transaction normally now. Tell me, we are buying? Rupees. We are buying. Rupees. By selling? Dollar. We are selling dollars means bank has to buy dollar. Bank buys at Lower rate. Lower rate will be bid rate. Required quotation will be bid of rupee by dollar. Bid of rupee by dollar. Value please. 26.5. Write down. 26.5. 26.5. Don't write rupees RS. 26.5. Okay. Now tell me. Now we should write on the rupee side. We are having 55,000 rupees. Question mark on dollar side. Understood or not? Tell me the answer. Write down properly. How many of you did not understand what I said now? How many of you did not understand what I said now? Even then, one last time I will repeat. Listen carefully. Quotation is in which currency? Quotation is in which currency? Commodity is what? Transaction is on what? Quotation is on what? Transaction is going on what? That means quotation and transaction is not on a same currency. You think only from the dollar point of view. Since it is a per unit currency, tell me. We have to buy what? Buy rupee. Buy rupee can also understood as a sell dollar. So tell me, from the dollar point of view, tell, we want to sell dollar. Bank has to? Bank buys at a lower rate will be. This is the answer. How much you got as an answer? 20? 20? No, sir. Tell me the second model you asked. Which model? Second one. I told a formula method you can use. Correct or not? Tell me. Now you tell, I will write here. Without doing in the way in which I said, using formula also you can do. But how to do using formula? $1 million question. See here. Screen. Buying what? Quotation is given on $1 equal to rupees dash 26.75. Here what is a commodity? Now you ask, sir, no sir. Why I will do like that? I will go from dollar point of view now? No. Transaction point of view I will go. I will complicate my life always. Sir, go. That way also your complication has a answer. Shall I tell you how? Tell me. We wanted to buy what? We wanted to buy what? Bank has to sell rupees. Bank sells at a higher rate. Higher rate will be ask rate. Start again from the point. Transaction you explain. We are buying what? Answer. First type what I said, whatever they gave, think only from commodity point of view. Second one, don't think from commodity point of view, go with the transaction point of view. Go with the transaction. Tell me, we are buying? We are buying? Bank has to sell rupees. Bank sells at a higher rate. Higher rate will be ask rate. Right, tell me, ask of, you are buying and selling dollar or rupee? Rupee comes in denominator now. So it becomes what? Ask of dollar by rupee. Can be written as 1 by bid of rupee by dollar. That's what we have done in the first case. Understood the point? Clear or not, everyone? You should practice 1 or 2 times. If you have no practice, how will you understand? If these things, if you don't know, how can you understand Forex chapter? Everywhere, step by step, doubts will come. Why they are giving that rate, why they are giving that rate, all these doubts will begin. First thing, tell me, how many of you did not understand? No worry, I will explain once again. Basics, if you are tough enough, chapter will be very easy for you to solve. Seriously, very easy. How many of you did not understand third bit? 1 person. Anyone else? Yes. One last time I am repeating, you answer. Third bit. What is your cost of buying 55,000 rupees? How many ways you can do? 3 ways. As a third way, you forget lastly I will tell. How many rates? 2 rates you can do. 2 ways you can do. Way number 1 is a direct route, indirect route. Direct route, what you should do? Whatever they give, I will think and interpret from commodity, per unit point of view. What is a per unit? What is a per unit? Cost of, I am buying what? Rupees. Forget about rupee. First, I will think only from dollar point of view. First you should tell, I am buying what? What is happening to dollar? Answer, yeah. Selling? I am selling dollar means what bank has to do? Bank buys at what rate? Lower rate will be what rate? Bid rate. What I am buying and selling? What I am buying and selling? Dollar. Should come in denominator. Numerator rupee is there. Over. This is one way of understanding. Okay? That means they may give the transaction from rupee point of view, but I will interpret everything only from per unit point of view. What is happening to dollar? You should see that only. Okay, na? Now you tell me, I am selling rupee means, I am selling rupee means, what is happening to the dollar? Buying dollar. Bank has to sell dollar. Bank sells it. Higher rate will be. What you are selling? Dollar. Dollar should come in denominator. What you are buying, what you are selling should always come in denominator. Listening or not, everyone? Commodity should be coming in the denominator. 40 rupees per apple, 40 rupees per pen. A per is always a per unit currency. Understood the point or not, everyone? Now tell me, indirect route we will see. Indirect route what we will do is, think from the transaction point of view. What is the transaction? Everyone loudly tell me, what is the transaction? 55,000 you leave. Buying what? Go from that point of view only. Okay? Tell me. I wanted to. Buying rupee. When I am saying buying rupee, rupee should come in denominator now. What should come in denominator? Rupee should come in denominator. Tell me now. I am buying. Bank has to. Bank sells it. Higher rate will be. Ask first to close the denominator first. Rupees. Numerator what should come? But the given quotation is in which format? Dollar by rupee. Given quotation is in which format? Rupee by dollar. I want which format? Dollar by rupee. Ask of A by B format, it is there. Do you understand or not? It will be written as what? 1 by bid of B by A. Therefore, 1 by bid of rupee by dollar. Therefore, 1 by, how much will come? 26.5 into 55,000. Tell me, 55,000 divided by 26.5. That's all. Answer is same. Understood the point or not, everyone? But Forex chapter you will not understand unless you practice. Practice makes you perfect in this chapter. 1-2 times you should try. Lot of transactions you try. Then full clarity will come. Then class work for all of you. I want answer for the fourth bit. Selling 92,000 rupees. I want answer from both the sides. Both options you tell me. Do it. Do it. Both sides you tell me the answer. Done? Tell me how much is answer? Tell me. I want both the interpretations now. First one, they have given the quotation in. They have given quotation in dollar. Transaction is in. First model of what we will do? Whatever they ask, we will understand only from the per unit point of view. What is per unit here? What is happening to that only you tell. Okay? Tell me. We are selling. Means what happened to dollar? Buying dollar. We are buying dollar. Bank has to. Bank sells it. Higher rate will be. Required quotation will be. Ask of rupee by dollar. Over. How much is answer? 26.75. Rate. 26.75. Total how much you will getting? Over. One answer over. No, sir, I will do from conversion point of view. Formula I will use. Then go from transaction point of view. Tell me, we are selling what? We are selling what? Bank has to buy rupee. Bank buys at lower rate. Lower rate is bid rate. We are selling what? Rupee. Rupee should come in denominator. Quotation will be bid of dollar by rupee. Bid of? Original quotation is given in which format? Rupee by dollar format. But we got dollar by rupee. But bid of dollar by rupee can be written as 1 by ask of rupee by dollar. Therefore 1 by 26.75 will come. This is how we should do. So understood the point clearly, yeah? Answer everyone? It is two ways of doing the answer here. Okay? Any one is okay. At the end, the answer will be same for both the option. Third option is nothing here. Directly the quotation they will convert into indirect first. 1 by 26.5 to the ask, 1 by 26.75 to the bid. Like that they will do more nonsense. Confusion will come, so let's not do that. First two models of whichever you felt comfortable, you do that. I always go by the first method because no nonsense method. Understood or not? Again, unnecessary confusion will come always. Shall we go into the next one? Basics everyone understood clearly, yeah? Okay, now, next one. Next concept what you have to understand is concept of what? Cross currency quotation. What is the concept here? Cross currency quotation. Okay. What is cross currency quotation? See here. Can anyone tell me what is a CCQ? Except full form. When we will use CCQs? When there is no? When there is no? Why they are given like that? That you don't know? See here. When we will use CCQ method, when two currencies are not quoted against each other, but both are quoted against one common currency. Repeat what I said. When two currencies are not quoted against each other, but both are quoted against a common currency, we will calculate cross currency quotation. We will calculate the cross currency quotation. Understood? Tell me what I said. Repeat. When two currencies are not quoted against each other, but both are quoted against a common currency, then we will calculate CCQ. Rupee pound not quoted. Everyone. Rupee pound not quoted. Dollar rupee quoted. Pound dollar quoted. Now we can calculate a rate between both of them. How? A by C equal to A by B into B by C. Everyone tell me. A is a rupee, C is the pound. Okay? Next tell me. Rupee by dollar into dollar by pound. If you do, dollar cancels, rupee by pound value will come. Babu Chitti, understood or not? Tell me what is the formula? A by C equal to A by B into B by C. What gives you? It gives you what? Cross currency quotation between A and C. Shall we do a problem on that? Get the clarity. Take question number 12. Just write down the quotations and start. Sir, first thing, how to write this quotation? Tell me. $1 equal to rupees 47.5 dash, rupees 47.62. Next. 1 pound equal to rupees 75.5 dash, rupees 75.6. They are asking you to calculate ask and bid for what? Dollar by pound. Tell me. In this quotation, dollar and pound are quoted to each other or not quoted to each other? First tell me one point. See here. See here once. We want what and what quotation? We want what and what quotation? Dollar by pounder, rupee by dollar, rupee by pounder. Which quotation you want? Everyone? But dollar, pound quoted to each other are not quoted. But both are quoted against one common currency. What is the common currency? Always A will be the currency, one currency you want. C is another currency you want, B will be the common currency. B will be the, tell me, in this quotation, dollar is what? A. Pound is what? C. Rupee is what? B. Now you tell me, what is bid of dollar by pound formula? Start. Bid of, start. Dollar by rupee into bid of rupee by pound. The basic calculation, yeah, A by C into B, A by B into B by C. Apply that formula, I am asking. Tell me now. See there, see the screen. Given quotation la bid of dollar by rupee is how much? Why? Okay. Sorry. I'm very sorry. So, the given quotation is in which format? Rupee by dollar. Here we want dollar by rupee. This can be written as what? 1 by ask of rupee by dollar. Now, did you understand why conversion of quotations is useful? Into, here the given quotation is in rupee by pound or pound by rupee. Rupee by pound. We also want what? Rupee by pound. Tell me. 70. It will be bid of rupee by pound. Tell me, what is the ask of rupee by dollar? 47.62 into bid of 1 by 47.62 into bid of rupee by dollar. How much? 75.5. See this. See here once. This is quotation. Let's not get confused. See here. $1 equal to rupees 47.5 dash 47.62. 1 pound equal to rupees 75.5 dash rupees 75.6. Up to here, everyone understood? We want what quotation? Dollar by pound. Both are quoted to each other or not quoted to each other? Dollar is A na B na C ya? Everyone in the class answer, sir. Dollar A na B na C ya? Pound A ya B ya C ya? We want A by C. Tell the formula. A by B into B by C. What is A? Dollar by pound equal to dollar by rupee into rupee by pound. Apply ask, apply bid on both the sides. Understood or not? Tell me, if you add bid, how it look like? Bid of dollar by pound equal to bid of dollar by rupee into bid of rupee by pound. I will ask a question, answer. See there and tell. See there and tell, please. This quotation is in which format? If you can't understand the format, what you will do in exam here? Tell me, this is given in rupee by dollar format, dollar by rupee format. Which format it was given? We want rupee by dollar, dollar by rupee. How to calculate? Reverse. 1 by ask of rupee by dollar. Just now I told you or not? Into given quotation. This quotation you see, second quotation. Okay. This was given in which format? Rupee by pound, pound by rupee. We also want what? Directly can we take or not? So therefore bid of rupee by pound. Now you tell. In this first quotation, this quotation, what is the ask of rupee by dollar? 47.5 or 47.62? 47.62 into bid of rupee by pound. What is the bid rate? 75.7. 5. Tell the value. 1.58. What is this rate? Bid ask? Bid. Bid $1 equal to, 1 pound equals to dollars 1.5855. This is a ask rate, bid rate. Now 1 minute time I will give you, do for the ask. Start calculation. Calculate the ask rate for the same. Solve it. If you solve on paper, then only you will get the doubts. At least you can ask me. Completed? Let everyone do. What is the answer you got? 1.5916. Sir, everyone got the answer 1.5916, sir. Now did you understand how to calculate the cross currency quotation and conversion, sir? Shall we move on to the next part? Over, sir. With this, we completed cross currency quotations calculation. Next. Most important ones are over. Next one. Sir, in the time available, what I will do is I will give you the overview of all the kinds of concepts that are there in the Forex chapter, such that practice timely it becomes easy for you to practice the questions and answers. Clear? And moreover, last time when I did the revision, I did a full-fledged revision on Forex as well. At that time, bonds, Forex, I did full-fledged. Every concept of Forex I touched, including cancellation, extension, early honor, everything I have covered there. Listening? Today what I will do is, sessions are over, I will sit, I will create a playlist for all the concepts. Listening? Whichever concepts are covered, I create a playlist. Whatever covered in these sessions, you need not visit there. Whatever is not covered but covered there, you can visit there. At any cost, one thing I can tell, all the chapters of AFM will be there. In one or the two revision, because, sir, first point, my motto of every revision, my motto is very simple. I just don't want to tell I completed entire revision by just reading the PDF. If that be the intention, I completed the revision yesterday itself. Are you understanding or not? If I put a PDF and read the concept, explain the concept and go without solving anything, now we might complete everything. But motive is not just to say that it was over. Whatever you attended, some confidence should be there. Are you understanding or not? So therefore, maximum possible extent, I will make you to understand each and every concept in this area. Listening? Time constraint, if one or two concepts are not covered, all the lectures are already there. From the point of view of revision, at least I kept everything I kept there. Listening or not? At the SFM, AFM make no difference because syllabus is essentially the same. Capital budgeting I kept there already. 6 lectures of capital budgeting I kept there. Have you visited at least? All 6 lectures like completed full concept of capital budgeting. You understand? The only thing that is required is you need to do some extra problems, that's all. Then you will get the confidence. Likewise, I covered also the Forex. Okay? But still, I will cover the Forex also now. Concepts I will explain now. Problems you can do it later. Okay, ba? All concepts I will explain. Not even a single concept I will leave. Including extension, early honor I will explain now. Okay. So, just your effort should be on doing the problems after that. Sir, I will solve the problems. Where answers are? YouTube I kept all the answers. Listening? All important 30 questions I have done in the last revision session. Last time when I did revision in Hyderabad, I have done revision. At that time I have done 30 problems on Forex. Okay, every concept I covered. Two problems I have taken because there I started first with Forex. Bonds I started, after bonds I started Forex. Therefore, those were covered full-fledged there. Did you understand what I said? Okay, but still, concepts explanation I will do one by one. Please listen carefully. Questions they will give margin. How to adjust the margin to a quotation? Next question. How to adjust the margin to the quotation? Listen. Margin you forget. Logic you tell me. Who will give the quotation? Who will give quotation? Bank want to make profit or bank want to make loss? Therefore, whenever bank buy, they buy at lower rate or higher rate? Answer. Therefore, margin we should be deducted such that buying price should become much more lower for them. Did you understand the logic clearly? Bank buy the foreign currency, bid rate or ask rate? Bank buys at which rate? Lower rate, higher rate? Lower rate is bid or ask. Therefore, bank buys at a lower or higher or lower. Margin should be deducted such that rate becomes much more lower. So, margin of a bid should be deducted. Margin of a bid should be deducted. Second, bank sells at what rate? Higher rate. Bank sells at what rate? Respond, yeah. Bank sells at what rate? Higher rate will be what rate? Ask rate. Okay, na? Bank sells at higher rate. Now margin has to be added such that selling rate should become much more higher. So whenever question la margin concept comes, first thing comes to your mind is banker's point of view. You should see the margin always, because bank charges margin, not the customer. Who charges? Loudly, sir. Bank charges what? Margin. Therefore, from whose point of view you should see? Banker point of view, you should see the margins. Understood the concept clearly? Okay. Now you see. No questions, no answers. Just do the question. See the question. I will show the answer. We'll go to the next concept. See there. A customer wants to sell a bill worth $1 crore to a bank. Bill matures at the end of second month. Bill matures at the end of second month. Okay. Tell me, after 2 months, dollar rate will be same or different? Loudly. Therefore, I will enter into which contract? Forward contract, and lock a rate today itself. Whatever may be the rate on the day, I will get the money at that particular level of dollar rate. Listening? Tell me, customer is selling a bill worth how much? 1 crore. Okay. Bill matures at the end of second month. If the bank charges a margin of how much? 0.5. Bank charges margin of how much? 0.5. Exchange rates are given below. $1 equal to rupees so and so. 1 month forward, 2 months forward. Tell me. First, from this another logic. Swap points whenever given. Ascending orderless swap given, we have to add. Descending orderless swap is given, we have to deduct. Why? I told in the books also, I told in the videos also, hundreds of times I told you. I told normally in my books, everywhere I used to write the reason. Do you know? Which if we add? Always, FEDI rules says that the spread made by the banker should be always have a profit. Okay? I will give you an example here. See here. See here once. As per the FEDI rules, what is FEDI? Foreign Exchange Development Authority of India illa. I know, you will tell that. Foreign Exchange Dealers Association of India. For us, DA means first Development Authority. You know, municipal corporation, DA means Development Authority. So, Foreign Exchange Dealers Association of India. Sir, okay. See here. FEDI rules, they said very clearly that forward spread should be always higher than spot spread. Loudly. Forward spread should be always higher than spot spread. Everyone? Forward spread should be always higher than spot spread. Spread is what? Difference between bid and ask. Simply to tell profit to the banker. Correct or not? What? Profit to the banker. Sir, you think from humanity point of view. Okay? Forget about all other things. Normal humanitarian grounds, let us think. Okay? Shall we? Yes, tell me. 2 rates bank is quoting. One is spot, another one is forward. One is? Spot. Another one? Spot. See here. Spot rate, $1 equal to rupees 80 dash rupees 85. 80 dash 85. What is the spread? 5. Okay, very good. Forward rate, $1 equal to rupees 83 dash rupees 86. Okay? 83 is more than 80, 86 is more than 85. Rate is higher. Spread you see. How much is a spread? Now tell me. Banker will get a profit of how much if he deal today? How much is a profit he will get if you go for forward? Why I will go then? Why I will go? Doing the bank is a mad fellow. Here it is written, I am a fool, come to me in trade. Banks will not do. When the future is not optimistic, why should I go and trade with you? Therefore, FedI guidelines were drafted in such a way that swap points should be added or deducted in such a way that forward spread should be always more than spot spread. What should be more? Should be always more than. I will give you an example. Tell me, $1 equal to rupees 80 dash rupees 85. Tell me, I gave 2 dash 4. How to do? Add a deductor. Also on that you got doubt, no? Ascending a descending a 2 4 means add a deductor. We are not adding ascending. We want forward spread to be more than spot spread. For that ascending order they are coming. Okay, tell me 2 and 4. 2 4. Add a deductor. Add. Tell me 82 dash 89. What is the profit here? What is the profit here? Forward spread is more than spot spread. No, sir, I will deduct. Sir, do deduction. Tell me now. 80 makes how much? 78. 85 will go to how much? 81. What is the profit? 3. You should not do this. That's why. Forward spread should be always more than spot spread. That means banker's future should be always profitable to him, or else why he will trade? If a customer comes to me and say, come to the forward contract, I will see 5 rupee profit today, 3 rupees profit there. Any businessman, what he will do? Are you understanding or not? He will tell that, okay, you go, please, no problem, don't trade. I am getting only less profit in that. Like that, bankers may hesitate to deal in foreign exchange. If they hesitate to deal in foreign exchange, India will go another 100 years back again. Therefore, you should be happy, I should be happy. Therefore, you do one thing. Always your forward spread should be more than spot spread. To be like that, ascending swap should be added, descending swap should be deducted. Understood the point clearly? Everyone in the class, shall we go into the next one? Okay, done. Now see here. You should see, not just saying yes, sir. What is the spot rate? 35.5. Next one, 35.55. First see, how good you are in understanding the practical questions. Let me also know. Tell me, customer is a export customer, import customer? Export customer, import customer? Export. He is making a sale of goods. He is making a sale of goods. Okay, now tell me, he sold goods worth how much? $1 crore. How many crore dollar? $1 crore. Okay. You tell, I will listen. Transaction should be understood from customer point of view. Quotation should be understood from banker's point of view. Tell me, I have to receive dollars or pay dollar. Start again. I am an exporter, importer. Therefore, I will receive dollar, pay dollar. Therefore, I will sell dollar to banker, buy dollar from banker. Bank has to? Bank buys it? Lower rate will be? Very good. Bid of denominator? Dollar. Numerator? Rupee. What is the bid? 35.5. This is a final rate to be adjusted. To be adjusted. How much margin is there? 0.5%. 1 second. Bank is buying or selling? Bank buys at lower rate. Margin should be deducted such that it should become much more lower. Minus 0.5%. Tell me 0.5% value. 0.17. Tell the total value. 35.3225. Yeah? That's all. This is the value. Everyone understood the concept clearly? Yeah? That's it. This is a rate in which you can give. Okay. Next. This is one kind of question that they can ask in exam. Next one. Take question number 19. 6 marks question. Again, there is a chance to come in exam. Please do that. 19th question you read. Okay. First, tell me, for the 19th question, what is a new thing we are going to learn? Let me first explain. Tell me, what is the date? 3rd April 2016. Bank quotes the following. because bankers only will give the quotations. Okay, see there, spot rate given $1 equal to INR so and so, bid ask. Bid, what is the swap points here? 70, 90 here, 160, 186. This is how many months? This is how many months? 3 months. Okay, now see, in a spot transaction delivery will be made after 2 days, assuming spot date as 5th April, spot date as 5th April, and assuming one swap point is 4 decimals you have to take, you are required to ascertain swap points for 2 months and 15 days. Everyone, 2 months and tell me, if we ask for 2 months, what you will do? If you ask, first tell me, swap points are in ascending or descending? 70, 90, 160, 186, both are in? Add or deduct? Add to what? Spot rate. To get what rate? Forward rate. To get what rate? Forward rate. Tell me now. If you ask 2 months, what is your answer? Plus 70, plus 90. Last 2 digits you should add. Which digit? Last 2 digits, because he said 0.0001. And for 4 decimal adjustment you have to do. Listening everyone. So here 70 you will add, here 90 you will add, answer will come. Correct or not? That is for how many months? If I ask 3 months, what you will do? I will put 160, I will put 186 and add. I asked for 2 months or 3 months or 2 months and 15 days. Everyone? So it's not 2 months, it's not 3 months, it is 2 months and 15 days. Do you know how to do? First tell me, answer my question. Idanna 3 months, so 160, 186. This is for 2 months. Gap will be for the 1 month period between them. Gap will be for the 1 month period. Take calculator. 160 minus 70. 160 minus 70. This is like bond valuation of forward rate type. This is for 2 months. This is for 3 months. I want for second month. Understood or not? Tell me. 2 months? 670. 3 months? Second to third month? 90. 90 is for 1 month between 2 to 3. I want 1 month of 15 days. 15 days. Half. 45. How much? 45. Tell me. That is for between what and what? That is between what and what? 2 and 3 la 15 days. That is a rate. I want for between rate. I want 2 months and 15 days. 2 months and already 2 months. How much? 70 plus half you got how much? 45. Therefore rate will be 135 points. 115, 135, 115 or 115. Come to this side. Come to this side. Second part. Tell me how much. 1 second. Tell and then answer. How much is that for 2 months? 90. How much for the 3 months? I want 3 months or 2 months or 2 months and 15 days. First we need the forward rate between both of them. Correct? 2 months 90, 3 months 196. Between for second and third how much? 90, half. 48. That 48 is for 2 months or 3 months or 15 days. 15 days. I want 2 months or 2 months and 15 days. 90 plus 48. 138. That 138. Here how much you got? 115. Here how much you got? 135. 138. Add both of them, you will get the final answer. Everyone understood the point or not? Everyone in the class understood? These are called as broken period forward rates. What forward rates? Broken period forward rates. Okay. So broken period forward rate means it's not full year. You have to break the year into 2 parts and then for the broken period you need to calculate that. Understood everyone? Clarity, yeah? Everyone says or no? Everyone understood? Next, I am going into one very important concept. International capital budgeting. How many of you have the clarity? First let me know. On that basis whether that should be taught or different concepts should be taught, I will discuss. 3 concepts are there in my mind to teach, which students are having lacking clarity. Number 1, international capital budgeting. This attempt, mark my word, today date time. Exam this time 12 marks question will come from international capital budgeting. So that is one question. Second important question, this time 90% they will give from nostro-ostro concept. Because students are not preparing. If I have to prepare question paper, definitely I will give from international capital budgeting. I always try to make question paper in such a way students should not answer. So, point is, nostro, ostro, loro accounts with banker's desk. That's one area. Second one is international capital budgeting with international fixtures effect. Number 2. Number 3, cancellation, extension and early honor. Cancellation, extension, early honor. Number 4, currency options and currency futures. Currency options and currency futures. If my prediction goes right, at least one, if my horoscope is very good, minimum 2 questions will come from this area. Okay. How many of the concepts you have clarity? First tell me. In these 4, which concept you have extreme clarity? Which of the concepts you have full clarity? Shall I tell you one thing? Those are the 4 dangerous areas in this chapter. Interest rate parity theory, no one will get doubt. Purchasing power parity, no one will get doubt. Doubts will come in these 4 areas. In that also, do you know what is a dangerous area? One, international capital budgeting. Second one is the nostro, ostro and loro. And bomb blast types, proper question comes in exam. Okay? So we have to understand the concept clearly. Let us first try to put a view on as to how this international capital budgeting works. Listening? I will show you the questions and I will show you the answers as well. I will explain the concept. My point is just to explain you the idea behind what is international capital budgeting and how questions will come. See the screen once. Yes. See the screen. What is the area? International capital budgeting. Also called as a multinational capital budgeting. Shall we? Listen, sir. Explanation will take 5-10 minutes time. Problem you can solve very easily once you understand the explanation part. Okay? See here. Problem is, international capital budgeting, first thing that student has to understand is there is not just one country involved in the transaction. There are 2 countries involved in a capital budgeting decision. There are how many countries? 2 countries involved in a capital budgeting decision. Generally, capital budgeting decision means one country will be involved in that. But in this, 2 countries will be involved. Okay? Now the concept what I am going to explain you will cover 2 areas. Area number 1, international capital budgeting. Area number 2, you have advanced capital budgeting chapter. Correct or not? In that one area is there called as inflation in capital budgeting. That also will be covered here. If you might have seen the videos already regarding inflation in capital budgeting, there I explain some concepts inside this also. Okay? First let me tell you what is the concept. You should feel comfortable. Therefore, let me first explain the concept clearly. See the screen? You don't have time? One time only I will tell. I will not repeat. If you listen, listen. That's all over. There are 3 kinds of cash flows. Money cash flow, also called as nominal cash flow. Real cash flow, also called as project cash flow. Number 3, discounted cash flow. Discounted cash flow. There are 3 rates. Rate 1, money rate, real rate. Okay? Or I will write this way, easy for you. First I will write this. Inflation rate, real rate, money rate. Inflation rate, real rate, money rate. These are the 3 things. Okay? First tell me, how many kinds of cash flows will be there? 3 types. Number 1, money cash flow, real cash flow, discounted cash flow. How many rates are there? 3 rates are there. Rate 1, inflation rate, real rate, money rate. This is the main idea behind this concept. Listening, sir, everyone in the class? Okay. First, always you should understand what is the real meaning of a discounting rate. Discounting rate always removes something and remains something. Okay, this concept in CA Inter capital budgeting NPV concept I used to tell. Which concept? NPV. NPV means what? Net present value. We think net present value means year cash flow PV at the rate of some percent, PVCF will be there, some answers, discounted inflow minus discount outflow, NPV. Correct or not? Generally we do that. But there is a lot of logic in putting numbers like that. Why we have to put all these things is the story of the discounting factor. I can't tell all these things now. I will tell in one point. Listen carefully. Whenever you discount something with a rate, that will first separate that. That means that will remove it. Okay? Sir, I didn't understand what you said. Sir, I will show you an example. Maybe you can understand better. Here, cash flow, PV at the rate of 10%, PVCF. You please tell me, I will write. Year 1, 2, 3. Cash flow 1 lakh. Cash flow 1,50,000 and 80,000. Tell me, 10% means 0.909, 0.826, 0.753. Tell the value. Fast, 90,900. Next, fast. 1 lakh 23,900. Last 60,000 240. Total 27,040. Correct? First tell me. Sir, listen. Lot of mind-blowing logic will be there in NPV. Try to understand first. Okay? See the screen. Point number 1. How much is the cash flow for the first year? Second year? Third year? 80,000. Now answer. First point number 1. PV at the rate of what? PV at the rate of what? 10%. PV at the rate of 10%. 10% is the cost of capital. 10% is the cost of capital. Let us say KE or KD or KO. Anything can be there. A cost of capital 10%. Understood up to here or not? See here. How much our normal eyes will always deceive us from various things. This is a classic example. I will ask a question, properly answer. Okay? PV at the rate of 10%. What is the answer there? PV value answer. See the screen first. PV at the rate of 10%. What is the value? Point. What is happening to 0.09 balance? Did you understand my point or not? 0.909, okay. 1 minus 0.909 you do? Point, 1 second, I will write here. Point 09, sorry, 0.091, okay. 1 minus 0.826. 1 minus 0.826. 174, 174. Next. Point. Tell me. What is 0.091? What is 0.826 and what is 0.753? That question also will arise or not. What is happening to those numbers? Suddenly they are vanished from here. Listen carefully to the logic. First point number 1. Hello, shall we? Listen, sir. Observation required. What is this? See here, I am drawing. What is this? Year 1 ante today na after 1 year? Huh? Loudly? After 1 year. Very good. What is this? What is this? These all cash flows are actual cash flows, are expected cash flows. Are already happened, yet to happen. May happen, may not happen. May happen or may not happen. It's guaranteed, unguaranteed. At the end of the day, certain, uncertain. Certain, uncertain. The bond paper agreement, you start the project, I will give you 1 lakh, 1,50,000 and 80,000. Guaranteed or unguaranteed? Certain, uncertain. Risky, not risky. Loudly. For risk taken, what you should ask? For risk taken, what you should ask? See the screen now. Tell me. I will tell discounted cash inflows. Okay? Discounted cash outflows. 2 lakh. How much? 2 lakh. Now you tell me. Equity gave 1 lakh. Debt gave 1 lakh. 2 lakhs I purchased an asset. That asset is expected to give how much cash flow in the first year? How much cash flow I am expecting to come in the first year? 1 lakh. Second year, 1,50,000. Third year, 80,000. Start. Answer. Capital budgeting, international capital budgeting. I am not understanding. Why you don't understand? If you understand this, you will understand that. If you don't understand this, you only start. Take the book, format copy. If exam the same problem come, we will do, or else gone. Why? Because they twist the questions. Obviously, a person tries to, question paper is a tough. Means they are not giving questions from the existing question banks. If they give directly, easy paper. If they don't give, tough paper. That should not be the parameter to tell easy and tough. Please see there, you understand the concept. Any problem you will be solving. I am the guarantee. See there once. Last 2 minutes, let's conclude. What is the cost of this project? Cost of this project. And investment in the project. Actually, she is correct. Whenever I say cost is in percentage only always. I'm not talking about cost. I'm talking investment of the project. How much? 2 lakhs. What is the return discounted inflow I'm expecting? 2,75,000 40. 2,75,000. Shall I ask you one question now? Tell me. NPV should be how much to accept? NPV should be more than how much? How much it should be to accept it? Can it be 2 lakh 1 rupee? Can it be 2 lakh 1 rupee? Can we accept or cannot accept? Accept. Why? NPV is positive. NPV is? I will ask a question, tell me. 2 lakh is the amount we invested, correct or not? 2 lakh 1 rupee, if NPV comes, we can accept the project or not to accept the project? Accept the project. Tell me, how much principal given by equity? Debt. You gave both of them how much? 1 rupee extra. Why you are accepting the project? Did you understand the point or not? My question is, how much principal they gave you? How much you are giving them? 2 lakh 1 rupee. Means who will pay them the returns? Is a question now. They gave you 2 lakh, you gave them 2 lakh 1 rupee, and you are telling that NPV positive, I will accept the project. Alright, they gave 2 lakhs, you are giving them 2 lakh 1 rupee back. And you are accepting the project. Do you understand the point or not? Ante, there is something else which we are not understanding. Actually, see the screen. See there's 1 minute. Let's see the screen. Point number 1. How much is the principal they have given? Very good. When they gave principal? I want perfect answer first. When they made investment? Loudly? Very good. Today is certain or uncertain? What is uncertain? Future is uncertain. Correct or not? Any future. Tomorrow, 100 years after, forget. Anything which is a future is certain or uncertain? Uncertain will be having a risk. Risk will ask a return. Risk will ask a return. Now you answer. See the screen. First year, how much I am expected to get? Guaranteed or expected? Today, after 1 year? Certain or uncertain? Uncertainty will carry what? Risk will ask. Risk will ask. Perfect. Now you tell me the answer. Which is more risky? 1 lakh is more risky, 1,50,000 is more risky. 80,000 is more risky, 1,50,000 is more risky. 80,000 is more risky. Why? More future is coming. 3 years after, what will happen? How would I know? 1 year after means at least to some extent I can expect. 2 years after, okay. 3 years after 80,000 means it is more uncertain than 1,50,000. Tell me now, start. How much is expected after 1 year? Second year? Third year? Which is more risky? Which is comparatively lesser risky? Which is lesser risk? Which is not having any risk? 2 lakh. Why the 2 lakh is happening? Today. 2 lakh happening? Remaining all the 3 are happening? Future. In that also, everything is not equally risky. Everything is not? Everything is not? Listen carefully. Whenever you hit, listen, whenever you hit cash flow with a PV factor, principal will automatically come out. Return will be separated. I repeat one more time. Take the, what is this? What is this? Hit the cash flow with the PV factor. Am I clear? Hit the cash flow with PV factor. The PV factor is the cost of capital here, correct or not? Whenever you hit the cash flow with PV factor, in what name you are hitting, that will come out. Idanna? I hit the cash flow with what? Now what will come out? PV factor is what here? Cost of capital, KO, correct or not? That will be separated. What will be separated? Return is separated. KO is separated and principal is separated. What is separated? KO separated. What is also separated? This is the principal part. That's why we are comparing it with the principal. Are you understanding the point or not? Now you tell me. Tell me now. 1 more riskier, 2 more riskier? Bad response. 1 more riskier, 2 more riskier? 2 more riskier, 3 years more riskier? High risk? That's why returns are increasing as the time periods are moving out. Understood the point clearly? Yeah? Therefore, what is increasing every year? Tell me. Interest rates are increasing every year. As the time passing by, risk is increasing, they ask more return. Tell me. What is this? Cash flow. What is this? PV factor. I hit the PV factor with the cash flow, or I hit the cash flow with the PV factor. With what name you are hitting? Not answering. With what name you are hitting? Cost of cap. That will come out and becomes invisible. In the table you can't see that. Are you understanding or not? Okay. What is this 1 lakh? Cash flow with risk or without risk? Answer. Loudly. Now tell me. We removed risk by taking return now. For the risk taken, what I gave you? Not answering again. Tell me. How much is the cash flow for the first year? 1 lakh is what? Return. Cash flow. Simply. Not return. 1 lakh is the cash flow. 1 lakh is the? Now answer my question. 1 lakh is the cash flow. Okay. That is coming today after 1 year. Riskier, not riskier? For risk, what I should ask? Answer. Return. For that return part, how much I am asking? 0.091. 0. For that risk taken, already they paid what? Return. Whatever this 90,900 is there, this is after return, after risk, without risk? With risk, without risk? Everyone? This 2 lakh is with risk, without risk? Therefore, both are compared. Understood the point clearly? Yeah. That's the real meaning of an NPV, what they wanted to tell. Understood the concept clearly? Yeah. So again, tell me, 1 lakh happens today na after 1 year? Riskier, not riskier? Certain or uncertain? Uncertainty will have a return or not? More uncertainty? Day by day, years are passing means more uncertainty is there. More uncertainty, more risk. More risk, more return. That's why return part will slowly increase. That's why even in case of bank loans, if you see, interest will go on increasing as the life is increasing. Do you understand the point or not? This is the real meaning of NPV. From this only international capital budgeting started. Who said all these things? This all logics. Who said? Who said all these logic? Koushik Mukhesh. They over action, yeah. Some person has to tell. That person's name is Fischer. That person got the Nobel Award for his greatest thesis called as International Fischer's Effect. Do you understand the point? So what he has does is he analyzed the NPV. He analyzed what? NPV. How NPVs are derived. So what is the real meaning of an NPV? NPV is a comparison of principal with the principal. Comparison of principal with the principal. That's why even 1 rupee excess principal you have given. Do you know what is the meaning of this 2,75,040? Listen. How much principal I taken from you? How much principal? In the 10% equity capital is there, debt capital is there, both cost is there. See how I am telling. I took 2 lakhs from you. Regularly I paid KE to equity, KD to debt. I paid your principal of 1 lakh, their principal of 1 lakh. After paying that, again 75,040 is still there. How big the project cash flows are? That's why even 1 rupee excess will be accepted. You understand the point clearly or not? That's why even 1 rupee project, even 1 rupee NPV come, people tell that accept the project. Do you know why that 1 rupee has obtained? After paying KE, after paying KD, after paying principal to equity, after paying principal to debt, even after paying all these things, still 1 rupee is there. 75,040 we call as a EVA. What we will call it? EVA. But this is not a realistic EVA, this is an expected EVA, because all these cash flows are guaranteed or unguaranteed. This 75,040 is a real gain, a fair value gain. Fair value. These values are called as what? Fair value. This 75,040 you should not transfer to P&L account. Understood or not? That's why there is one chapter in companies are called as a dividends. Which chapter? Dividend. Section number 123, subsection number 1, below there is a proviso. If you read that proviso, dividends should not be declared out of unrealized gains, notional gains, fair value gains. That is fair value gain. This is a financial management, financial purposes ki gain. This should not be transferred to P&L account and tell I got profit of 75,040. Understood? On this only international capital budgeting concept dependent. I mean it. How? Now see there. What are the 3 types of cash flows? Money cash flow, real cash flow, discounted cash flow. Why I said this NPV concept to you? For 2 purposes. Capital budgeting is there in the syllabus. When you do NPV, you should get a clarity. What is NPV? From today, when you put NPV numbers, I should come in your mind first. What he said. NPV na enna? NPV is a concept of comparing principal with the principal. Why? Returns are already deducted and that principal was there. Slowly returns will increase because time is passing by. More time, more uncertainty. More uncertainty, more risk. More risk, more returns. That's why returns are increasing. Principal recovery decreases. That's why even when you take loans from the bank, first year type plus second year interest recovery will not be there. That's the scam. Okay. Sorry. That's a different story. This is not the time to discuss. Up to here, everyone understood the concept clearly? Now, lastly, I told you one logic. Take the, hit it with what name you hit, that will come out. If you hit in the name of inflation rate, inflation will come out. If you hit in the name of risk, real rate will come out. If you hit with both together, discounting cash flow will come. Are you understanding the point or not? Sir, why sir 2 rates are there? I will ask you one question, tell me. PV factor will be made out of 2 things. Sir, PV factor 16%. 16% enna? Why 16%? Question will arise or not? Okay. PV factor is made out of 2 components. Component number 1, in capital budgeting context, not general context of PV. Capital budgeting context, I am telling. Listen. PV factor is made out of 2 things. Number 1, inflation. Number 1. Whenever you invest in the stocks, first what should come back to you? Your inflation should be compensated. Inflation should be? Can I ask you one question? Tell me. Inflation rate will be dependent on the project or dependent on country? Koushik Mukhesh one inflation. Some XYZ one inflation. She will have another inflation. Inflation will be person dependent, project dependent, country dependent. Risk will be dependent on project or country. Project will have risk. Do you know what is the point? See here. Country ki inflation will be there. World ki risk will be there. Country? Inflation. Indian inflation, Japanese inflation, same or different? Indian inflation, US inflation, same or different? Number 2 question. Project I started. What I started? Project. Tell me. 1 lakh 50, 1 lakh 50, 80,000 enna? Cash loss expected. Expected cash loss, guaranteed or unguaranteed? Certain or uncertain? Uncertain if I start in India, uncertain if I start in Africa, uncertain if I start in Netherlands, uncertain if I start in USA, everywhere. Cash flows itself are expected, mean any country it is expected only. Expectation may go right, may go wrong. That means this NPV is true if everything happens as per plan. If these cash flows this side, that side, if it change, NPV will be same or changing. Now tell me, this project is having two risks. Number one, inflation risk. Number one, number two, project risk. Which risk? Project risk. Capital budgeting done in USA will have accurate cash flows. They also will expect it. UK expected, Dubai expected, everywhere cash flows are expected. When I say the word expected, it is uncertain. Whichever country you start, it is only expected. Now tell me, I ask you one question, tell me. 1 lakh, 1 lakh 50, 80,000, guaranteed or unguaranteed? Huh? Certain or uncertain? May or may not happen. Am I clear? That means this project is having a risk. This is called as a, listen, 1 second. Universal real rate. Which rate? Adi India la started, Africa la started, Mars la started. Forget about it. Everywhere cash flows are expected. Expected means it may happen, may not happen. That may or may not happen itself is called as uncertainty. Uncertainty itself we call as what? Risk. That's what you are going to see in advanced capital budgeting also. Listening, first thing you have to do is after the classes, go to YouTube channel, listen to the advanced capital budgeting lectures clearly. This time be very specific. Forex will have weightage because last time they didn't ask properly from Forex. This time dibide. They will ask properly, they will ask questions in exam this time. So please be very specific about Forex chapter. Okay? Forex anyway I covered, again I will come up live, no problem for you. I will take care of the Forex chapter, including all the problems I will do. If here physically not sufficient, I will take that. I have a channel, so not at all a problem. I will be there till you write exam. But answer to my question, I didn't complete it. Answer to my point. Point number one. Every country will have what? Inflation. Every project will have what? This risk will be same for country or same for project? Project. Wherever started. That means you start project in India, USA, UK, everywhere it has a risk. It may happen, may not happen. That risk will be there everywhere you start. That's why they call it as universal risk. Which is universal risk. Please listen carefully, sir. Answer. Last time, one time I am asking. Take the cash flow, hit it with the PV factor. With what name you hit, that will come out. I told you or not? Tell me. In a PV factor, two parts are there. Number one, inflation. Number two, the risk. Number two, risk. Okay. See. Money cash flow. Enna cash flow? Money cash flow. Which cash flow, sir? Money cash flow. Money cash flow is a cash flow which contains both inflation as well as risk inside that. Both inflation as well as risk inside that. Okay? See the screen once. See the screen, sir. One last question for you. See there. Okay, I will do this way. Fastly you can complete. Here, I think today Sunday class is not there. Can I extend? Today for them, I think class is not there. That's why they didn't commit. If you want me to extend, I will extend. No problem. Shall I do that? I will complete these concepts. That's why. If anyone has any urgency, you can leave. No need to ask me. You can leave. If you want to sit in the class, you can sit. I will explain the concepts. You want to leave? See here, year cash flow PV at the rate of 10%, PVCF. Sir, if anyone have any work to be done who is committed only up to 130, please you can leave, no problem, but I will continue till these concepts are completed. Okay, see there once. Year cash flow PV at the rate of 10% PVCF. Okay, na? Now tell me. Year 1, 2, 3. Done. Tell me, what is a cash flow? Start. Cash flow is the inflows a project gets deducted by the outflows we have to make. Net is called as an inflow. Cash flow. Okay, tell me. Please see there. Sales minus purchases, or sales minus all the costs, materials, labor, overheads, everything you remove. Cash only will become the cash flow. Correct or not, everyone? Tell me, sales minus cost will become what? Cash flow. Don't tell profit. It is cash flow because depreciation we will add back. What will add back? Depreciation we will add back. So forget about it. Start again. Tell me, cash flow equal to what? Easy way. Please tell me, what do you mean by sales? What do you mean by sales? Inflow, what do you mean by sales? How the sales amount will come? Number of units into sale price per unit. It will blow your mind. Wait another 2 minutes. Bheja fry. Start again. Sales equal to dash. Number of units into sale price per unit. Next. Cost. Number of units into cost per unit. Cost 3 types will be there again. Material price per unit, labor price per unit, overheads price absorbed per unit. Overheads are absorbed. Correct or not? Sir, tell me now. Start again. Tell me. Sales equal to dash. Units sold into sale price per unit. Next. Cost, number of units produced or sold, whatever the case may be, into cost per unit. That will be taken, deducted, we will get net value. Other we call as a cash flow. 1 lakh, 2 lakh, 5 lakh is the difference between both of them. Hey, listening? Yes, you tell me, I will listen then. Here, 2 problems are there. Problem number 1, tell me. Number of units. First year, I expected 10,000 units. Second year 15,000, third year 20,000 units. Number of units what I expected to sell will be guaranteed or unguaranteed? Everyone? Ante production la uncertainty is there. Number 1 over. Correct or not? Sale price per unit, I will only decide 10 rupee, 10 rupee, 10 rupee I have taken. Understood or not? Now I will ask a question, tell me. Labor will be available at same cost every year? No. Very good. Next. Materials will be available at same rate every year? No. Electricity bill, unit rate, rent, all these things will be same or different? Because inflation is affecting. Therefore, see here, my sale price this year, my sale price next year will not be same. Correct or not? Number of units also doubtful. Here 2 types of risks are there. What is the risk number 1? Sale risk. Risk number 1. My project sale may happen. This is risk of the project. Next. Inflation is also there because again material cost, labor cost, overhead cost will be same every year changing. Change according to the inflation. Means, tell me. This year, 1 year after. What year? 1 year after. Number of units expected 10,000. Number of units 10,000 into sale minus cost, net cash flow per unit. Listening, I am taking 10 rupee. 10,000 into 10 rupee, 1 lakh we got in that question. Listening or not? That 1 lakh, certain or uncertain? Uncertain because of how many reasons? Reason number 1. Uncertainty of number of units, uncertainty of inflation. Listening or not, everyone? First year 1 lakh, second year 1 lakh 50,000 we have written or not? Because sale price is inflated, cost is also inflated. Okay, what we have to do? Whenever capital budgeting CA interlaw you might have done, correct or not? CA interlaw you might have done capital budgeting or not? Do you know in that capital budgeting with what assumption we will do the problem? We will do the problem with an assumption that the PV factor, 1 minute, cash flow given is a money cash flow, PV factor given is a money rate. Repeat what I said. Cash flow given is a money cash flow. Money cash flow includes both risk and inflation into it. Money rate risk and inflation also included. When you hit it, both are coming out is an assumption there. Listening? In final, they don't give like that. Advanced capital budgeting, neither international capital budgeting, they don't give like that. They always try to twist the question. What they will do, listen first. Listen, don't get confused. Listen carefully. They will give you project cash flows in the question. They will tell which cash flows they are. They will tell these are real cash flows. What cash flow? And the inflation is removed, but risk is still there. What is removed? Inflation. What is still there? Therefore, the PV factor what you use should have only risk inside that, not inflation. We have to calculate that. Understood the point clearly? Yeah? PV factor is made up of 2 factors. Number 1, inflation. Number 2, risk of the project. Correct or not, everyone? Now tell me, whenever you hit the cash flow with the PV factor, with what name you hit, that will come out. See here. First year cash flow 1 lakh. It includes 2 things: expected number of units, inflation on sale price and cost. It can have inflation, risk, both. PV factor also should have both, such that if I hit with this PV factor, both will come out at once. Listening, everyone? Understood the point clearly? So, CF internal our assumption is they have given money cash flow, we are given with money rate, we are hitting both of them, answer is coming out. Problem with if you don't do like this in companies, do you know what will be happening? See here. Sale price today 10 rupees, cost today 5 rupee. All the years you will take that 10 rupee, 10 rupee, 10 rupee, 10 rupee, 5 rupee, 5 rupee, 5 rupee, 5 rupee you will take. And without considering inflation or with considering inflation? Without considering inflation, you will project the cash flows. You will put it before MD, CEO. CEO saw that. Okay, he don't know about capital budgeting techniques. Taka, he put a tick mark. Said NPV positive or negative? You said, sir, positive 20,000 rupees. Accept the project, he said. 1 year completed, prices increased. You projected as per those costs. Now your NPV will go right or go wrong? Go wrong. That's the problem. Therefore, project cash flow should be always having both risk as well as inflation. You remove both of them and show me the NPV. That means it should give such an opinion that even after removing the inflation and risk, still I am getting the NPV positive. Understood the concept clearly? Yeah. So therefore, include all and then remove them. Then you show me the project. That is the right way of doing the analysis of a particular project. Understood the point clearly? Yeah. So final touch for this. I will close. Listen carefully. So the final point is, you tell me, I will write. There are 3 cash flows. Sulipa, what are the 3 cash flows? Money cash flow, real cash flow, discounted cash flow. Money cash flow will have both inflation and risk. Real cash flow will not have inflation, will have risk. Discounted cash flow is not having inflation, is not having a risk. We removed both and shown the answer. That's why we call it discounted. Discounted for inflation, discounted for risk. Means separated inflation, separated risk. Even after separating both of them, still we are having a positive NPV. Understood the meaning or not? How the project has to be analyzed? This is what they said in advanced capital budgeting. This is what they do in international capital budgeting also. Shall we start doing this? 1 or 2 things. If you learn, it will be easy for you to understand. Please see the screen. Tell me, what are the 3 rates? Inflation rate, real rate, money rate. Okay? Inflation rate, real rate and money rate. Please listen. Please listen. Yesterday bond valuation, first sessions, bond valuation we have done or not? Bond valuation, how I done? How I did forward rates? Tell me. We did forward rates. How I did forward rate? Always one-on-one basis we will do the forward rate. Correct? Every year forward rate is not same. Then what we have done? 3rd year will brought to 2nd year. 2nd year will be brought to 1st year. first year will be brought to 0 year. That's how we will do discounting, correct or not? Same. Here, years are same. Point is, we will first use IR, inflation rate, remove and bring it to real rate. Real rate you discount, you will come discounted cash flow. Understood? See the screen. There are 3 cash flows. Money cash flow, real cash flow, discounted cash flow. Correct? Listen sir, or else you can't understand. Money cash flow contains what and what? If I hit something with PV factor, what will come out? With what name you hit, that will come out. Correct or not? Hitting here represents what? Discounting. Hitting here now. See the screen once. Money cash flow hit with inflation rate. What will come out? What will come out? Inflation came out. What will remain? Real cash flow. Real cash flows will contain inflation or risk. This is same for every project, same for every country. Same for every project started in any country. Inflation is same for particular country. That's all. Country to country it will change. Country to country what will not change? Project risk. Country to country what will change? Inflation. See there. Real cash flows, I discounted them with real rate. Discounted them with real rate. What I will get finally? Discounted cash flow. Instead of doing 2 times, I will directly discount by money rate. Directly discount by money rate. Why? Money rate contains what and what? Inflation as well as risk. Therefore, I can write as 1 by 1 plus MR equal to 1 by 1 plus IR. 1 by 1 plus IR into 1 by 1 plus RR. Okay? Equate the denominators. 1 plus MR equal to 1 plus IR into 1 plus RR. MR equal to, MR equal to 1 plus IR into 1 plus RR minus 1. This is how steady material formula came. Are you understanding the formula clearly? Yeah. This is how they derived the formula. And moreover, shall I tell you another thing? Tell this one, again rewrite this, 1 plus MR equal to 1 plus IR into 1 plus RR. 1 plus? Loudly, 1 plus? Now tell me, 1 plus RR equal to 1 plus MR by 1 plus IR. RR equal to 1 plus MR by 1 plus IR minus 1 is another formula in the study material. I think you might have at least seen before. This is how that formulas came. Understood the point? I tried to explain you the entire logic. In the book I have written line by line whatever I said now I have written here. So volume estimate, cost estimate, how it will be made. See this. This itself if you see, enough. You can understand the entire capital budgeting, international capital budgeting context. Okay, what? Done everyone? Okay. See here, 49th question. One question if you do, you will get a clarity. Extra questions if you want, you can see there. I have done extra questions also there. But 49th question itself, it's there in study material also. Okay, forget about study material. See the screen. On calculator we can do an answer. See, take question, see question number 49 in the book. See here, what is there in the question? Let us see first. Do you know what we will do now? You will do the answer perfectly without a mistake. 6 marks question, 6 out of 6 we need to get. How to understand this? Let us see. See the screen. ABC Limited is considering a project in USA, which will involve an initial investment of $1 crore 10 lakhs. The project will have a 5 years of life. Current exchange rate 48 per dollar. Risk-free rate in USA is 8% and same in India is 12%. Cash inflows from the project are as follows. Some cash flows are given. Calculate NPV of the project using foreign currency approach. Required rate on this project is 14. Sir, I will tell you there are 2 approaches. How many? 2 approaches. 1 minute. See these ones. What are the 2 approaches? Home currency approach one. Next, foreign currency approach is the second one. Home currency approach lo what we will do, foreign currency approach lo what we will do, let us understand first. Home currency approach means we will convert foreign currency cash flows every year with the exchange rate and convert them, and PV factor, listening everyone? You will convert what? Convert what? Foreign currency cash flows into home currency. Once you convert into home currency, problem of inflation will not come now. Our inflation rate only we will take. Tell me, our India project started. We will use our PV factor. We will use our risk is same everywhere. So problem will not come. Problem will come only with what? Inflation rate. Because your country inflation, my country inflation is not same. So PV factor for your country and my country is not same. But if I convert cash flows into rupees, I will use our PV factor directly. So problem will not come if question comes on home currency approach in exam. Problem will come if you have to do the answer in the foreign currency approach, because you should use the foreign PV factor. Which PV factor? Foreign PV factor you should use. Dead easy. If you listen to the discussion what we made now, much more easy. First answer to my question. Point number 1. Home currency approach you forget. See the foreign currency approach answer first. Start. Estimate the future cash flows in which currency? Foreign currency. In the question, I have given some cash flows. Step 1 over. Step 2, calibrate the appropriate rate, either MR or RR, depending on the question. If they gave RR, we have to calculate MR. Don't give everything, inflation is given also, we have to calculate. Next, calculate the discounted cash inflows at that discount rate. Identify initial investment in foreign currency, calculate NPV and decide. Rather than seeing like a steps, let's directly see the question. You will only do. I will only help you with the numbers. Okay, start. First point, tell me, see the question. What is the life of the project? Spot rate. Risk-free rate. 8% in India. USA. 12% in? Okay. First tell me, what is the required return on the project? Answer. 14% is the required return in our country. In our directly don't apply that 14. Our country home currency lo 14. Which country lo 14? Home currency 14. Okay. First answer to my question properly. Start one by one. Listen carefully. First thing, inflation rates given or not given? Sir, why risk-free rates you are taking as inflation rate? Again mucking up. Question something we saw for consistently 2-3 questions we will take. I will give you an example. Tell me, you invested money in RBI. Risky or risk-free? Risk or zero risk? But they give return or will not give? That means they are not giving for risk taken, they are giving for inflation. That's why risk-free rates are called inflation rates. That's the logic. That's why always risk-free rates are considered as inflation rates. Are you understanding the point or not? That's why always we will always ask for, do you know KE equal to RF plus beta into RM minus RF. That is the same. RF and inflation, remaining is the risk premium, inflation plus risk KE. Are you understanding the point or not? That's how the concept came. RF plus beta into RM minus RF. If you anyone have attended regular sessions, you can understand. 3 days I used to tell about the derivation, how the concept came. So how that formula came. CAL, CML extended, after that CAPM came. I understand portfolio why I didn't tell? You know, 6 hours, 12 hours I uploaded already in the YouTube. Portfolio theories and asset pricing models. Regular class la 59 hours portfolio. In fast track la 30 hours. Revision ki 12 hours I kept in YouTube already. Covering all important concepts of portfolio theories. From exams point of view. Okay. Now see this screen. I ask you one question. Fatafat give the answer. Inflation rates given, not given? Given, not given? Given. How much? ఇండియాకి 12, యూఎస్లో 8. ఇండియాలో హౌ మచ్ ఈజ్ ది టోటల్ ఎక్స్పెక్టెడ్ రిటర్న్? మనీ రేటా రియల్ రేటా? మనీ రేట్. మనీ రేటా రియల్ రేటా? టెల్ మీ నౌ. యూ డూ వన్ థింగ్, రైట్ ఎ షెడ్యూల్. ఓకేనా? ఫస్ట్ రైట్ డౌన్ 2 columns should come. One US, one India. USA, India. Okay? First, left side you write down three words, you write one after another. First, inflation rate below, real rate below money rate. 2 columns, left side ki 3 points. Inflation rate, real rate, money rate. Okay na? First tell me, US la inflation is how much? Write down there 8%. Next, India la inflation? Write down 12%. Real rate given or not given? Not given. But India ki MR is given. How much? 14%. Write down. Over. How many numbers are available? How many numbers are available? Now I will ask a question, you will answer. One second. Listen carefully. IR for India is there. MR for India is there. RR can we calculate using the formula or not? Calculate RR. RR equal to 1 by M, 1 plus MR, 1 plus MR divided by 1 plus IR minus 1. 1 plus MR. 1 plus 0.14 divided by 1 plus 0.12. So 1.14 divided by 1.12 minus 1. Tell how much? 1 second, give calculator. 1.14 divided by 1.12 minus 1 into 100, 1.785. 786 almost. 1.785 or 786. Correct? 1.786% is what? Real rate. It is real rate. Real rate for India na USA na? Both. That will be same. So fill. RR is filled. 1.786, 1.786. And the risk is very less. The only thing affecting this project is inflation. Listening or not? Okay, done. Next. What is the next one remaining? USA ki IR is there, RR is there. Can we calculate the MR or not? Write down. 1 plus MR equal to, or MR equal to 1 plus RR into 1 plus IR whole minus 1. Tell me, what is the IR of USA? 1.08. No. 1 plus 0.08. I said total answer. Do it, everyone. Don't sit idle here. Do it. 9 point? Now what you have to do? Tell me. Tell me what you have to do. PV at the rate of what we have to do? 9.93. We will get some PVCF or not? So first tell me, have you got 9.93 answer, everyone? Everyone? See here. Whether it is right or the right means over, done. Your work is done. Over, done. That's all. 9.93. Understood the answer how to do or not? This is how international capital busting answers has to be done. Everyone got the point clearly? Very good. Sir, home currency approach, if it is given, what to do, sir? Spot rate was given or not given? Given. Spot rate given, not given? Given, not given? Given. What we will do is, we will use interest rate parity theory or purchasing parity theory and we will convert forward rates. Calculate what rates? Okay, see here. If you see, I can explain. See there. This is home currency approach or foreign currency approach? This one. Foreign currency approach. Same if you do in home currency approach, same answer should come. Correct or not? Now see, I have done also that. Not asked in exam, but I did it out of my self-interest. See there, what I have done. See the answer directly. Do you understand what I have done? IRPT, PPPT we can use and calculate the values or not? Okay? Forward rates are calculated respectively. Using the forward rate, we converted every year cash flow. every year cash flow. That's all. 14% directly apply, you will get the answer. Understood the point everyone or not? Now tell me. In this question, I will ask one question, first answer to this. In this question, bankers' forward rates are not given. Therefore, we calculated PPPT or IRPT, we calculated. Listening everyone. These are all bankers' quotations. We calculated using the spot rate with inflation rates. We calculated. These are all called as PPPT or IRPT forward rates. Correct or not? Like this, can banker also give a quotation or not? He will never give, because these are all expected cash flows. They can't give forward rates for that. You went to bank. You said, bank, I want dollars. How much he asked? $20 lakh. Show the invoice. Invoice illa expected. Then come on, that expected becomes a reality. Why you are coming today? No, expected. Expected, why I will give you? I will not give you on expectation. That's why capital budgeting question, nowhere banker rates will be there. All are expected rates. You should expect using rates. Now, did you understand my point clearly? Yeah. Do you understand one great logic in home currency approach? You didn't. Shall I tell you what? Ingapar. See here. What is the first year cash flow? Naina, please don't waste my time here. What is the first year cash flow? Exchange rate you have taken or not? 49.77, and you converted that or not? Answer, sir. Converted that. Now tell me, you are removing inflation. PV factor I am not asking. PV factor will remove inflation, etc. This PV factor is in India, correct? This contain inflation, this contain risk in that. This contain. First tell me, 20 lakh, 25 lakh, 30 lakh, 40 lakh, 50 lakh contains inflation in India, inflation in US. Inflation in risk in India, risk in US. Overall risk is there. So we use exchange rate, we converted. Correct? This PV factor is 14% is India risk inflation combination. Correct? But this has US inflation or not? US inflation is removed in this. Yes, inflation rates are already taken. That's why PPPT only will be used. PPPT always takes inflation into consideration. So already inflation is removed and we calculated. Okay? That means these cash flows are having inflation of India and risk of India project. That's why 14% directly we will calculate. That's it. Khel khatam duknam band. This is how all the capital budgeting questions are drafted. So many other different concepts are also there. When time permits, I will put it on that. But up to here, everyone understood clearly, yeah? Last and final, I will discuss you about the concept of extension, early honor and cancellation. Which one? Extension, early honor, cancellation. Can I take extra half an hour? Can I take extra half an hour? If you are able to sit, I will continue, sir, or else I will close. How many of you say yes? No problem, you need not hesitate. How many of you want me to continue? Another half an hour. Oh my, thank you very much. So, but when I saw faces, I said half an hour extension. Half an hour extension, how dare? Like that some people saw me, that's why doubt came. Sir, okay. Next concept is extension, early honor. 1 minute. Okay, now listen. Next concept is extension, early honor and cancellation. Whoever is feeling this concept difficult, I will show you one classic example. Just to follow that, fatafat you will complete. See the answer, see the screen once. See here. See here. Shall we? Okay. This was taken from the old ICAI textbook. Dates say changed. Dates are same. Concept small little changes I made. But literally ICAI once upon a time has given this example in its textbook. Later this is also removed. Okay. So now it is also not there. 2014-15 time textbook they kept this example. After that they removed. Okay. Maybe student is not understanding. I don't know what is their intent exactly, but they removed. But I like this example. Let me take this particular example and try to explain. First, listen carefully. Point number 1. Whenever a person enters into transaction with a bank for purchase of foreign currency in a later date, bank will believe that you will really buy. Bank believes that you will buy. Suddenly one day you come and tell to the bank, sorry, I can't honor the contract. Now who became Bakra? Bank. I thought that you will really buy. Slowly after 20 days you came and said that I can't buy. Means what is this? Are you understanding or not? Therefore bank will always allow cancellations, extensions and early honor for the customers at a charge. They will not give free of cost. Swap loss they will charge, cancellation rates they will charge, a lot of nonsense is involved. Okay. Fate of forwards. I made one video on YouTube with the name Fate of Forwards. YouTube playlist. Wait for one day. All AFM, SFM related videos, I will prepare a playlist and I will put it in the Telegram group and I will pin there. Okay. If at all Telegram is banned, I can't do. If it is not banned, every student, all are downloading now. If I don't download, my attempt will get uploaded. So therefore, they are now downloading all the content. No need, it will not get banned. I think so. Again, sound is not there in the last one day. Sir, we can't predict 1,000 rupee notes are cancelled in 1 hour. We are in such a country where 1,000 rupee notes are cancelled in 1 minute decision. So anything can happen. Probably, maybe, chances are very less. So let's continue, no problem. See here. 1114, like that I have given the details. Now you please explain me the transaction. Okay. First, before we start with this, I will explain you the modus operandi, the way in which it operates. First listen. What is this entire concept of cancellation, extension and early honor? I will ask you one small question, first answer to that. Once cancellation concepts is over, then we will go into the last set in Forex discussion, banker's position. What is it? In that nostro, vostro, loro account with their exchange position transactions will come. Horrible questions are there in study material. I will explain you how the answers came there. 2 questions I will answer, remaining questions you will be solving on your own. That much concept I can explain. Problem solving is not a problem, you can easily do. Shall we? 10 minutes we will complete this. 10 minutes we will complete also that. Show some emergency in understanding. I can't repeat. Okay? Start. Point number 1. I will ask you one basic question, first answer. You went to a bank. You opened an account. Bank statement, bank charges are, bank statement, bank charges are debited. By mistake it was debited. What bank will do? It will erase with a whitener. Bank charges are levied. By mistake, manager again levied bank charges on your statement. What bank manager will do? He will erase. Now whitener he will rub. What he will do? Or tally he will alter. That's crime. Are you understanding or not? Once books are prepared and completed, you should not re-alter them. You can only counter them. Means what? Contra entry they will write. Correct or not? Bank charges debit and a reversal they will write one entry. Yes or no everyone? Bank also will do the same thing with your forward rates. You said that you will buy dollar. I wrote in my book that ledger will be maintained by a bank. That ledger is called as? Exchange position ledger. Adhe example they will ask. What ledger? Exchange position ledger. Also called as a exchange position account. Exam question also asked. Exchange position account. Exchange position means what? Foreign exchange position. How many reserves of foreign exchange you are having? Are you listening or not everyone? Okay. I will do one thing here. bankers position, cancellation extension early honor, both are combination concepts. Do you know why most of the students are feeling difficult with cancellation extension and early honor? Sir, I am not understanding cancellation extension early honor. Some cancellation rate, swap loss, nonsense is going on. I am not understanding. Do you know why? Cancellation concept is linked to the bankers positions. If you understand bankers concept properly, cancellation extension will be understood or else gone. That's why you are not able to understand what answers are given in the study material. Shall we? Listen carefully. First, let us understand bankers position. Once understood, I will come back to extension early honor and cancellation and close the sessions. Clear everyone? Please show some urgency. 30 minutes maximum, I will leave all of you. Okay? 30 minutes or concept completion, whichever is later. So listen. First, bankers position. Yes, this is the scenario. See here. Hedging will be done by customers, huh? Hedging will be done by bank. Huh? Who will do hedging? Yeah? Bank will do hedging. Huh? And hedging will be done by, for whom hedging will be done? For customers hedging, bankers hedging. Bank also will do hedging. Shall I tell you why? Dollar is a foreign currency also for SBI in India. Sorry, listen carefully. Your mind is not processing the word I said now. Okay? Listen carefully. State Bank of India, okay, in T Nagar is a foreign bank. State Bank of India dealing in dollars. State Bank of India dealing in rupees. Tell me. For me, I repeat, for me, dollar is a home currency or foreign currency? For me, dollar is a home currency or foreign currency? For SBI, dollar is a home currency or foreign currency? Then what great you are doing? How dollar is a foreign currency to me, dollar is a foreign currency to you. How it is risky to me, risky also to you. Level of risk may change, but risk is there between both of us. Therefore, this concept came. What is it? Dealer's hedge. From there, examination questions are coined now. The recent latest fashion is questions to be asked from the dealer's hedge concept. Nonsense questions will come in exam. They will twist like anything. But today in the session I will make you to solve 3 questions. All are on banker's desk. You bring the question, you will answer. I will not select. You only select one question and bring it to me, we will do. If you understand this concept clearly. Shall we? See the screen. Dealer's hedge. I will ask question. Fatafat give the answer properly. Will complete. Tell me. How dollar is problematic to me, dollar is a problem also to the banker. Because how dollar is a foreign exchange to me, dollar is a foreign exchange also to the banker in India. Correct or not? Dollar rate increases. Dollar rate increases. Bank also should buy dollar or not? It has to buy at a higher rate from some other person. At the time banker is also making a loss. So listen carefully. If you understand this cancellation extension, you can understand easily. Shall we? Start again. Point number 1. Please answer. Listen. Foreign exchange, dollar is a foreign exchange for customer, Indian banker, both. Answer. But the only difference is I am the purchase customer, you are the dealer, that's all. You deal with that, I don't deal with that. But for both of us, dollar is a foreign currency. What risk I will have, the same risk you will also have. Okay? That's why dollar always is like a snake. Is like a snake. Buss. Do you know why? Listen carefully. Dollar is there in the hands of Koushik Mukhesh. The problem is rate can fall. Dollar I wanted to buy, again dangerous because prices can raise. Now tell me, from my point of view, it is risky or not risky? Very, very risky. Banker point of view, you tell me. What point of view? Banker. Tell me. Banker always makes a gain in foreign exchange or not? Loudly. Never. Is wrong. Banker always makes a gain in any given ask bid spread. These are all the differences in understanding. See here. $1 equal to rupees 70 dash rupees 75. Listening? Tell me. Banker, listen and answer. Banker bought from me. Banker buys at what rate? Answer. Banker buys at what rate? Lower rate. Lower rate will be bid rate. How much price? 3 months after. Okay? 3 months after, India's foreign policy is changed little bit and it was positively progressing. Dollar came to rupees 65 dash rupees 71. Okay? This is a scenario. Now you tell me, listening or not everyone? Now you tell me, now bank will sell each, or for example 69, you tell me this, okay? Now bank will sell each dollar at what rate? Answer. Now you tell me the answer. 3 months back, bank bought at what rate? The dollar which I bought 3 months back, I am selling at what rate? I am selling at higher rate on that day, no doubt, but it is lesser than the rate at which I purchased. Who is making loss? They. Banker makes a profit in a given quotation, but that does not mean bank will always make profits in foreign exchange. Like this, you will buy, as a customer, I will buy $1 lakh, so $5 lakh, $10 lakh. Banks are maintaining crores of dollars. Your loss is in lakhs and crores. My loss is in millions and billions. Whose loss? Yeah. Banker's loss. Therefore, who wanted to hedge now? Customer wanted to hedge, banker wanted to hedge. Banker wanted to hedge. How to hedge it is a question. See that. If you listen, I will explain. Shall we? See that. Day one. Banker received from a customer. See the diagram properly. Day one. What happened? Banker received from a customer. How many dollars? Answer, yeah. How many dollars, sir? Tell me. How many dollars I bought? Immediately all $1 lakh to another customer I sold. What is my risk now? 0. What is my risk now? 0. Happy. Am I clear? What is the RBI announced optimum balance? Any dollar excess of 20,000, any dollar below 20,000 is risky. Optimum balance to be maintained is how much? $20,000. As per whom? RBI. Now see what happened. Tell me. I have $20,000 today. Today one customer came to me and sold dollars I bought. How many dollars? How many dollars? 1 lakh. Tell me how many dollars I have totally now? Immediately there is another customer who came to me. He asked, I wanted to buy $1 lakh. Immediately I will throw on his face. Again my dollar became 0 na, 20,000. So again I reached the optimum balance level. Now I am happier and happier. Very happy because I am not subjected to any risk. Listening or not? I bet 1 day over. Day 2 you see now. Day 2. Start. Banker sold. $20,000 is a balance. Next. What I sold? How much I sold? 10,000. Now I came to lower than 20,000. Lower than 20,000. If you go below lower than 20,000, futurely you have to buy them. At the time prices may rise. Then banker is staying like this on the counter. One person came and sold the dollars to the bank. Bank again bought 10,000. Again it made us how much? 20,000. Optimum balance reached. Understood or not everyone? This happens once in every 1,000 years. How it will match? Yeah. Example, okay. You took 1 lakh, person took 10 lakh, or I took 10,000, another person took 10,000. All this is story. If this is happening, why hedging is required? Ante on one basis, every day matching is possible or impossible? Near to impossibility. Therefore, banks may either end up with a overbought position or with a oversold position. Benchmark ki either they can go up, either they can go down. What is the benchmark? Loudly, sir. They may sell and they become $0 situation. Buying is a problem for them now. Or they may buy 50,000, 60,000. Overbought position they will go. Selling becomes a problem for them then. So tell them. Tell me now. Point number 1. Banks will always end up with optimum positions. Always they will have overbought and oversold. What is the optimum balance in the question? Huh? Tell me. A customer came to me and sold $1 lakh. How many dollars reserve I have? Loudly, sir. 1 lakh? Another customer came and purchased $50,000. How much my balance will be? 70,000. I waited for 1 day, 2 day, 3 day, 4 day. No one is coming and buying the dollars. Actual optimum balance is? I have how much balance? I'm having overbought or oversold. What is the problem of overbought? If you buy more, if the prices fall, you will die. Are you understanding or not? Therefore, listen carefully. Whenever bank ends up with a overbought position, first it will try to sell that excess dollars to the customers. Customer did not come. It will try to sell it to its associate banks. They also don't need. It will try to sell to other banks in India. They also not needed. Then this bank will go to the international bank market. So understood the entire steps procedure clearly. Yeah, that's why you are getting interbank rates in that cancellation rates, all those problems. Interbank rates, interbank means international bank. Are you understanding or not? Interbank rates means international bank rates. Start again. How much is our optimum level? 20,000. I received how many dollars? Total became? Customer bought only? That means still I am having how many? 70,000 means how much excess of optimum balance? 50,000. First I will try to sell to the customer. If customer comes to me, no customer is coming to me. Listening? I will try with associate banks. No. Other banks. No. Then I will go to the international banking market. There I will try to, you should reply, or else I will start from the beginning again. There I will try to buy the dollar, sell the dollar. Bank sells at what rate? Higher rate or lower rate? Wrong answer. In that international bank, you become a customer, you will sell at a lower rate. That's why answers exactly become reverse for you in that questions. That's why you take bid, there ask will be there in study material. You take ask, there bid will be there in study material. Why? This is the reason. If you don't understand all these things and do, how come you will get the answers properly? You will write bid, ask will be there. You will write ask, exactly reverse will be there. That's why smart students, they will think and do an answer. Bid will come. Answer will be exactly opposite to what I get. That is the worst way of learning. Everyone understood the concept clearly, yeah? And now tell me, tell the oversold situation now. Optimum balance 1 lakh. Example, optimum balance 1 lakh. Customer came, okay? I sold 20,000. Another customer came, 20,000. Another customer 20,000. My balance became 5,000 now. My problem is, if any person comes to buy, I have to buy and I have to give you. At the time I am gone. Fasak, over. Are you understanding or not? That's why tell me, I am having a overbought or oversold? Everyone. Oversold means first I have to buy. Buy. First I will go to, I wait for customers. If any customer comes to the counter to sell and I have to buy, I will wait. No one came. I will ask associate bank, do you have dollars? Associate bank said that, do you have dollars? Okay, you are much more idiot than me. Wait, I will ask other bank, I am like your friend. Do you have dollars? He said, I am about to call you. Okay, you are also big idiot than me. Now I will knock the doors off. Whom? International bank. I will ask international bank, do you have dollars? They will tell, you should not ask that question to me. I will have n number of reserves with me. What you want, you tell. I wanted to buy dollar. Now bank is a customer. It will know the pain of customer now. How ask rate will disturb us. Understood the point or not? Now tell me, in the international bank market, our bank becomes the customer. Understood the concept clearly, yeah? Open study material. I will make you do some problems. Study material, not my book also. Open study material directly. First question, second question, something will be there. First, second, first chiller question, waste question. Second, ABN AMRO. How many of you did that question before? Now people stopped raising hands also. Unnecessarily he will ask how it came. Don't see the answer. Sir, what is the name of that bank? ABN AMRO, na? ABN AMRO. ABN AMRO. 40? 44, this one. See whether this is the same question or not. 15 million. Show the question bank once. I mean, not the question bank, sorry, this one. ABN AMRO 15 million. Very good. Next bank, XYZ Amsterdam. Both the questions are there, one after another. Okay, na? Sir, nothing, sir. I kept all steady metal questions in my book. After that, RTP, MTP I added. That's all. So first you should do steady material properly. After that, you can do other sources. See there. Now you will answer. I will listen. See how answers will come. Taka, 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 taka. As it is, answers will come. Okay. First, see the question. Read the question first. ABN AMRO Amsterdam wants to purchase how many millions? 15 million and 1 crore 50 lakhs. 1 crore 50 lakhs. Ain't 1 crore 50 lakhs what? Rocks, huh? 1 crore 50 lakhs what? Rupees. Who wanted to buy? ABN AMRO. Against what? US dollar for funding their Ostra account with Canara Bank in New Delhi. Ostra or Astra, leave off. Remaining you read. Assuming the interbank rates. Before this, what do you understand from interbank? You thought that inter is the name, huh? SBI laga inter. Interbank means international banking market. Assuming the interbank rates of US dollar is rupees 51.3625 and 51.3700, what would be the rate Canara Bank would quote to ABN AMRO? Further, if the deal is struck, means deal is finalized, what would be the equivalent US dollar amount? This is the question. Don't see the answer. Taka, 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 taka. Don't use calculator. First tell the logic properly. Shall we start? Answer. Point number 1. Who approached whom? See here. Who approached whom? ABN AMRO approached the Canara Bank. Both met in the international market. Now we are not seeing domestic market. Both are standing in which platform? In the international platform. Both are standing. Correct? Tell me, who are the two parties? ABN AMRO and Canara Bank in India. Listening? ABN AMRO came to Canara Bank. It asked, Canara Bank, you are from India, right? Yes, I want rupees. Who want rupee? ABN AMRO. Are how we want dollars? They also want rupees or not? They asked, Canara Bank, I want rupee reserves with me. Okay? Canara Bank said that, very good, I will give. What you will give in return? Something you should give in return. What I will give Tirupati Laddu? What I have to give in return? Some currency should be given. ABN AMRO Amsterdam. Amsterdam is Netherlands. It said that Canara Bank, I will give you Netherlands guilders. Canara Bank said that fold it and keep it with you. Who want Netherlands guilders? India, no one will buy. If you give in dollars, I will sell. That's the idea behind this question. Or else why Amsterdam dollars will be involved? Hey, listening or not? That doubt you should get first. Amsterdam currency dollars. How come it is possible? Like that doubt should come. First that doubt not coming means there is a problem in understanding. Tell me, Amsterdam currency is guilders. Netherlands guilders. Okay? Tell me, who came? ABN AMRO came to Canara Bank. It asked the Canara Bank, I wanted to purchase what? Rupees from you. Will you give? Canara Bank said that, I will give. But what you are going to give me in exchange? It said that Netherlands guilders. Then namaste, you can go. Then what you want? Dollars I want. Then see here. ABN AMRO look back. ABN AMRO will have Nostro accounts or not? In its Nostro dollar account, it saw balance is there or not. It saw. It said, okay, done. I will give in dollars. I have Nostro account. That's why Nostro, Vostro accounts names are used. In the Nostro account, it saw dollars are available. Okay, I will give you dollar. I will give you dollar. Will you give me rupee? It asked. Canara Bank said, yes, I will give. Now you should answer, I should listen. ABN AMRO is trading on rupees in domestic market, international market. Everyone? International market. Who is the seller? Who is the seller? Canara Bank. Who is the buyer? Start again. Who is the seller? Who is the buyer? Now Canara Bank is selling the dollars in, selling the rupees in Indian domestic market, international banking market. Market. Tell me now. I will sell at what rate? Higher rate. Higher rate will be what rate? Ask rate. Higher rate will be ask rate. So tell me the quotation. I wanted. 1 second. You think and answer. Canara Bank is selling what? By buying what? Quotation is given in which currency? You forgot again. Here what is the per unit currency? Hey, why you get doubt here? Clearly he has written denominator what is there? Dollar. These many rupees are coming for the dollar. Start again. Nice understanding. Tell me now. Which bank went to which bank? ABN AMRO went to Interbank. Interbank who was met? It asked for what? Canara Bank said, give me. I will give you equivalent amount of rupees. I will give you for the dollars. Listening or not? Now you tell me. Quotation given in which form? Dollar form. Think only from dollar point of view. Canara Bank is going to sell what? Sell what? And buy what? Now tell me. Canara Bank will buy dollars at a international market. We are in. Canara Bank will always buy. It will sell the rupee and it will buy the dollar. It is interbank. It is the interbank. Tell me. I will buy at what rate? I am the person in control now because you came to me and asked. Are you understanding or not, everyone? I will buy at what rate? I will buy at what rate? Lower rate will become what rate? I will explain in numbers. You can understand. Little bit confusion right there. See here once. See the screen once. Nothing great in this. ABN AMRO went and approached which bank? Canara Bank. For getting how many rupees? 50 lakh. To give what? Dollars. To give what? Dollars. See the screen once. What is the exchange rate that was given? Please tell me. $1 equal to rupees 51 point dash 37. Okay. Now, forget about interbank market, everything. Normally, you tell the answer first. Tell me. ABN AMRO is buying what? And selling what? Canara Bank is buying what? From that point of view, tell Canara Bank has to buy dollar. Buy dollar. Okay. Buy the dollar. Bank will buy dollar at a higher rate or lower rate? Lower rate will be which rate? Because here who is in need? ABN AMRO na Indian bank. Then why I will buy at a higher rate? Are you understanding or not? Tell me now. Start. Who is in need of money? Came to whom? Asked for what? ABN AMRO asked for rupee in exchange of what? Canara Bank said yes or no? Yes. It will sell rupee in exchange by buying the dollar. Per unit currency is what? Say what dollar point of view you will tell. Tell me now. Canara Bank will buy at lower rate. Lower rate will be? What is the bid rate? Bid of rupee by dollar equal to, tell the value, 51.3625. Tell me, $1 equal to rupees 51.3625. How many rupees I have? 1 crore 50 lakhs. Tell the value. 29204 See the answer in the study material. See the answer, yeah. Tell what is the answer. 292 050. No problem. That small difference will be there. Everyone understood the answer clearly, yeah. If you say yes, I have another question then. 45th question. Read the question. XYZ Bank, Amsterdam, wants to purchase 25 million against pounds for funding the Nostra account and have credited to lower account with the Bank of London in London. Calculate the amount of pounds credited. Ongoing interbank rates are as follows. First tell me the answer. Again, who came? Everyone tell me who came? XYZ came to whom? Some Indian bank. Bank name not given. Bank name given or not given? Not given. See the question first. They want which currency? They want. XYZ Limited wants which currency? Rupees. Exchange what they will give us? Pound they will give. Correct or not, everyone? Now tell me. One second. Listen. Pound who will buy? Who will buy the pound? Indian person will buy the pound. Correct or not? That means Indian person's Nostra account pounds will be added or deducted? Credited or debited? That's why pounds credited he is asking. Understood the point clearly? Yeah. In the Nostro account of Indian person's pound account, how many pounds will be credited if you give the rupees to them? This all transaction happened in domestic market or interbank market? Now tell me, please answer. Who is in demand? Indian bank again. Okay. Who is, who want this particular rupee? XYZ. Who is selling? Now tell me, please concentrate, answer to my question. 1 minute you will answer. Tell me, who approached Indian bank? XYZ. Asking for how many rupees? 2 crore 50 lakh rupees they want. 2 crore 50 lakh. In exchange, what they are ready to give? First tell me. We wanted to, Indian bank, we wanted to sell what? We wanted to sell what? In exchange of? So we are buying what? Interbank has to sell pound. Are you understanding or not? We wanted to buy pound. They have to sell pound. So we will buy at a lower rate or higher rate? Obviously, lower rate. Lower rate will be which rate? Bid rate. I repeat one more time. Here, interbank rate, who will have the domination now? Therefore, their words will be always on the higher side. Correct or not? So now tell me, who want money? Coming to whom? Indian bank is asking for pounds in exchange of that rupees that was given. Clear or not? Customer is the XYZ now. Who is the customer? XYZ is a customer. XYZ came to you. Listening, who came? XYZ came to you. He came. You said, I will sell provided you give me pounds. So I will buy pounds. He is customer. Customer is selling. Bank is buying. Start again. Where is the answer here? Start. Tell me, who came? Came to whom? Indian bank. They are meeting in the domestic market or international market? Tell me now. XYZ bank came to the Indian bank. Both are meeting in the international banking market. XYZ Limited want rupees 2 crore 50 lakh. In return, they will give you pounds. Now tell me, who is the customer? Who is the banker? Now tell the answer. Indian bank is buying pounds or selling pounds? Customer is, we are all XYZ, let us understand. We are selling, bank has to, bank buys at a lower rate will be, tell the quotation, bid of rupee by pound. But bid of rupee by pound is given in the question or not given in the question? Therefore, what we have to calculate, cross currency quotation has to be calculated. Tell me what are the two rates given here? $1 equal to rupees 61.3625 dash rupees 3700. Next, 1 pound equal to dollar 5260 dash 5270. Finally, you answer me. Low. Finally, answer me. Who is in need? Fastly answer, sir. Who is in need? Came to whom? In which market? Wanted to buy? Exchange or giving? What Indian bank is doing? Buying what? Pounds. Who is a customer for us? Customer is selling? Customer is selling pounds. We are buying pounds. We buy at a lower rate. Lower rate will be bid rate. Bid of rupee by pound. But rupee pound quoted or not quoted? We will create a quotation now. Bid of rupee by pound equal to, tell, bid of rupee by dollar into bid of dollar by pound. Basics you should not forget, yeah. Till the last problem it will continue with you. Bid of, already this is rupee by dollar format. Tell how much? 61.3625 into bid of, ఇది dollar by pound format, pound by dollar format, dollar by pound. And directly can I take or not? Yes. Tell me 1.5260. Value please. 1 pound equal to rupees 93.6392. How many rupees they want? 2 crore 50 lakhs. Please tell me how many pounds will come in credit. 2 lakh 66,980. See the study material answer. Okay. The small difference will come. Do you know why the difference will come for them? Decimals they will take in a different way. Do you know why? They have converted everything into indirect quotation there. Yes or no? Like that you need not do directly also, you can do that. Okay. So we got this answer, sir. You all comfortable with the answer now? Yes, one last question before we leave. Tell this answer also. If you have a doubt on cancellation extension, in that video you can look up. But I have one very good question for you. Try to answer this. Please see the screen. This question is also popular question. Okay. 43 question. See. Seventh, study material 7th question. Come to study material 7th question. First read the question. Okay. Have you read or not? So you sold Hong Kong dollar. Read. You sold Hong Kong dollar 1 crore value spot to your customer at 5.70. Covered yourself in the London market. They clearly said. Do you know what does it mean? See the screen. Same what I said now. Tell me. You sold Hong Kong dollar. How many Hong Kong dollars? You made a oversold. You made a oversold position. Okay. Oversold position value to your spot. Customer ki how much rupees ki you sold? 5.7. Covered yourself. Covering means hedging. Hedging is a cover of risk. That's why it's called as a banker's hedge. Covered yourself in the London market means Indian market or international market? On the same day when the exchange rates are so and so, calculate the cover rate. Okay? Student will do like this. You sold means he will think he is a customer first. You sold means we will receive dollar, Hong Kong dollar. Therefore we will sell. Bank has to buy. Bank buys at a lower rate. Lower rate is bid rate. Bid off, he will write and see the answer. Ask will be there. Okay. If question is coming like this, interbank or London market, he says, first I will do what I know. Bid will come. Exactly my answer will be ask. 2-3 questions he will try. Exactly reverse answers will be there. Are you understanding or not? Same they do also with income tax, GST also. Do you know what they will do? Let me explain. GST la interest calculation will be there. Which calculation? Interest. Daily calculation will be there. He will calculate, he will get 71 days. Steady material 70 will be there. He will do 2-3 times, 2-3 questions he will see. Everywhere his answer ki one day lesser will be there. Okay. First I will do what I know. Answer will be one day lesser than what I do. If you learn and do, that problem will not come. Na? Point is, General Clauses Act, it was clearly said, whenever time periods are taken, first day should be excluded. Okay? That's why those dates, one day you will get the difference. Like that, here also some logic might be there. Na? That logic I told you now. So first tell me, covering in London market means how a customer can go to the international bank, access is not there. London bank, international bank, access will be given only to whom? Another banker. Means we are talking about whom? Bank. Do you know what happened here? A customer came. From where? See there. A customer came from Hong Kong. Chung Chang? No. No, Bruce Lee. What happened I will explain. A customer came from India to the bank. Indian bank. Chennai la T Nagar ki one bank branch ki one person came. Isn't that fellow asked you, sir, I wanted to buy Hong Kong dollars. You asked how many? You said, I want 1 crore. That many how you want? He said that, sir, I am buying a very big heavy duty machinery. It's coming in a ship. Another 1 month it will come. Details, documents, Exim Bank permission, everything was shown. Bank said that, yes, very good, I will. Immediately a customer will ask the bank, sir, what is the rate? Answer, sir. What is the rate he will ask or not? Tell me. Customer came. That customer want what dollars? Answer. Hong Kong dollars he want. Who want? Customer want Hong Kong dollar. Correct? I went. I asked customer, what you want? Hong Kong dollar. How many? 1 crore. How many? 1 crore. Okay, na? I then saw that whether I have Hong Kong dollars in my account or not, I will see. Correct or not? I saw. Illa. Hong Kong dollars 30,000 or 40,000 are there. But he is asking how many? 1 crore. I will tell, sir, have a seat. 5 minutes you give. I will come back. Manager went into the room and immediately called interbank market. It said, it was asked, bank asked, that particular person in interbank, I want Hong Kong dollars urgent. 1 crore Hong Kong dollars. Spot. That's why spot. I want Hong Kong dollar. What is the rate? It said that you are from interbank. You said I am from India. I am very sorry, today Hong Kong dollar and rupee are not traded. So I calculate some cross rate. That's why they gave cross rates, 2 currencies. They understood or not? You calculated something. You got 5 point some amount will come or not. That is lesser than 5.7. That is lesser than 5.7. 5.65 you got. How much? 5.65. Now you thought, okay, 5.65 if I buy. Why I will sell at the same rate? You said to the customer 5.7. That's how question is framed. Understood the point or not clearly? Tell me, you sold or you bought? You means whom? Bank. Bank sold. Bank sold. Sold what? How you got? You buying in the interbank market and you are selling to them. Tell me, interbank market who is buying? Bank is buying. Bank becomes what? Customer. So tell me, bank has to buy at the interbank rates, ask rate. Interbank rates? Tell me, I wanted to buy. Why you are buying Hong Kong dollar? To sell to the customer at spot. Listening, where I went? Interbank market. To the interbank market, I will become the customer. They will become the bank. Now tell me, I am bank is the customer now. Okay, na? Now tell me, I wanted to buy dollars. Interbank has to sell dollar. Interbank sells at higher rate. Higher rate will be ask rate. Required quotation will be ask of rupee by Hong Kong dollar. Write down somewhere. Ask of rupee by Hong Kong dollar. But rupee by Hong Kong dollar is given or not given? Not given. That equal to ask of rupee by dollar into ask of dollar by Hong Kong dollar. See the question. Ask of rupee by dollar given or not given? Again doubt. Ask of rupee by dollar given or not given? Given. How much? 42.85. Next. Ask of dollar by Hong Kong dollar. Given? No. Given quotation is dollar by Hong Kong dollar by dollar. We want what? Dollar by Hong Kong dollar. 1 by bid of Hong Kong dollar by dollar. That equal to 42.85 into 1 by 7.5880. You don't multiply 1 by biscuit answer. 5.64. What is that 5.6471? What is that 5.6471? Cover rate. That's the first question. What rate? Cover rate. 5.6471. After knowing it as 5.6471, you promised your customer at 5.7. That's the meaning. Or else first you promise 5.7. Later if you came to know that 5.8, beggar bank will become. Are you understanding or not? That's how you should understand the transaction. Now tell me, what is the gain? 5.7 minus 5.6471. Point into 1 crore. 5,30,000 or 5,29,000. See the answer in the study material. Question number? 5 lakh. That's it. Answer is over. With this, I will close the session. Remaining, if anything you want, please, I will put the full playlist of all the concepts. You just go there, listen, complete, pass, become CA. Welcome to the club. So, thank you very much for attending the session. Hopefully, session has given some value addition over a period of 5 days' time. Some new things learned. Okay. Still, I will be in contact on YouTube. Okay. Rigorously, we will be keeping in touch. We will complete the entire concepts, all the difficult areas. Mostly, main concept that I will be covering is the risk management, because so many are asking. First, I will cover risk management. Then, capital busting, I will do some extra questions for you to understand. If any concept, if you want, put me a message. I will do it on YouTube. No problem for me. Black Scholes, yes. Black Scholes I will do with risk management. Anyway, I have to calculate. Yes. Already there. Including Feta forwards. That's what I told, na? Feta forwards I kept there already. 1 year back I kept. Tomorrow class not there. Room is not available. Classes are there tomorrow. Okay. So we will have the YouTube live for 2 chapters. One is risk management. I will come up live. 3 hours we will complete entire risk management. Spend your time. Pakka 8 marks will come in exam. Next, for IRRM and swaps. Swap valuation, currency swaps, I asked you to listen to the lecture. Have you listened? No. At least after this you listen, you will get some free time, probably. Okay. So listen properly. Be careful with AFM paper this attempt. I'm telling again, be extremely cautious about this paper. Okay. If you have any doubt regarding any concept, put me a message. When I come to the live to the YouTube, if you have any doubts, you can put the comments. I will definitely answer to your questions. If any topic you want also, let me know. I will do the video on that. Okay. Always keep staying in touch even after becoming CA. Welcome to the club. Bye. Thank you very much. All the best.